Hello and welcome to Martyn Lucas Investor. We've got a very exciting show lined up for you guys. We've got the Fed meeting occurring. We've got sort of a round table situation going on at the Fed. We're going to bring that live feed straight to you. We've got many big speakers as well. We just make sure that's on. Yep. We've got many big speakers all the way from Cathie to BlackRock to Chainlink. Lots of speakers coming through there. And we've got a massive partnership announced from Brad Garlinghouse as well. We've got the biggest XRP treasury about to start forming. We've got a new IPO coming. So lots and lots to go through, as well as a Fed speech as well occurring during this stream. So this stream might be running for a while. If you have just tuned in, please do hit the like button on your way in. Subscribe if you haven't done so already. But we'll start off with our main story, which is that partnership right after I welcome everyone into the show. So as everyone got their newsletters, they have just gone out. Today's title is, will Evernorth's 1 billion XRP treasury spark a squeeze? Plus what signals the Fed's payment summit will drop today. So we've got the Fed's payment summit. It's all about payments, and we all know how, what XRP's role is in all of this. It's one of the best payments crypto token out there. So it'll be interesting to see what the Fed's views are on payments. And the Fed wallet and all of that sort of stuff. We'll see if we get any mention of that. That's all coming up in the live show. I will be putting the timers on the screen shortly. We've also got a massive merger acquisition plus IPO coming to us on the stock market, but more importantly, it's all about XRP. So I'll come on to that story as well. That's one of our main stories. If we go to today's stories at a glance, this is all from our very own newsletter. If you haven't got the did we mention Evernorth? We're literally just started Jan S. Don't worry, you've just joined the stream. We haven't gone through it yet, but yes, it's massive. If you haven't got the newsletter yet, it's the first link in the description. It's also in the live chat for you right now. You get this into your inbox every single day. Unfortunately, yesterday I was very unwell, so I couldn't put my 3-4 hours of research in. So I didn't want to put out a subpar newsletter, so we didn't. But yeah, it's basically there every day. Remember, it's just a one-man team here, so if I'm unwell, I can't put out the newsletter. Anyway, you'll have it today. You'll have it for the rest of the week. So do consider subscribing to the newsletter for all the top stories every single day. I'll go through the top stories. I'm just checking we're running smoothly because we've got a long show today with lots and lots of information. So as long as we're running smoothly, we can, yep, we're all live. Everything's good. Okay, yeah, everyone's tuned in. Perfect. So some of the top stories today are Trump makes rare earth deal with Australia to fight China. We've got BC permanently bans so that's British Columbia, permanently bans new crypto mining, caps AI data centers as well. It bans new crypto mining because of energy usage. OpenAI's math breakthrough exposes as false claim. We've got Archer, United Arab Emirates passenger timeline faces certification delay. We've got Japanese stock market surging. We've got the Fed hosting a payments innovation conference today, and we're live streaming that live on our show, so stay with us. That's starting shortly as well. We do actually have Coca-Cola earnings as well. However, I think most people would rather we cover the Fed's payments. So if anyone does want us to go in and out of the Coca-Cola earnings as well, we can pull that up as well. That starts in about an hour. Evernorth's $1 billion XRP bet as well. That's the top story today, the Evernorth partnership. I don't think people understand how big this treasury is going to be and how significant it is for XRP. I mean, it brings a lot of validity to everything we've been saying for years and years and years. So let's get into all of that now. Let's get into it. So remember, this Fed's Payment Innovation Conference is live today. We're covering it. It features sessions on stablecoins, tokenization, AI, and finance. We've got Chainlink, BlackRock, Coinbase, ARK Invest, Cathie, all there. So we're going to understand this sort of a rare sneak peek into the Fed and how regulators and fintech leaders are thinking. So this really helps with our investments. Remember, most people just want the flashy headlines. They don't care about what's going on underneath. We care about the boring things. And one of the it's actually not that boring, but one of them would be this Fed meeting. There'll be parts where you might find boring, but it's those parts which are the most important, and we're going to be going to that. There's going to be speeches from Fed Waller, all of these round tables. There's going to be Q&A sessions, so we're going to be tuning into that. That starts in about 40 minutes. So I'll put the time on the screen shortly. Let me go over to our main story, which is, I just want to make sure everyone's here before we go into that main story today. With this Evernorth acquisition partnership, whatever you want to call it. We'll come on to that. I've got a whole deep dive on it. And something very fun coming to all the newsletter subscribers as well, all the premium subscribers. I'm going to be hopefully very soon, by the end of this year, I will be starting a sort of a portfolio myself. And I'm going to be sharing all the updates on the premium newsletter. So I'm going to be doing not a crypto portfolio, because that's too volatile. I don't want anyone following any trades ever. It's just going to be more of a personal sort of journey diary, starting from $5,000, $10,000 and trying to reach what Martyn's done. Martyn did it live on the show 4 years ago. He went from 4,000 to, I think, close to 500,000 now. And I think it's time I try to do the same thing. So I'll be sharing some updates on YouTube. Most of it's going to be in the premium newsletter as well. Remember, it's not financial advice. Please do not follow my trades. It's more of a journal, but I'll be telling you what I'm investing in, why I'm investing it, doing the deep dives on those specific companies, and doing sort of a stock portfolio. I might be adding companies like Evernorth, which is an XRP treasury. We'll come on to that in a second. I might be adding Ripple if it IPOs. I might be adding a Bitcoin ETF, but it's not really a crypto challenge or anything of that sort. It's more of a stock challenge to try to recreate what Martyn did, going from 4,000 to 500,000. I think that would be cool. At the point when Martyn did that, when he began, there wasn't obviously that many subscribers. It'll be cool if I can do something similar. So I'll be sharing all those updates on the premium newsletter. If you haven't got the newsletter yet, you can do it with that link. It's in the live chat. The monthly subscription is due to go up. The annual subscription stays the same. The monthly one, if you're already on monthly, it stays the same. When that launches, the monthly subscription will be going up in price. So if you want to secure the monthly cost, you can do that now. So I hope everyone enjoys that idea. I will be putting it on YouTube. It's not just all behind a paywall, but when you want to see, if you want to see the real analysis, why I'm buying it, what levels I'm buying it, what companies I'm looking at, and the deep research. It's never going to be financial advice. I'm never going to be telling you buy it. This is the exact level. Go buy now. That's not the point of it. The point of it is to educate you and reasons and what I look for when I invest in companies. It's more of sort of a personal journal and journey. Anyway, let's come on to the big story. I just want to let everyone know about that. Oh, agreed. Will be good to see the progress, says Jamie Rees. Sick Boy Cousin says that sounds like a good idea. Yeah, I'm glad. I think a lot of people have suggested it, so I'm also looking forward to it. When is the meeting? Okay, so what I'm going to start off by doing is, while we're welcoming everyone in, and before we jump into the Evernorth's $1 billion XRP bet, which is probably the most bullish story for XRP all year, I'm just going to get some of the timings ready on the screen. So if I just get some timings, because there's a lot going on today. I think Coca-Cola has already announced their earning. Have they? Because there's Coca-Cola earnings today, but I don't think we will have time to cover that as well. Coca-Cola's up 2% pre-market. Here we go. Congratulations to all Coca-Cola holders. This is something that Martyn transitioned into before the crash, and and he always told you it's going to go up, and I was completely also on that train. Why? Well, not from a fundamental perspective on why Martyn was buying it, but from the technical perspective. We even said, even if it's going to continue in a downtrend, even if it's sort of a worst case scenario, the likelihood is on Coca-Cola that you're going to get a bounce at around $66. You went down to $65.50, but we said around these levels you expect to bounce. If you break this downtrend, which you then did, expect to go to this downward sloping trend line at $70. Congratulations to everyone. It is now at $70. Thank you, Martyn, for bringing this trade idea to us. Thank you for your fundamental analysis of Coca-Cola and telling us why it was a good bet. It brought it to our attention. We looked at the chart and we said $70 is the level. Am I holding Coca-Cola? Well, for me, it was a very simple, easy trade. $66 to $70, 7%, 6.5% on Coca-Cola, one of the safest investments. Again, nothing safe, but it's a defensive stock. I mean, it's very well established. You can, even if it goes down 50%, you can be quite confident if you hold it long term, it's going to come back. So yeah, Coca-Cola, $70 pre-market on earnings is now up. Congratulations to all holders. This is the level as a trader I'll be selling. Again, can it go higher? Yes, of course, but I'm not too interested in holding Coca-Cola long term. Here is a level that we were expecting trading wise. Congratulations to all holders, and a big congratulations to Martyn, and thank you to Martyn for bringing that to us. What I'm going to do now is let me go over to your comments, get everything lined up for the Fed, and then we also have that big announcement we want to make about Evergreen, and then we want to go to Fed Waller's speech, and then we want to go to the Fed conference. So that all starts kicking off. So they're going to have registration at breakfast at 8 a.m. to 9 a.m. I'm assuming this is all Eastern time. So their opening remarks will be from Christopher. Let me bring this on the screen. It will be from... The opening remarks are from Governor Christopher J. Waller. So we will have a Fed speech at 9 a.m. So 9 a.m. Eastern time in UK time. Let me just have a look. I think it's 6 hours. So it's 2 p.m. UK time. So that's in an hour and 15 minutes. So what I'm going to do is put a countdown on the clock, just so we're actually I'll do it after we make this Evergreen video. Yeah, so just so everyone knows, that's the time when Christopher J. Waller is going to be making a speech on payments. Remember, payments is all about XRP, so it'll be interesting if he names Ripple, XRP, or any of this acquisition news. And then we go over to straight from that, we go over to Chainlink, lead bank, Fireblocks, head of treasury services at BNY as well. So who's moderating that? It will be Gitto Labs moderating that, and that will be on bridging traditional finance with digital asset ecosystems. Then we'll have a break, and we'll be coming back with co-founder and CEO of Paxos. We'll be going to Tim Spence, the CEO of Fifth Third Bank, Fernando Terres, CEO of DollarApp. Then we have the president of Circle. Remember, we covered the IPO. That's all about stablecoins. Then there will be a break for lunch. And then we'll go over to AI in payments with Cathie Wood, Coinbase, Stripe, Google Cloud. Then we'll be going over to the big ones, Franklin Templeton, BlackRock, JPM, and then back to Christopher Waller. So a lot lined up here, and we'll be covering it all on this. Well, hopefully we'll be covering it all. I mean, it's hours and hours long, but this stream might be running for hours today. So we'll see how we get on. Remember, I'm still not even 100%. So we'll see what we can do, but we'll try and bring it all to you. But of course, we're going to be seeing what Fed Waller says to begin with as well. And that's in about an hour's time. We've got Coca-Cola earnings, which we might be nipping in and out of. But the main announcement today, and I want to do a video on, is this Evernorth's 1 billion XRP bet. So if you have just tuned in, it's time to get started with the facts. Please do hit the like button. Please do subscribe. Let me get ready to make this into a video. Coca-Cola, congratulations to everyone. Let's get back to the XRP chart. However, get ready to make this video. This will be made as a video, and it will come out later as well as its own video. But you're watching it live, so you get to see it all happen live. Quickly go to your comments, and then we'll come to that breaking news. Who is here? MDL is here first again. Welcome into the stream. Ninja Cowboy, good morning. Dan says, good morning, Sensei. Human Being says, hello, everyone. Good morning, good afternoon. Good afternoon, good morning, everyone. H84L says, out of the S&P 500 into XRP, looks good for a run up, says HB4L. Yeah, XRP is looking very, very, what's it called? It's looking enticing, especially with all of this good news. I'm more and more confident in holding XRP long term. Again, most cryptos out there I wouldn't want to hold for a bear market, but XRP, I'm not willing to sell my XRP. Does that mean I'm married to a token? Maybe, but there's good fundamental reasons why I like XRP compared to everything else. It's undervalued. It's got lots of room for growth. And all of this good news coming out means if it goes lower, I'll just buy more rather than selling it now to try and buy some more. I'll just find more ways to buy it. I'm just going to look for this to see if I can. Yep, here it is. I'll just send that to. Yeah. Okay, so what other comments do we have? We've got Richard Baker saying, "Morning, Dan is here. I'm completely out of the market. I see everything a crash coming. Will we rebuy when the dust settles?" There's always a risk with that. When are you going to rebuy? But I also think there's a crash coming, but I don't know when. And I think the market, my personal opinion is about 50-50. I think the market could certainly go into euphoria before the crash does occur. Especially depending on how earnings season goes over the next couple of weeks. I do think a big crash is coming, whether that comes earlier or later, maybe in 2026 with a recession. I think that might be more likely, in my own opinion. We might have a small bear market, then rally, then go into recession. Will this be a live show or a rerun? Ricardo, let me explain this. So this is a live show. We're live. We're live every single day every single trading day at the same time. Unless I'm unwell and I make that announcement. It's live because it says live. We don't. Some other channels you might see, sort of the scam channels which have a QR code and stuff. They pretend they're live when they're not live. The only times we're live is when YouTube, and I'll see if I can show you here on my own screen. Look at this. Just so everyone knows the differences and no one gets confused. So if you look, oh yeah, you're on the screen. So if you look over here, if it's a live stream, it will say live. It will say live here. It won't say anything else. If it's a video coming out and it's a premiere, so it's the first time we're posting a video, it might have the same characteristics as being live, but instead of saying live, it will say premiere. Premiere. It won't say live, it will say premiere, and I won't be talking to you. It will just be a video coming out, but it allows you to have a live chat with each other. So that's the difference. If it says live, we're always live. I'm talking to you. I'm speaking straight to you. This is not pre-recorded. If it says premiere, it's pre-recorded, probably from one of our past live streams, and it's a video I've made throughout it. And I think it's important enough for it to come out as its own video, and that's why it might say premiere. And then it'll turn into a video. It won't turn into a past live stream. So if you ever see over here a green dot, make sure it's always a red dot, make sure it's always fully red. That means you're the livest it is. And if it says live, that's me talking to you exactly the same time around the world. If it says premiere, that means it's a video coming out and it's the first time it's being viewed by everyone. It's like a movie. It's the first time it's coming out. It's pre-recorded, but it's the first time everyone's seeing it. Just so you know. So it is a live show because it says live. And it has that countdown and everything. So a premiere's countdown is a bit different. Just to explain that, we're going to come on to the XRP news now and then on to the Fed meeting. Rhino Skin says, "Hi, everyone." Hi, everyone. Pascal says, we are live. Ricardo says, "Good morning. Good day, Sensei. God bless you and all who tuned to watch today. Happy trading, everyone. God's truth, welcome in. Thank you very much. Anointed Flowers is here. Jack says, "Should I buy XRP at $2 or wait for lower?" I don't give any advice. Justin Duke says, "Glad I stayed in Coke. I have shares and calls." Wow, congratulations, Justin Duke. You would have made a lot today. If I had a position, I think I do, I'll be selling at these levels because I'm not too interested in holding Coca-Cola long term. Coke business is good in the UK, says Jack Dobson. I don't know what you're referring to there. I assume Coca-Cola. Songs for Space says, "If SPY goes down, there is a double top." Well, I'll have a look at the SPY chart. A double top could not be good. Could be the end of the bull market. Andrew says, "Good morning. We're going BYND. Let's go." Songs for Space says, "Look at Tesla, perfect double top and head and shoulders." Wow. That might be worth looking at. Double top and head and shoulders. Everything going on with Tesla. Let's have a look. On what time frame? I only like to look at sort of medium term, long term time frames if I'm trying to predict a top. So we'll go into a 3-day. Again, no head and shoulders popping out to me on the long time frame. The double top potentially maybe a lower high from December of 2024. Head and shoulders maybe on the smaller time frame here. Yeah, I don't know what head and shoulders you're talking about. Yeah, I can't see head and shoulders, but potentially a lower high, and I don't really see a double top either. So we might be looking at different charts or different perspectives. Anyway, let me go back to your comments. Lockheed pumping. Thank you, Songs to Space, for that. Andrew Trimis says BYND. BYND. Why does everyone talk about BYND? Oh, Beyond Meat. Why does everyone talk about Beyond Meat today? Is it crashing? Oh my god, BYND up 50% today. Beyond Meat. Wow. It's like short squeezing. BYND was up 127% yesterday. I'm not even showing you the chart. Was I showing you the chart a second ago? Yeah, it was. BYND. Wow. Oh, I mean, it's gambling at this point. Where's the support? Where's the resistance? Probably resistance at $2.30, or around where we are right now, $2.20. Next resistance potentially at $3, then $4.80. But I mean, this stock has absolutely been hammered to death. I can't believe it. This was one of the biggest stocks back in 2021 when everyone was overhyping it. $243 this was once upon a time, and now it's $147, and that's in only a few years. That's crazy. Yeah, I mean, I'm not going to give levels on that. It's basically gambling if you're trying to day trade this. But congratulations to everyone who bought it. Now it's up 150%. That's great. Hey guys, so we mentioned Evernorth. We're going to come on to that next. That's our main story. We're coming on to that as soon as we get through the comments, and then we're going on to over to the Fed. Thank you, tuning in right now. Thank you, Janice. Good afternoon, Sensei. Thanks for the letter. No worries, human beings. So excited, says Jan S. Yes, very exciting news. Zach Zate says, good afternoon and good evening to everyone around the world. Hello, Zach Zate. When is the meeting? The meeting starts in about an hour, but I've got lots of news to give you before that. Sick Boy Custom says, morning all. Sick Boy Custom says, that sounds like a great idea. Thank you very much. There's a newsletter link. Jamie Reese says, agreed. Will be good to see the progress. Nick the Beluga is here. Hello. Human Being says 100. Jamie Reese says woohoo. Bruce is here from South Florida. Casey says good morning all. Yolanda says good afternoon, Sensei. Good morning, everyone. What other comments do we have? I just want to maybe go through the members' comments. Greetings. Good morning, says Angie G. Good morning, Angie. Hope you're doing well this morning. Sick Boy Custom says, all we seem to be getting lately is good news from Ripple XRP. It feels like the XRP token is being kept low just to shake out all the Morley guys to hold until you hit your targets. Yeah, I mean, Sick Boy Custom, you can see the frustration within the XRP community. Everyone's waiting for the next thing. It's a game of patience. And at one point, and it's when a lot of the people that potentially watch this channel, but also mainly the other channels that start saying $1,000 XRP every single day. I mean, there's that other guy, which really annoys me. His name is Crypto Sensei, and he just lies every single day. It's crazy. Anyway, just to get clicks. There's all of those people that are going to be the people that follow channels like that, which are constantly saying $1,000 XRP, $1,000 XRP, and they start getting bored because they've got massive expectations, but you never get to those expectations. Those people will get shaken out, they'll sell their XRP, and then the ones that are a bit more sensible, even the people saying $10, $50, $100, I would consider those people more sensible. I mean, $100 is pretty far-fetched, but it's possible and it can happen next cycle. Even those people, if they hold on and they know the fundamentals and they understand what XRP is, those people, and hopefully it's a lot of people on this channel, are going to be the winners because they've got the patience. They understand not every headline moves an asset. They understand that the CEO of XRP is not Brad Garlinghouse. They understand that XRP is an asset. They understand that just because a company does something doesn't automatically affect their price there and then. The ones with patience, the one that keep understanding the news and start seeing what's going on underlying, which is what we're going to cover in two events now. One is this video that I'm going to do on this acquisition and also the IPO and also what the Fed's doing with payments. Start understanding that they're the ones that are going to be winning because they will have the patience and the understanding. They will know what they're holding. Most people don't know what they're holding. Most people think they're buying shares in a company called Ripple when they buy XRP, and that can't be further from the truth. The people that actually know what they're holding will come out on top, in my opinion. Again, there is risk to it. Cryptocurrency is very risky, but they will come out on top because the other people will probably panic sell, get bored, and go on to the next hyped token, which might be Shiba Inu or Pepe or Fartcoin, and they'll start going after tokens like that, and then start tuning into someone else, which will tell them all the facts they want to hear, but all the facts that are wrong, such as Shiba Inu's going to turn. Someone messaged me the other day. I haven't got back to it, but someone said, Shiba Inu's, what do you think about the announcement that it's going to turn into a stable coin? And they had all their plans for what they're going to do with it. If it does, I need to get back to that message. I don't know who it was. It's not going to turn into a stable coin. It's 0.000111. They're not going to just suddenly issue it as a dollar. I mean, it's just, unfortunately, it's just misinformation that people believe and want to believe. We don't do that on this channel. Another reason for you guys to subscribe and hit the like button. Even though it'll get us many, many less views and clicks, it's not worth lying about. You guys are just creating FOMO, deep pack. What do you mean? Who's creating FOMO? Paul D says, morning sensei. There's nothing FOMO about it. I'm FOMOing. This is amazing news. Again, I'm joking. I'm not FOMOing. But when we come onto this news about $1 billion XRP bet, some reason to be in XRP, in my opinion. David Short's on Ripple board and strategic advisor. No, David Short's quit. He's out of Ripple. Oh, yeah. Oh, sorry. Ripple board. Yeah. He's on the Ripple board. Yeah, he quit. He's left his main job. He's on the board now. And now he's an advisor for Evernorth. Yeah. He had a big announcement, and now it's there. KC is keeping up with all the real facts. I love it. We might have KC on the show soon. He's now with Evernorth. We'll come on to that. I've got an announcement about David Schwartz as well. High dividend stock, MO, ultra great, like Coca-Cola Coke. Thank you, and GG. The XRP word of the day is bullish. You'll get to see in the meeting here, Abdul. Someone's just come in. The meeting will be live here. Defo XRP will be $100 by. I love it, Brian. I love it. $100 by year end, Brian. I'm like 100% confident it won't be, but you're 100% confident it will be. So we should make a bet, Brian. But I would love to see it $100. Did I reply to your message earlier? I think you sent me a message. Oh yeah, I sent you a message. Yeah, I did reply. I'm glad I got that sorted. DP says tokenomics of XRP is skewed in the favor of devs. Why on earth would everyone want to hold such an asset too centralized? Well, that's just, again, unfortunately, DP, we need to do some more research because XRP is not skewed in the favor of devs. Why would people want to hold an asset such as XRP? Because companies around the world are flocking to buy it, because companies around the world are flocking to use it, because companies around the world are trying to find a way to add yield to it and make it even better. There's developers all around the world working on XRP and making it better. It's decentralized because their nodes are everywhere. No single person is in control. 80% of the people have to vote on it. Even Ripple, when they've had certain things they wanted to pass through, they haven't gone through because they need 80% of the vote. So there's no centralization with XRP. Again, it's a matter of doing some more research, and thanks for being a member of the channel, and hopefully we can answer your questions so you can understand a bit more. Human Being Liz says, good morning to Angie, thanks for all the info. Shane O says, when you start the stream, please can you mention the date so we are listening to replay apps? Oh, interesting, Shane O. Yeah, good morning and welcome to Martyn Lucas Investor on the 21st of October. Yeah, I mean, it does give all the information underneath the videos, but yeah, I will try and remember to do that. John says BYND is killing it for me on the short squeeze today. Yeah, congratulations on BYND. Let me see if I can add that there. Greetings from Netherlands, XRP boom. Ricardo says, yay, Sensei is back. Yes, I'm back. Thank you, Joyce. Thank you, Ricardo. Andrew G says, hello, shortly from Bruce and Angie. It's nice to see an engaging subscriber. Why not become a member like Bronze? It's really not expensive. Yeah. Thank you, Angie. Exactly. Why not at least be Bronze? Ricardo says, okay, yes, I was watching premieres all morning. Yes, Ricardo. Yes, you were. Yes. Because I wasn't live yesterday, I put out the videos that I wanted to put out as premieres. So again, the slot was you guys could all chat to each other because it was a premiere. If it just came out as a video, you wouldn't be able to talk and have that community base. And if I'm ever not be able to do a show, expect a premiere and a live chat as well. And in the live chat pinned, I said this is a live replay. Not a live replay. This is a premiere video of a Replay, I'm unwell. I can't. So I was trying to give you information. It sounds like you knew what you were watching there. Songs for Space says, form the shoulders on the left of form. We're not trying to deceive anyone in anything we do. I'm trying to make it as clear as possible. But I'll try and make it clearer. There was a premiere that came out later yesterday, which actually said replay on the top left as well, just to make it very clear. Okay, yes, formed a head and shoulders on the left of top. If it tops, we'll make another shoulder on the right. Oh, right, okay, yeah, it's forming one. Yeah, I can understand that. Thank you, Songs for Space. BYND ball pattern started. Where is oh, just suddenly the chat skipped. We're going to come on to all the news, so stay with me. The Fed meeting's coming up. The news is coming up. I'm just going through all our comments. This is a channel where we engage in all our comments. DP says, I've just seen other assets with that kind of tokenomics, and they always seem to control the markets. Just check TIA. Right, DP, I don't quite agree with that. Let me go over to actually. Let me just start a poll. XRP. Are you ready? I'm just going to make a poll because I forgot to do a poll. XRP holders, are you ready? XRP holders, will you watch the Fed meeting payments? Doing a poll for you guys. XRP holders, will you watch the Fed payments meeting with me? Yeah. Yes. No. Just want to see who's going to stay with me for the Fed meeting. It starts in under an hour now. XRP holders, will you watch the Fed payments meeting with me here? There's the poll. You can answer it now. Obviously, I'm going to be watching it, so I'm going to put my vote there. And I'm going to go through some of these questions, and then we're going to come on to the news, so stay with me. I've heard something about a gold-backed stablecoin to be announced October 21st. Hearing bread, I wouldn't worry about it. I mean, just buy gold or buy the gold ETF. It's not really too important, or it's not going to change anything in a massive way. 1 year chart on Tesla. Thank you. Hit the like button, everyone. Thank you, Jim Ricketts. If you have just tuned in, do hit the like button. We're coming on to the $1 billion announcement, $1 billion bet on XRP from Evernorth, partnerships with Ripple, partnerships with Kraken, GSR, partnerships with banks. It's going to be a listing. It's going to be an IPO. It's going to have a cool ticker symbol. Then we're going to go into the Federal Reserve's meeting. So stay with us for all of that. Just going to go through all the comments, and then we'll start the main news. David Hensley says you can check what day and time on the stream starts by touching the lower lower button right above the chat and directly below the screen. Yes, you can always have a look at what date, time, when it started, if it's a video, if it's a premiere, if it's a live show. But we'll always try and do the best to try and explain it to you as well. William Meyer says, hello, everyone. Knocking Star says, Tesla earnings tomorrow. If anyone does want us to cover the Tesla earnings, $10 super chat. That's all we ask because other people might want to request something. We want to just book in that slot. If you want to do a $10 super chat, we can book in Tesla's earnings for tomorrow. Do we have any other earnings? I think we've got a lot of earnings coming up. If anyone else wants to book in their slot, for example, no one booked in Coca-Cola this morning. That would have been a $10 super chat after close. Capital One, Netflix. If anyone wants us to cover Netflix today, anyone wants us to cover Netflix, we will cover it. Either me or Vaz will cover Netflix. You can do a $10 super chat. I'm sure Netflix is always an amazing trading event because it's normally very, very volatile on the earnings. I mean, 20, 30% drops. Netflix will be cool if anyone wants to do a $10 super chat. Tomorrow we have Tesla. If you want to do a $10 super chat, we can do Tesla. Friday we've got Thursday we've got Ford. You can see all of these. This is Thursday pre-market, after close, and then Friday before market. You can already start booking for next week as well. Next week we'll cover the earnings for any of this. These are on Monday. You can have a look at those logos if you invested in any of them. If you are invested in any of these stocks, you should really be listening to the earnings. Before open, we've got PayPal on Tuesday, SoFi. What else do we have? Visa. Yeah, you can book any of these. Then we've got eBay, Meta, Microsoft, Google, after close, CAT, BA, ADP, Etsy. Thursday, we've got MasterCard, Shell, a pre-market, Coinbase, aftermarket Thursday, Amazon, aftermarket Thursday, Apple, MicroStrategy, Reddit. So yeah, it's first come, first serve. If someone books it, we won't be able to really do two at the same time. Unless me and Vaz is available after hours most days, so we can probably do two in the after hours before open. There we go. So yeah, that gives you an idea of what's this week, next week. All you have to do is do a super chat, give us the ticket symbol, and we'll cover it live for you. I still apologize. I am still quite unwell. I've taken lots of tablets so I can do the stream and hopefully go on for a while, but do excuse me for a second. Okay, so keep going through your comments and then we're going to come on to all the news. So stay with us. So Tesla earnings tomorrow. Yes, best investors are ones that do nothing for long periods of time. You're the truth sensei. Thank you. Songs for Space says, make or break for Tesla. I'm sure Tesla will pump on the earnings. It's been doing that. It's pumped. It's dumped on earnings before. It's not really one way or the other. Jack clearly saying XRP 750. Don't listen to whoever this guy is. Jack Clever. Don't listen to him. It's all fake. I've heard people say this guy's name. Fake. If XRP goes to $750 by the end of this year, I will never stream on YouTube again. Someone can clip that. Well, I might not even need to if XRP gets 750. Even with 1,000 XRP, I mean, yeah, it's not happening. Abdul says, when is the meeting and where can I see it? So you can see the meeting live on this show. It's going to be on this show, and it's in about 40 minutes. What is the meeting about today? Next week is rate cuts, right? Yes, next week is the FOMC meeting. Tomorrow we've got CPI information from the UK. On Friday we'll have CPI information from the US. Then they sort of found funding for it. They needed the funding for it, even with the shutdown, to get that CPI information. That's going to be a very, very volatile day, and then we'll go into the FOMC rate decisions next week. So make sure you are subscribed for all of that. It's going to be an interesting week. By the Mill says XRP will hold $3 at some point. Jack's second name is Clever. Yeah, I mean. Chris Soda says, if things are changing as far as legislation adoption, why do we think that the traditional crypto bull market will continue the same? It might not continue the same, but there has always been bull markets and bear markets, whether it's a 4-year cycle or a bull market or bear market. There's always bull markets and bear markets. Your question is wrong. Your question should be, why do we think that the traditional 4-year cycle will continue? That's a very good argument. Is the 4-year cycle going to begin? I don't have an answer for you. I'm going to continue it until it breaks, but it can break. I am at some point, I know it's going to break. Is it this year or is it next time? I don't know. The question is the 4-year cycle going to change? Not is there going to be bear markets and bull markets? There will always be bear markets and bull markets. Abdul Nick the Beluga says, I'm happy at $10. Yeah, I'll be happy at $10. Jay Harrington says, bought me some XRP while watching the show. There we go, Jay Harrington. Welcome to the show. All the way from Australia, I believe. Susan says, good morning, folks. Brian says, Sensei, you remember the movie Trading Places? No, I don't. Knocking Star says, Sensei, do you come live every weekday at 12:30 or random days? In the UK, it's every single weekday at 12:30. Yes, it's not random days. It's every single day. Brian says, sometimes we do random streams, if you want to call it random, throughout the day as well. But my main show is every single day, 12:30 UK time. We can do that. We can do that bet. What was the bet? We can do that bet. What was the bet? What did I bet? $500. What did I bet? Should we bet an ounce of silver? Brian, what's the bet? I forgot. I need to rewatch it. $100 by the end of the year. Was that your suggestion? I don't know. Brian, what did I say? I forgot. Eli ET, can't bring myself to buy XRP at this price when I bought it at 45 cents. Yeah, I mean, I'm slightly similar, but I mean, if it goes down to $1.50, I had to buy it. That's what happened on Friday. $1.70, I bought more. And then sold all at 60 cents. Okay, yeah, now I understand. DP says, Sensei, top 10 wallets on XRP hold over 65% of the supply out of a whopping 408. Oh, yeah. That's fine. DP, check any other coin in the world. Check any other stock in the world. That's actually really good. 65% of the total supply is really not bad. That's actually like, you need to compare it to any other token. Bitcoin will be way more. Ethereum will be more. Shiba Inu will be way more. Fartcoin will be way more. Polkadot will be way. Any other coin will be way more. 60%, and then you're looking at total supply. Don't forget that Ripple themselves hold about 45% of the supply, and that's one of the top wallets. So you're talking about only about, and we all know what Ripple's going to do. Ripple's not going to go out, and despite what everyone thinks and speculates, just think about it. They're a company. They want to hold their XRP. They're buying XRP. They're not going to completely ruin XRP. They will go bankrupt. They're not going to sell all their XRP. And if they're going to sell, they're doing it how they're doing it now, which is tiny amounts every single month. So Ripple holds 45% of the supply. So ignore that, because that's just, that's someone who's never going to sell in a big way or sell all their positions. So 45%. So now you're saying there's 20% held by whales. Well, how much of that is lost? Maybe 10%. So there's actually 10% of liquid XRP that someone can sell. That is amazing. So DP, you've done the research, which is good, but you need to understand what your research actually shows, because a number like 65% of the total supply is held by the top 10 wallets might be scary on initial thought, but then you have to think, well, 45% is very safe because it's with Ripple and they've got a very clear structure of the way that they're selling their XRP, and they might be moving away from actually selling any of their XRP. But even if they're selling, it's tiny, tiny amounts. So perfect. 25% gone. 10% might be lost, 5% might be lost. Brilliant. Okay, so we're left with a whales that could be holding 10% of XRP. That is, in my books, very, very small amounts. So yeah, you've done the research, but just understand the research you've done. Nick the Beluga says, okay, I put $10 on BYND. I love it. Good. Leave no 8 behind. Good morning. Question: do you think that we'll ever see price realization without manipulation? MSK is here. Look at this. MSK, I haven't seen you in a while. Have you seen the big XRP announcement today? It's massive. We'll go through it in a second. MSK says, hi, Sensei. It's my birthday tomorrow. No way. We need to celebrate that somehow. Not doing a happy birthday song. I've read your comment. Can you sing happy birthday for me tomorrow and play the tune in any instrument of your choice? Unfortunately, MSK, that's not something I can provide, but we can wish you a happy birthday. Please do come into the show tomorrow. That'd be great. Jay Harrington says, I'll take off, but come back when it starts. Yes, I'll put time on the screen shortly. Songs for Space says, I'm pretty sure Fed is happening, will be slammed at work. That's how it goes. I'm sure since Fed is happening, will be slammed at work. Oh, right. Okay, you won't be able to watch it because you'll get a lot of work. That's annoying, isn't it? Oh, let me just get through these comments and then we'll go through all the Fed meetings coming up in half an hour's time. And I've got all the, I want to make a video on this massive XRP $1 billion purchase that's about to happen. Sometimes the chat jumps. So do excuse me for a second while I find where we were. Smash that like Sensei's doing a great job. Thank you, Angie G. Knocking Star says last Netflix earnings was rubbish. Yeah, did it crash a lot? Yeah, we can cover it. Any earnings anyone wants, $10, we'll do it. Songs for Space. Tesla made a 27 cents a share EPS like a penny stock, but then it pumped to an all-time high. Got to love it. But thank you for that. When was that? Back in 20 years ago or recently? Human Being says there's there. Oh, sorry. John, sorry, not 20 years ago, maybe 5-10 years ago. John White says if XRP isn't above $3.50 by January, all these crypto hype videos will be likely to get 5 views. Yeah, I'll be glad because people will start to understand that all the other channels were fake, and the ones that might have seemed a bit more boring but were giving you the facts, they're the ones that hopefully will grow, which will be, so we'll put this channel in that category. Knocking Star says, great, I'll put my alarm for 12:30 weekdays. Yes, Knocking Star, if you're here in the UK, I imagine you're here in the UK, 12:30 weekdays, or yeah, let's do it. Brilliant. I love it. You can be by us. I'll be live every day at 12:30. You can also just put a notification bell on YouTube. Turn your notifications on any other channel if you ever see a notification. Yeah, this goes to everyone watching. Notification bells are very powerful. So make sure you are notified. So when you press subscribe, so let me just show you here. When you press subscribe, I can't show you, but Why can't I show you? Yeah, when you press subscribe, there's a little bell next to it. You can see it on this widget on the bottom left. Press that bell and press all. So all, whenever we go live, you only get a maximum of 3 a day. So if we go live 10 times, you're not going to get 10 notifications. Every time we go live, you'll get notified, and then you can just click that notification and you can come live. The reason some people turn it off is because other channels that they're no longer interested with have notifications. So if you ever see a notification from another channel, just click on it, go onto their channel, unsubscribe, or turn your notifications off from their channel. If you're not getting notifications at all, it's because you might have turned notifications off on your phone settings. So make sure you go into your settings, notifications, YouTube, and turn your notifications on. You don't need notifications for any other channel. You need it for this channel over here. Storm Fund Chasing says, I bet XRP will do at least 275 at year end. Who wants the bet? I love it. Eli said, say good day from North Korea. There we go again. I think I'm going to have to stop going through these comments in a second because we want to make these videos. I'll just go through members' comments now. If you're a member, I'll answer your question. The bet was on a move. The bet on the movie trading places was for $1. So I bet you $1 that XRP will closer to be $100 than $10. Oh, okay. Yeah, Brian, let's do a $1 bet. Let's do it. I love it. Let's do it. When the Fed, when's the Fed conference? The Fed conference is in about half an hour. BYND bull market. Just going to go to members' questions. Imagine they say ETF approvals can happen during the shutdown. That's what a lot of ex people are saying, and what a lot of YouTube channels are saying. It won't happen. There won't be ETF approvals during the shutdown. That'll be after the shutdown ends. And these deadlines that everyone talks about, remember, we spoke about the deadlines a year ago, 3 months ago, 4 months ago, before anyone else. And we created the first chart with all the deadlines. But then we were also the first to tell you, ignore the deadlines now. We've moved system. We're going to an S1 system. The SEC don't care about these deadlines anymore. It's a new system that should be quicker. And then we went to a shutdown. Ignore all of these talks that everyone's talking about, deadlines. It doesn't mean anything anymore. Songs for Space says, try 2 quarters ago, but EPS went under 0. I did not realize that their earnings per share, they weren't profitable. Yeah. I must have. I haven't really been following Tesla. I mean, I followed Tesla in 2018, 2019, 2020, 2021, but I sold it in 21, so I haven't really been too interested in it. Cathie, in terms of the stock performance and the numbers, I'm still interested in the company and what they do. Casey says, Sensei and OSK, it's my birthday next summer. Could you learn to play? No, I'm not doing it, Casey. I'm not playing any instrument. Okay, here we go. I'll do the singing. I'll play the instrument. I don't have any. OSK, happy birthday, but I'm not doing any performances on the show. You have to wait for Martyn to come back. Okay, brilliant. Let's get into all the news. Remember, all of these earnings are coming up this week. You can book your slot. Let me go over to here. We've got 2 bits of news. One was obviously this corporate treasury, which we've already covered. Ripple enters the 120 trillion corporate treasury market with a $1 billion G treasury bet. That was we covered the speech last week. He then said there's going to be an announcement. This was the announcement. We covered it. We didn't realize there's going to be another announcement. And what's that other announcement? Well, it's Evernorth with their $1 billion XRP bet. So what I'm going to do is I'm going to record a video. It's in a live show. It will come out later as its own video. And I'll give you all of this information. And then we'll go to the Federal Reserve, who's going to start talking about opening remarks at 9 a.m. 9 a.m. I'm assuming that Eastern time. So let me just get that open as well. Yeah, it's Eastern time. So we've got that ready as well. I've got the stream set up for you guys. Let me go back over here. 9 p.m. Eastern time, so that's in half an hour. I'm just wondering, which one do I do first? We're only half an hour away now. Trying to remember the best way to do this. Should I do the video, or should we wait for the announcement and then do the video? Here is the stream that we're going to be watching. Payments Innovation Conference, that's starting in half an hour's time. And this is the announcement we want to make, but this video might take a while to make. There was a lot to go through information-wise. I'll give you a quick synopsis and then we'll make the full video later in the show. So let's see the comment section. What I'm going to do, the Fed speech is starting in half an hour, so I'm going to put timer on the screen. Let's put a timer on the screen. Okay, so I'm just getting this prepared and then we'll go into some analysis. Fed event. There we go. Everyone now knows the time. Happy birthday. What time is the Fed talk? It's in 28 minutes time. My birthday was on Sunday, says Justin Duke. Happy birthday, Justin Duke. I hope you had a good one. Casey says happy belated birthday. Sensei says buenos dias, hermano. Hello, MJ. Happy birthday in advance, MSK. Sensei, what are your thoughts on yesterday's Amazon service being down? I mean, I personally wouldn't look too deeply into it. Again, it's just the risks of the modern world we are in. There's going to be more of this sort of stuff that happens. It's going to affect, I think there's going to be in the next 10 years, in the next 5 years, in the next few years, we're going to have major outages across the world. That's going to cause a lot of effects, whether that is hacking systems with traffic lights and companies. You're seeing so many companies now getting hacked and held ransom. Amazon services was down. I don't think it was a hack, but they were down, and that affected not just Amazon, but Robinhood, Coinbase. There's just going to be more and more of them. That's why you should, when it comes to investing, always just be prepared for a situation where you won't be able to access your investments for a while, because things like this in the future can go on for 20 days, 30 days, a month, 2 months. If you're leveraged, that's a risk. That's another risk of leverage. It's not just, are you going to be able to fund your account and de-risk, or if you're going to get margin called, are you going to have money to put in the account? You might not because you don't have the money, but because you might not even have access to it. So again, it's something that I'm not going to look too deeply into, because I don't think it's anything that was done on purpose or sabotage or any sort of conspiracy theory around it. But I also think it's a real problem that's probably going to get worse, and it just shows you the risks of the new online technology world that we are in. Angie G says, happy belated birthday. Jerry says, has there been a silver down? Yeah, silver's down to 5% today. But yeah, I mean, it's just broken all-time highs. It's back to all-time highs. So it's as expected, I'd say. What's it down? Yeah, down 5% today. Back to about $50 an ounce, which is incredible. Is gold and silver started to crash? Yeah, gold's down 3%. Silver, I mean, we were expecting this. They hit our main targets. Silver's now coming in for a retest of $50. I think the target for silver is $75 in the next few months. For gold, again, gold is overextended. It might go into a sideways, like if we're looking at the charts now. Is this going to be a start of a crash? Consolidation will continue up? Well, be prepared for all scenarios, but I think it's more like this, where you have a big run up and then a consolidation. If it's going to me, it's either going to consolidate or continue going up. It might be volatile on the first few days of consolidation. It might drop another 5%, then wick up, just like maybe over here where it dropped from peak to off about 11%, but then it consolidated. So it can be volatile when it hits these main targets, just like last time. So it can go all the way back down to, if it's 11%, 3,800. It can even go down to 3,750. It can be volatile, but I think it'll either consolidate and move up, or it could just be a simple, quick retest of 4,200 and then move back up. Same with silver. Big run up. Now, is it testing resistance and consolidating, or is it just a quick test and move up? Either way, I'm still holding. And I don't think there's anything like a major crash is going to come. Human Being says, oh wow, Jerry, all you need is to move the market. It's a mouse and a keyboard. I love it. Just G says, thanks, NG. Seems like Brian. Bitcoin diving, is it? Bitcoin's not diving, is it? If it was diving. No, Bitcoin is not diving. Thanks, Angie. Again, you should play Fed Bingo. Isn't XRP holding 45% to burn, not sell? No, that's misinformation. They're not burning their XRP. Oh, David Hensley, thank you for all the links. My gold short is coming through again. Congratulations. Last time, did you short gold and then it pumped? Or was that someone else? This channel was shouting to sell everything just a few days ago. Now suddenly everyone's bullish again. What's changed? What did I miss? Who was I shouting to sell everything? I don't, LJ. You've obviously not kept up with the show. I've never shouted to sell everything. We never give it any advice. Up or down? RSI on gold is over 90, and the RSI is still 95. On the daily time frame, are you sure? I don't think it's at 95 one day. Yeah, again, your information's wrong. The Chris Shelton, the RSI on gold is at 67. It went the highest it went up to was 87 a few days ago. It's at 67. It's actually out of the overbought territory. It's no longer. I'll show you the chart. This is gold. It's at 67. It's not anywhere near 90 or 95, and it's actually not even in the overbought territory anymore. Just to let you know. Markets move fast. I've never said sell or buy. My predictions remain the same. In fact, my prediction might have changed. I was 60% for a soft landing and the bull market to continue. After a few of these lower highs, I'm now 50-50. The market's can continue going euphoric, and then a crash can come, or we get crash first. Either way, everything's overvalued. In the bubble, you normally get a final euphoric period. That's why I'm still bullish on the crypto market, and that's why I'm still holding my position rather than selling everything. But I'm not buying anything and everything. I'm holding mostly XRP because I like the utility. I like what additional utility is coming to the table, and for that reason, I'm actually will just buy more if it goes lower. Okay. Anyway, go back and watch the videos. I've never said that. Okay, let's go into the news for today, and then we'll do a video on it later as well. I wonder if I can just make this smaller and do the video. I'm going to make this smaller and then see if I can edit it out when I put the video out. Here we go. So I'm actually going to make a video on this XRP news as well. That's the Fed event. Remember, we're covering a lot today. We might be live for hours and hours today. We'll see. Let's go over to the main story today, which is this very bullish story on here. XRP USD. Yeah, I think someone said, what do you think about the Fed meeting? Will it be positive? I think it'll be positive, but I don't think it's going to move the market. It's just very important information you need to know about if you're investing and understanding. Let me just sort that out. There we go. Okay, so let me do a video. This will come out later. I'll go over here. It's ready over here. Give me one moment, and then I'll give you the XRP news, and then we'll go over to the Fed event. So all I need to do is do this. Preferences. Breaking news on Martyn Lucas Investor. We are looking at Evernorth's $1 billion XRP bet. This is ultra bullish. This is why I'm invested in XRP, and this is why I'll be buying more if it goes lower. Look at this news. This is an absolute game changer. I think this is the biggest news that we've got for XRP all year, and people are sleeping on it and people don't fully understand it. So in this video, you have the full deep analysis about what it all means. There's too many, and I hate it. Fake YouTube channels out there telling you XRP is going to $1,000 tomorrow. That's not the case. This is not what this channel is about. This is about giving you the real, honest information on what the news is. And today's news, you don't even need to hype up because it's so big. So Evernorth's $1 billion XRP bet, a new kind of treasury company. A landmark deal is shaping around Evernorth's Holdings Incorporated, a newly formed US digital asset company backed by Ripple Labs, SBI Holdings, and major crypto investors including Patanera Capital, Kraken, and GSR. The firm plans to go public for a merger with Armada Acquisition Corp, targeting over $1 billion in proceeds and a NASDAQ listing under the ticker symbol XRPN. So get ready for that ticker symbol. Again, it's not confirmed that that's the ticker symbol yet because they're not IPOing yet. However, that's the one they're going for. And normally, if that's the one they apply for, that's the one they get. XRPN will be the ticker symbol of this new company. That's sort of a XRP treasury company. Just like MicroStrategy buys Bitcoin and holds it, this company will be doing the same. But there's more to it than just that. And they're looking to buy $1 billion worth of XRP. So, unlike traditional SPAC listings, Evernorth's purpose is singular and transparent. It's to build the world's largest publicly regulated XRP treasury. The company will use most of the capital raised for the open market purchase of XRP, and that's key, open market purchase. I'll explain why that's key in a second. Not token transfers, signaling genuine demand and price exposure. A clause in the merger filings reportedly requires Evernorth to buy XRP equal to its advance funding within 10 days of closing, language that underscores a commitment to market-based accumulation. So a lot to unpack there. They sort of have to use that money to buy XRP. They're sort of the filings suggest they have to do it within 10 days. Again, this is what it all suggests. And it suggests that they'd have to do it on the open market, so no behind the door deals with Ripple, for example. So it's all on the open market, and that means a lot. So remember to hit the like button if you haven't done so already. It takes 1 second, and it will help the channel a lot. So thank you for doing that. If you haven't done so already, subscribe. If you're tired of all the nonsense and you want the real news, we'll give you the real news. So please do subscribe. Remember, nothing I say is ever financial advice. It's my thoughts and opinions only. So please not buy or sell based off anything I say. So once listed, Evernorth's model will blend institutional reserve management with active on-ledger participation. Rather than simply holding XRP as a speculative asset, it plans to grow XRP, its XRP per share value by engaging in institutional lending, liquidity, provisioning, and DeFi yield opportunities, while operating validators on XRP ledger to strengthen network decentralization. So again, adds to the notion that some people say XRP is not decentralized. It's very decentralized, and they're going to help it make it even more decentralized. So the transaction is expected to close in Q1 of 2026, in the next few months. The next 4 or 5 months. So Evernorth is this will position Evernorth as the first US listed company designed for from inception to treat XRP as core balance sheet asset, a structure that can redefine how institutional investors gain exposure to the token. What is the significance of this, and what implications does this have? So, from the corporate treasury perspective, this deal is noteworthy for 3 primary reasons. This is all from our very own newsletter. It's our own research. Please do go check it out. It's the first link in the description. And you can also get a free trial. There's also a free plan as well. From a corporate, so there's 3 reasons why this is really big. Scale and visibility. A publicly listed vehicle with over $1 billion of capital targeted for XRP accumulation would mark it one of the largest, and probably the largest, publicly traded XRP treasury vehicle to date. Institutional accessibility. Many institutional investors are constrained in direct token holdings. This structure offers an equity-based proxy for exposure to XRP. Remember, lots of jurisdictions, including here in the UK, you still can't buy XRP as an ETF. And even in the US, there's not even an XRP ETF there yet. But many jurisdictions, you can't just buy an XRP ETF. You have to go out and buy the crypto. This is an alternative way of buying XRP. Maybe you can buy in a tax advantage account. Again, I don't give advice, but if this comes to the UK and we still don't have an ETF, I might prefer to buy this company depending on the valuation. then buy XRP because I can put it into an ISA, which is sort of our tax-free accounts, because it's a company. So it allows more people to indirectly hold XRP. The demand and supply dynamic, large open market purchases, which is what they are suggesting they're going to have to do, of XRP reduces the available float. Remember, there's a float out there with any stock or crypto you're buying, how much is actually available to trade on exchanges and buy. This is going to reduce that float significantly. Given the comparity of smaller scale of existing XRP corporate treasury, this move could exert more pronounced supply pressures than analog moves in larger markets. So yeah, because they have to do it in 10 days, they don't have time to just scatter it on a monthly purchases. And again, this is what's implied out there again. Don't take my word for every single thing because it's still a very new deal, but it's implied out there that they have to purchase it all within 10 days. And it's it's looking very likely that this is going to have to be done in an open market way. So if that happens, which I'm 99% confident that's the way it's going to go, you've got a large open market purchase, which is going to reduce the float, add a lot of volume in a day, and they have to do it in 10 days. That will, whenever that happens, and that looks like it's going to be in Q1 of 2026, have a direct impact on the price of XRP. A lot of the time, previously, if companies were buying XRP, they might be buying it from Ripple behind the scenes. They might not be doing it on the open market, and it doesn't have as much of an effect. This will have a direct effect. So governance and transparency commitments are built into the deal. The SBI announcement states that purchases are on open market. So if you actually look at their announcement as well, it looks like it will be on the open market. The financial reporting will be audited by a major firm, and that vehicle will be employ independent governance. So there you go. So let's compare it to Bitcoin, Ethereum. Is this significant? Is it nothing? I'll look at the XRP chart and where I expect it all to go as well. So bear with me. So first, let's look at Bitcoin. Public companies and governments collectively hold about 1.65 million in Bitcoin, valued about 178 billion, representing 7.8% of the total Bitcoin supply. Mainly, the most prominent one is MicroStrategy. Strategy, formerly MicroStrategy. They hold more than 640,000 Bitcoin, and that's about 3% of the supply. Anchors from a corporate treasury model. Bitcoin remains the most established example. Firms raise equity or issue convertible debt explicitly to accumulate Bitcoin for long-term balance sheet. We know all about that. We know what companies are doing that. We know Strategy is the main one doing it. What's important to note is that they continue to issue debt just to buy Bitcoin. So they're really pushing the value of Bitcoin up, and that can start happening with XRP. The second most important thing to note is it's about 7.8% of the supply is held by companies and governments. And MicroStrategy being the biggest one, they hold about 3% of the supply for Bitcoin. If you compare that to Ethereum, you're looking at public entities holding about 4.68 million Ethereum. That's roughly around $18 billion US, or 3.8% of Ethereum circulating supply. A little bit smaller than Bitcoin, much smaller than Bitcoin. But there is a lot of Ethereum corporate treasury companies. Now compare that to XRP. Corporate and institutional holdings of XRP are smaller in absolute dollars, but significant relative to the asset's market size. This is actually quite interesting. Remember, Bitcoin's in a different category. Ethereum is double or higher market cap than XRP. Is sort of double XRP's market cap, if not a little bit higher, if you're looking at depending on which way you look at the valuation. But XRP is actually not too far behind Ethereum, considering it's a much, much smaller token. So publicly disclosed positions total roughly 11 to 12 billion. That's how much is in corporate treasury for XRP, 11 to 12 billion, led by SBI Holdings Incorporated, which alone reports near 1.6 trillion, about 10 billion. This is not even taking into account the fact that Ripple is basically a corporate treasury as well, but it's private, it's not public. So XRP actually has more than Ripple. There's more XRP locked up than there is Ethereum, taking into account that Ethereum has a much larger market cap. So it's actually very, very interesting. So there's about 12 billion by SBI Holdings, which alone reports holdings near about 10 trillion US dollars. Oh, sorry, 10 billion US dollars. Other listed participants include Trident Digital Tech Holdings, WeBust, together targeting several hundreds of $1 million in XRP reserves. An average market price of about $2.45 for XRP. These corporate balances equate to around 4.7 billion XRP. That's not even taking into account how much XRP Ripple holds, which is about 45 billion. Around 8% of the 59 billion tokens in circulation. By comparison, that concentration places XRP's treasury closest to Bitcoin's institutional share that its market capitalization would suggest. If Evernorth Holding completes its planned $1 billion open market accumulation, total corporate treasuries could exceed 5 billion XRP, lifting treasury ownership to roughly 9% of circulating supply and scale outweighing levels of Ethereum's corporate holdings. So it looks like, even forget about Ripple's holdings, which you shouldn't forget about because they're holding it and they're quite a large hold of it. But if you're looking at public companies' holdings, 9% of the circulating supply after this deal will be with treasury companies. If you look at Ethereum, only about 3.8% of Ethereum circulating supply is in treasury companies. If you look at Bitcoin, about 7.8% of Bitcoin supply. So XRP is going to have massive demand from treasury companies, and the supply of XRP is going to go into shock, in my opinion. Again, not financial advice. So this is Brad Garlinghouse's X post. Remember, too many people get confused. Brad Garlinghouse is not the CEO of XRP. Brad Garlinghouse is the CEO of a company, Ripple. There's thousands of companies or hundreds of companies like Ripple that use XRP. The reason everyone talks about Brad is because obviously his company holds a lot of XRP. But don't get confused. You can just see Evernorth is also going to have a bigger impact to XRP's price than Ripple potentially. So this is his announcement yesterday. He says Asheen and the team are building something special with Evernorth XRP. We are proud to partner with him and proud to join the incredible set of investors, including SBI Holdings, Patinera Capital, Kraken, GSR, and Rippleworks to support Evernorth as it participates in institutional lending, liquidity provisions, and DeFi yield opportunities for XRP. Anish, the CEO at Evernorth, said, "I'm proud to share that we've launched Evernorth XRP, a first of its kind institutional vehicle building to accelerate XRP adoption. With over a decade of uptime and rapidly growing DeFi ecosystem, XRP is a well positioned for adoption, and Evernorth is built to meet that moment." So Ripple CEO Brad Garlinghouse quickly endorses the Evernorth launch, calling it something special, highlighting Ripple's pride in backing the project alongside SBI Holdings. His post on X framed this initiative as an extension of Ripple's mission, advancing real-world utility and institutional integration for XRP. Garlinghouse involvement signals that Ripple sees Evernorth not as a separate venture, but as part of a broader strategy to embed XRP with regulated financial infrastructure. Ripple's own participation as an equity investor and advisor ensures technical and strategic alignment between the company that built the ledger and the new entity positioned to scale its institutional use. We've also got David what's his name again? David Schwartz. Yeah, David Schwartz. He's now joined this company as well. That's very interesting. We'll come on to that in a second. So for investors, Garlinghouse public endorsement matters. Ripple has historically been selective about lending its name to third-party ventures. His backing effectively validates Evernorth as a flagship effort to bridge XRP from enterprise payments into capital markets, giving it both legitimacy and native momentum heading into its NASDAQ debut. Okay, so what I'm actually going to do is the speech is starting in... I know we've got 5 minutes, so yeah, let's continue. Okay. So Evernorth. So what is Evernorth? What is the breakdown on Evernorth? And then we'll come on to the impact that the open market can have. We'll come on to the charts. We'll come on to David Schwartz. All of that is coming up in this video. So Evernorth, the detailed breakdown. So who is it? What is it? Structure and listing. Evernorth will merge with a SPAC, Amana Acquisition Corp, and transition to a public public company listed on Nasdaq under XRPN, subject to closing. So, what are they using the money for? The IPO. The majority of net proceeds will fund open market XRP purchases to build the treasury. The remainder will be directed to corporate purposes, working capital expenses, yield, DeFi deployment. The business model, this is not a passive hold. This is not just a passive hold token and park model. It includes operating validators on the XRP ledger. They're going to make it more decentralized. They're going to be providing liquidity and institutional lending services using XRP. They're making XRP a better asset. They're increasing the utility of XRP. So they're going to be providing liquidity and institutional lending services using XRP. They're going to be participating in DeFi using XRP as collateral or a yield instrument. They're going to be participating in governance and audit, independent governance promise. Major audit for engaged open market purchase mandated. The timeline is we expect this to close in Q1 of 2026, and the backing of credibility is backed by Ripple Labs, SBI, Panetera, Kraken, GSR, and participation by Ripple co-founder Chris Larsen. So I'm going to come on to what the impact is for the price, because it's an open market purchase. We're going to come on to David Schwartz as well. We're going to come on to the key takeaways for XRP investors. The SBI Holdings, remember, this is a massive company. This is probably the largest company that holds XRP. Long-time partner of Ripple and long-time holder of XRP. They've just made an announcement today, October the 21st, on this and how they're actually investing in this as well, and their thoughts on all of this. So a lot to go through. So let's continue with the story. Okay, so I'm going to end that there 1 second, because we're going to go on to the Fed event now, and we'll finish that later. So we go over here. Okay, so we got up to there, the impact of open market purchases. So yeah, we'll come back to that. We're going over to the Fed event now. We'll go through your comments. What does everyone think about this? We'll come back to David Schwartz and the open market and all of that. It's just we've got the Fed event starting now. We don't want to miss that. So let's go over here. We're live here. There we go. The Fed event is starting very shortly. In fact, it's actually in 8 minutes. Let me just change that timer. There we go. That's a bit better. Okay, so I'll tell you all about this event in a second. Remember, this is the event that we're waiting for. It is the Payments Innovation Conference. It's going to start off with a bang. It's going to start off by a Fed speech by Fed Waller. So that'll be interesting. That's what's starting in 5 minutes' time. And then we're going over to the Bridging Traditional Finance with Digital Assets Ecosystem by Rick. So there's a lot going on today. We're also going to have CEO of Paxos, we're going to have Cathie, we're going to have Franklin Templeton, we're going to have BlackRock, all in today's Fed event. Let me go to your comments while we're waiting for that to start. Where were we? Hello everyone. Songs to Space says, "Wow, silver crashing to Bigly. Will be buying." You're buying silver? Yeah, I would be buying silver. Love Netflix stock. Brian says S&P is still going up. What do you think its highs before it crashes? I think it can go up another maximum 5-10%. I mean, 10%. I mean, at that point, I would actually start shorting the market. But yeah, maybe 5-10%. Again, that sounds like a lot, but yeah, 5% would be euphoric. 10% is possible, but that would be ridiculous. But yeah, 5% maybe. Ricardo says, "How come Sensei isn't saying banana heads? It's an inside joke." What, Vaz likes to say that. What do you mean? What is expected is crash. Adam says, "Hi Sensei, can we get your take on Martyn's last post? He posted out yesterday, great big warning saying, 'I told you big crash is about to happen,' and US hypertech." That's a lot of fear. Adam, sorry, I haven't seen it. I don't know. I don't personally think it's a major issue, but again, we're all entitled to our opinions. Adam says, well, I'm glad it was only me then. Yeah, no worries. Darren Brown, can you clip this for us and upload it separately? Yes, I will. That's what I'm doing, Darren. So that will be uploaded separately so you can go through it again. I haven't actually finished it, so I'm going to put both clips together, and after this live show ends, it will come out as its own separate video. How can I invest in XRP on Trading 212? It only says you can't. On Trading 212, you cannot. That's the UK government for you. Ryan says, are we ready? FBL says, thank you. I'm ready for a moonshot. Me too. Metals, rug pull moment. Waiting for bed meeting. Yes, it'll be in the next few minutes. Why is my timer always wrong? I apologize. What's the time? Why am I? Oh, it's okay. Here we go. Sorry. Let me do that one more time. There we go. That's the last time. It's the Fed are never late, so there we go. It's not like Trump. We'll be live in the next few minutes. That's the link for Martyn's. Adam, unfortunately, you're not a moderator, so any links you put in the chat, we won't be able to see. Sorry to sound silly, but what was exactly the point of this event? Sorry to sound silly, but what's exactly the point of this event? So, CJ, we are a YouTube channel. We go live every day at 12:30, bring you all the latest news. So we were going through one of the news stories just there, one of the bigger news stories for XRP. We go through the markets. If anything's happening, we try and calm investors down. We try and analyze the markets. We try and navigate the markets together. If there's big events such as the Fed speaking, remember the Fed is what sort of the market likes to look at, whether it's rate cuts or the information they present. We cover those events. If there's roundtables, we like to cover it. So today we had that piece of news we want to go through. In about 5 minutes time, we've got Fed Waller, who's a Fed representative, speaking. It's interesting to understand what they say about this new industry. It gives us insights, makes us even more confident in our investments, or we might not want to invest in the US, or we might want to see what certain panelists are saying. All of that, and that's how real investors look at the market. They analyze all of these events. And then they make their investments. Brian says, so welcome to the show. Yeah, we're live every day. Do tune in. Subscribe if you haven't done so already. Brian says, so if there's a supply shot on XRP, do you think it could push the price up to what? Well, again, a supply shock, there's not just one meaning of supply shock. If there's a supply shock, it can push the price up to $5, $4, $3. If there's a major supply shock and there's no more float, then yeah, it can push the price up to $50, $100. But yeah, we're probably not going to get. I mean, there's plenty of supply out there. There's plenty of flow out there. So even with billions of dollar purchases, it's not really going to remove much float. It might push it up to $5, $10 this cycle, and then yeah, it depends. There's not just a one clear answer. A shock doesn't equal. There's many different types of shocks. It's not going to be $1,000, so like other people are saying. Bring back the SEC lawsuit, please. Why would we want that? Motto A Team says, keep an eye on him. Motto A Team says, I really like the pre-show song. I'm a little bit behind. Oh, I love it, Motto A Team. Glad you love it. Yeah, if everyone just make sure you are up to date. So press that live button. That makes sure you're live. The SEC case being closed is the worst thing. Is the worst thing to ever happen to XRP. It plummeted ever since. That's incorrect. Incorrect. The SEC case closed. XRP was declared not a security, and it was about 30 cents, jumped up to 90 cents, then went back down to 40 cents, and then went up to $3.40. If you're talking about the appeal stage, that's something separate. They say only people left in the market are gamblers, traders, and Wall Street and passive investors. Mohammed says, see Bitcoin, what's going on? I bet there's nothing going on. Someone's just told me to look at Bitcoin. Yeah, absolutely nothing going on with Bitcoin. It's down 1.5% on the day. In the last 15 minutes, it's gone up a little bit. I kind of think metal money also will move into crypto. I think over time they will, but yeah, I mean, there's nothing like gold, is there? I mean, especially now that you've seen all of this, all of the things that can start happening in the world with one company going down with Amazon yesterday, no one could access their money. You can always access your physical gold and silver. So there's always going to be demand for silver. And as they say, gold is sort of the only money that's not debt. Any other money you buy, you're basically buying debt. Crypto obviously is a little bit different as well, but physical gold and silver, there's always a reason to be holding it, in my opinion. Blank Trader says, hey, do you think they're going to try put gold at 10K? Try put gold at 10K, then price in XRP to make it stable? No, definitely not. Do you like beetroot? Do I like beetroot? I think so, yeah. Thank you for the lowdown, no worries. Jamie says, can we please have the Phoenix song on opening bell today, if it doesn't interrupt important speeches, that is? Yeah, remind me and we'll try and do it. LJ says, how dare you ask such an inconvenient question? An inconvenient... LJ, what's going on? I don't understand. What? I don't make any question seem inconvenient. What? Mohammed says, what's the topic of the Fed today? The topic is, here it is, Payments Innovation Conference. That's the topic, and it's starting now. The blockchain has no future. It's got as much use as... Okay, let me take that off. Thank you, Craig, for that. Yeah, blockchain is being used in more things than you can think. 40 seconds Fed meeting. Yep, we are waiting. They are supposed to be live now. So let me have a look. They'll be live any second now, so I'll keep that on the screen. We'll get XRP ready on the chart. Fed Waller will be starting this with a speech, so that's going to be very important. Here we go. Live from the Fed.
Okay, that really worked. So good morning and welcome. We're very excited to have everyone here. My name is Susan Foley, and I am a Deputy Director in our Payments Division, and I'm going to be leading you through today's events. So I'm very excited to have everyone and learn from all of you and your experiences. We're going to have 4 panels today covering key issues on payments innovation. They're going to cover things such as tokenization, AI in payments, stablecoins, and the use of digital assets in traditional finance. You can also expect to have plenty of time, just like this morning, to mingle and meet each other, folks you haven't met before in the industry, as well as Federal Reserve leaders. And speaking of Federal Reserve leaders, few at the Fed are more focused on these issues than Chris Waller. He has long-standing interest in new technologies and innovations in payments. As an academic, he wrote extensively about monetary theory and its intersection in payments issues. He has studied Bitcoin's early potential as an alternative currency and stablecoins' impact as a like payment instrument. In 2021, as a new Federal Reserve governor, he gave a speech on CBDC called A Solution in Search of a Problem. It proved foundational in terms of the topic and the discussion of that topic. Governor Waller is chairman of the Fed's Payments Committee and has given many speeches about payments, stablecoins, and DeFi. And now it is my pleasure to introduce Governor Chris Waller.
Good morning. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that had come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption, don't avoid it. As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution. A number of technological advances are transforming the payment system. Stablecoins and tokenized assets making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation.
Please do hit the like button and subscribe.
The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need. The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we're discussing today, the Fed was running trains on steel rails to deliver and clear paper checks traveling across the country. FedWire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies. While this is a good start, I believe we can and should do more to support those actively transforming the payment system. To that end, I have asked Federal Reserve staff to explore the idea of what I'm calling a payment account. Today, Federal Reserve banks provide access to master accounts and financial services to legally eligible entities following our guidelines for evaluating account and services requests. The payment account would be available to all institutions that are legally eligible for an account and would be beneficial for those focused primarily on payment innovations. This payment account concept would be targeted to provide basic Federal Reserve payment services to legally eligible institutions that right now conduct payment services primarily through a third-party bank that has a full-fledged master account. There are many eligible firms engaged in substantial payments activities that may not want or need all the bells and whistles of a full-fledged master account, or access to the full suite of Federal Reserve financial services to successfully innovate and provide services to their customers. The idea is to tailor the services of these new accounts to the needs of these firms and risks they present to the Federal Reserve banks and the payment system. Accordingly, and importantly, these lower risk payment accounts would have a streamlined timeline for review. Payment innovation moves fast, and the Federal Reserve needs to keep up. To be more concrete, let me describe a possible prototype that I've been considering for this type of payment account, or as I sometimes call it, a skinny master account. The account would provide access to the Federal Reserve payment rails while controlling for various risks to the Federal Reserve and the payment system. To control the size of the accounts and associated impacts on the Fed's balance sheet, the reserve banks would not pay interest on balances in a payment account, and balance caps may be imposed. These accounts would not have daylight overdraft privileges. If the balance in the account hits zero, payments will be rejected. They would not be eligible for discount window borrowing or have access to all Federal Reserve payment services for which the reserve banks cannot control the risk of daylight overdrafts. Now, I want to be clear that this is just a prototype idea to provide some clarity on how things could change. The upshot is that, in my view, the payments landscape, as well as the types of providers, has evolved dramatically in recent years, and accordingly, a new payments account would better reflect this new reality. As Federal Reserve staff examine this idea, we will engage with all interested stakeholders to hear their perspectives on the benefits and drawbacks to this approach. So you will be hearing more about this shortly. So let me wrap up here so we can get to the really exciting part of the conference, not me blabbering, which is about innovation and the future of payments. So thank you to the panelists who took the time to participate, those in the audience who agreed to be here, and the many others watching online. And a special thanks to Fed staff who moved incredibly fast to pull this event together and fit it into a very busy fall schedule for the Fed. So on with the conference, and thank you for being here.
That was great. A lot to analyze there. I'm just going to put it on mute. We're going to be watching this. There's going to be more coming. It's just the beginning. So let me just listen to this, and then I'll give you the analysis of what he said.
The first panelist to come on up while I give a few housekeeping items.
Okay, they're doing housekeeping before the first people come in. So let me just, I've just run this through, and I've got his speech, so I know exactly. Taking some quotes out. So this is a new era for the financial reserve and payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today you are welcome to the conversation. He is acknowledging that the DeFi and crypto innovators are legitimate participants in US payments policy. He is one of the only people at the Fed who is really going and seeking to bring events like this, which is just starting, and to help these companies and these crypto stablecoin blockchain companies. He then says stablecoins are tokenized assets making use of distributed ledger technology. They are transforming the payment system. This is basically a direct mention of XRP, RLUSD, and similar ledger-based payments tokens. Squarely within Fed's current research focus, signaling regulatory recognition of infrastructure underpinning them. So I've taken a speech, I've put it through a software, and we are getting the key quotes and what's so important about this. So he's talking about basically XRP and other tokens that do the similar thing in that quote. He then said the posture of public institutions, including Federal Reserve, should be acknowledged and embrace private sector innovation that can improve the payment system while preserving its safety and stability. It reinforces that innovation will be led by private entities like Ripple, Evernorth, and fintechs, with Fed acting as partner rather than a barrier, which could ease compliance gateways for XRP-linked institutions. He then says firms engaged in these activities includes banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. Distributed ledgers and crypto assets are no longer on the fringes. So the Fed explicitly includes crypto-native companies within its mainstream payments ecosystem, a milestone acknowledged that supports XRP's positioning as a bridge asset rather than a speculative asset. He then said, we are conducting hands-on research on tokenization, smart contracts, and intersection of AI and payments, for whose for use in our own payment system. So direct confirmation that the Federal Reserve, it's not finished already, there is now panels starting. Federal Reserve is testing tokenization and smart contract integration mirrors developments on the XRP ledger. I have asked Federal Reserve staff, and this was his big announcement today, that he's asked the Federal Reserve staff to explore the idea of what I'm calling a payment account targeted to provide basic Fed payment services to legally eligible institutions. Remember, there's Fed master accounts, and now he's suggesting a simpler version of that everyone should have access to. The proposed payment account, or the skinnier master account, could let licensed fintechs and tokenized platforms plug directly into the Fed rails, a potential gateway for regulated blockchain-based payment firms. And the last thing he said was payment innovation moves fast, and at the Federal Reserve, the Federal Reserve needs to keep up. Why it matters is a signal of urgency, suggesting the Fed no longer intends to lag behind crypto and DeFi innovation. So that was a speech directly from Fed Waller. There'll be 2 links up here to go and check out the rest of the event. Right now, we're going to go back to the event because we're doing this in a live show. But until next time, take care of yourselves and each other. Back to the live event. Here we go. This event is going to continue.
Will be leading us through this first topic. Rebecca is the Chief Legal Officer at Jito Labs, a software company that builds critical blockchain infrastructure and DeFi applications for the Solana network. I will now turn it to Rebecca to start us off. Thank you.
Thanks so much. Good morning. Thanks to everyone for being here. It's my privilege to kick off today's conference with a panel about the convergence of our traditional financial system with a new system called decentralized finance, or DeFi. Before we jump into substance, I want to thank Governor Waller, Sunaina, Alex, Ria, and everyone at the Fed for convening us to discuss the evolution of our payment system. This type of forward-thinking, collaborative event allows us to ensure a cutting-edge and safe financial system and to ensure that the U.S. economy remains competitive. Starting the day with a DeFi panel is brave. It shows a willingness to engage with one of the thorniest questions on innovation: whether and how traditional financial institutions and traditional financial services will and can evolve with the advent of an intermediary-less technological system. Although there's not a universal definition of DeFi, in fact, regulators, policymakers, and industry cannot agree on one, I'll provide a brief definition for purposes of today's panel. DeFi is a software system that runs on permissionless blockchains and allows individuals and institutions to engage in economic transactions without an intermediary. There's been a lot of talk over the years about whether this new intermediary-less system can or will disrupt or replace TradFi. Very recently, ICE Chairman Jeff Sprecher spoke of his rationale for a recent investment in and partnership with a company building a widely used DeFi application called Polymarket. Mr. Sprecher said that ICE made the investment so, quote, we don't get disintermediated. 2 important things on this. First, unless you're really in the crypto industry, you're unlikely to even know that Polymarket is DeFi or even that it's built on a blockchain. Second, as of today, the total value locked in all DeFi applications comprises about 4% of the total crypto market and significantly less than 1% of GDP. In other words, there's an acknowledgement that DeFi has great potential to bring new disruptive features to traditional payments and financial services, but there is also a very long road to go. This road is paved with new technology. To that end, today we'll discuss the current state of DeFi technology, whether and how TradFi can use and integrate with it, and where we'll go in the future. This panel will also tackle the incredibly important questions relating to stablecoins' critical role in the DeFi ecosystem and examine tokenized deposits, as well as DeFi's potential future role in bank liquidity provisioning and liquidity services. The DeFi TradFi disruption question is unlikely to have a singular answer, and instead will, as the title of this panel notes, require bridges. Governor Waller said it well in his recent remarks at CBOS on the next frontier of payment innovation. He said, innovation is not an issue of TradFi versus DeFi, but rather poses an opportunity to harness the complementary strengths each has to offer, especially at a time where we are seeing increased convergence between the two. Today's panelists are at the forefront of this convergence, and I'm looking forward to facilitating the discussion among them and letting them introduce themselves now, and then we will jump into questions. Sergey, do you want to kick off?
Yeah, sure. Hi, everyone. Good to see many. Sorry. Hi, everyone. Good to see many of you again. Chainlink on the topic of DeFi powers approximately 70% of DeFi
Chainlink
globally
here.
and over 85% of DeFi on top chains like Ethereum, providing data and other key services to make sure that the infrastructure underpinning the transactions and operations of DeFi are correctly executed. We also have a lot of experience working with stablecoins, powering their proper execution, basically. We're the largest provider of proof of reserves, which is the technology that stops over-minting events and incorrect minting of stablecoins, which I think will be particularly valuable this new stablecoin environment. We're also the most reliable provider of bridging technology for the capital markets, working with large organizations like SWIFT, the DTCC, JPMorgan, UBS, and others. So we cover the gamut of both powering the DeFi community and now well along into powering the capital markets transition into the, just like 5 different names. The digital asset, new revolutionary thing. So yeah, that's what we do.
Great. Jackie.
The thing, he called it, Chainlink.
Hi, everyone. I'm Jackie Reeses. I'm the co-founder and CEO of Lead Bank. We have bank in our name because we own an FDIC-insured bank in Kansas City, Missouri. I started the company in 2022 after leaving Block, where I ran financial services, so all the regulated products there, and have also been involved with the Federal Reserve for 10 plus years. So I know a lot of the folks in this room, first through San Francisco. Lead is an infrastructure provider. We build infrastructure for fintech, crypto, consumer companies, and e-commerce companies, many of whom are the largest companies in the world, and all names that many of you know. We're an underlying infrastructure provider. We don't really have a consumer brand. And so as much as we power a lot of the products that you all interact with, you would only really see us show up through disclosures or through an announcement. And that might be Stripe. I know someone from Stripe is in the room. It might be Revolut. It might be Ramp. It might be Affirm. It might be Walmart. And so we work with a lot of different types of companies to provide their underlying infrastructure. I'm very happy to be here.
Thank you for having us. So my name is Michael Shalov. I'm the CEO and co-founder of Fireblocks. We provide infrastructure, digital asset infrastructure for financial institutions, basically a technology as a service. Our main customers are banks, fintechs, and other financial intermediaries that are involved in digital assets, stablecoins, and crypto. Been doing that for the last 7 years. We are servicing over 2,500 financial institutions today. And essentially the infrastructure has 2 components. One is basically what you will call wallet or custody infrastructure. So we help folks like Bank of New York Mellon and others to create the custody technology for them to store digital assets. We also have the Fireblocks network that helps people to coordinate the settlements over 100 blockchains that we support. So through this infrastructure this year, there will be more than $5 trillion worth of digital asset value that is going to be transferred. With regards to DeFi, among kind of the category of the different institutional wallets, custodians, and basically that broad category, we were the first one that created an offering back in 2020 to interact with various DeFi protocols. And along the way, we basically kind of were helping with the challenge that traditional financial institutions and regulated entities have in terms of accessing DeFi. So I think we have a lot of experience in discussing about the topic we're going to chat about today. Thank you.
Good morning, everyone. I'm Jennifer Barker. I lead two businesses for BNY. I lead the Treasury Services business, and I lead the Depository Receipts business. And first, I'd like to thank Governor Waller for bringing us here today and the rest of the Federal Reserve. This is a really important topic, and the discussion is timely. We are at a really unique and extraordinary juncture. We have breakthroughs in distributed ledgers, tokenized assets, artificial intelligence, all of which are reshaping the payments industry, not only here, but across the globe. And these technologies, they promise payments that are faster, more secure, and more inclusive than ever before. But traditional services and traditional service providers still provide scale and regulatory standards and expertise that underpins every transaction. So today's shift isn't about blockchain technology immediately replacing traditional systems. It's about the two coexisting, and that's really where true transformation lies, on getting those networks to interconnect. So our task is to unite these strengths as they complement one another. Layering digital asset innovation onto proven financial systems will unlock greater efficiency, liquidity, transparency, security, and financial inclusion. Key tenets here are important to resolving delivery around real-time payments, data-rich payments, and modernizing for resiliency, security, and industry collaboration. So success will depend on the close collaboration amongst all of us, banks, fintechs, service providers, regulators, to build clear standards, resilient infrastructure, and responsible risk frameworks. So at BNY, we are committed to innovating by investing deeply in research, modernizing our infrastructure, and championing clear, adaptable frameworks that encourage responsible innovation.
Okay, great.
Guys, this is super, super important. You see this room full of people, they're all taking notes, they're all understanding what these people are saying, because this can have a direct impact on the markets, as well as companies. That insights you'll get into which companies might be better investments than others, what it means for infrastructure, what it means for DeFi, what it means for certain projects. We've got Chainlink here, so a lot to come up. So this is very important. Let me just press play again. We're now slightly, here we go. Let me just press play. If you have just tuned in, please do hit the like button. Please do subscribe. We'll be covering this event throughout the day.
Technology to start. And we're going to start with the question of interoperability, which means the ability for various computer and software systems to share data and make use of it across different systems. Sergey, we'll kick off with you, because obviously interoperability is key to what Chainlink has built. They've built the Cross-Chain Interoperability Protocol, or CCIP, which is software that allows users to provide information across various different blockchain networks, so Ethereum, Solana, and many others. But how is CCIP currently being used, and you alluded to this a little bit in your introduction, by traditional financial services firms who are integrating digital assets into their offerings?
Yeah, sure. So I can't seem to get that right.
I'm a full-service moderator.
I wouldn't last long at the Fed. I can't even get this right. Yeah, so there's like two dimensions to interoperability in the TradFi world because of the existing investment in systems. So the first level of interoperability is getting the existing systems to work with chains, the existing data sources, the existing backend systems, the existing messaging standards such as SWIFT. All of these existing systems need to become synchronized. And this is where you hear terms like digital twin and fund tokenization and other areas. So there's one level of problems where you have to synchronize existing data, existing backends, existing messaging standards with the chains, right, for basic operations. And our position is that those existing systems are not going to be going away. There's a huge investment in them. They're highly regulated. They meet legal requirements. They meet a lot of very key requirements. So the challenge there is synchronizing them. This is the work we've done with SWIFT, the DTCC, and other groups that power those systems in big ways. The second level of interoperability is the cross-chain level, and that's because you have a lot of fragmentation, and that's happening because the cost of generating a chain is becoming lower and lower. So as the cost of generating a chain is cheaper, and as it's easier and easier for more institutions to make chains, there will be more chains. Also, there's various fee dynamics and other benefits to having your own chain. And there's also more and more public chains as long as VCs can make money from flipping a public blockchain coin. So as long as VCs can fund a public blockchain coin, and as long as that public blockchain coin can return a large amount of capital to them as a result of their initial investment, you can expect more public chains as well, because that's a very attractive, financially attractive business model for many people. So there's more chains. More chains creates siloed capital. Siloed capital creates risk and creates limitations to market growth. So you need standards, you need standardized ways to synchronize the existing systems and to synchronize the chains as they grow in amount and fragmentation. So that's what we have a lot of experience with. One of the main challenges that we found in working on that, different from doing it in the DeFi community, doing it in the capital markets community, is there's a lot of requirements around compliance. There's a lot of requirements around accounting, books and records, and all these different requirements that a transaction has. So the challenge in the capital markets with interoperability is not just connecting two systems, whether they're an existing system to a chain or whether it's a chain to another chain. It's getting the connection to result in a transaction
Stock
that
market
meets
is
the books
open.
and
We're
records
down.
requirements, that meets the compliance requirements, and that meets whatever other requirements the regulator or the counterparties may have from the transaction, right? So that's the challenging thing, really, is making the transaction actually happen against all of those, accounting, compliance, identity, regulatory requirements. I'm really thrilled to see events like this. I'm really thrilled about the SEC's new direction and the CFTC's upcoming direction, because that'll simplify that problem. But there will be a period of probably 2 to 5 years where you have to create a kind of hybrid system where the old requirements through the old systems still need to be met, but the new system needs to meet them. So that is kind of the challenging thing for transactions, I would say, in the next 2 to 5 year period, that are interoperable in the senses that I described.
Makes sense. Jackie, and my questions go down the line, but I didn't know the way we were going to sit. So, but do you think that the banking system can actually just to turn this question a little on its head, can the banking system manage the fragmentation of all of these chains that Sergey was alluding to? And how does the technology need to evolve from the digital asset side to be able to be used by banks and traditional financial services firms?
Yeah, well, I'd say in listening to that, it actually sounded like the banking system. And so I laughed in the back of my head as I was listening to this idea of extreme fragmentation, siloing, and the need to actually do compliance. That sounds eerily familiar as someone who owns a bank. But I think today, the banking system is not at all ready for it. Like, you have 2 banks represented here. Like, we're probably one of the biggest infrastructure banks in the US that deals with crypto and stablecoins, and Bank of New York is certainly one of the largest institutions that's like the gold standard for holding reserves and managing the crypto industry. And so you probably have 2 of like 10, I would say. Having said that, there's a bunch of things that banks have to deal with that I think are probably the most likely use cases to hit banks at first. One is wallets, and that's consumer-related wallets. The second is infrastructure. I think on the infrastructure side, you're seeing that evolve today, and that's infrastructure
XRP.
of dealing with BIN sponsorship, moving money, storing money, and kind of the overall management of on-ramps and off-ramps. And I think that infrastructure has actually been established by players and operates quite well within the system today. I know we work with over 150 plus crypto companies, hundreds of accounts, tens of billions of dollars of money that flows through on a fairly regular basis. That happens very fluidly following all the KYC rules that are required and all of the institutional knowledge that we've had for 90 years of developing a banking system in the United States around like core banking law. So that exists today. On the consumer wallet side, I'd say that's probably the least sophisticated, and I don't actually see like a use case today for like stable coins and consumer wallets. No one is sitting there going, I'm gonna use my $25 worth of stable coin at Starbucks. Like, that kinda, it's a nice theory, but I don't actually see any transaction volume that's happening on the consumer side. Where you're going to see it, though, is institutions that have moved their infrastructure, and over time, it'll become more prevalent as banks adopt stablecoin wallets, most likely through their core providers like Fiserv, Jack Henry, and FIS, who will enable it so that you could have interoperability between crypto companies, fintech companies, and core financial services. And so those wallets will be onboarded probably within the next year or two by these companies who have been watching Genius Act. But those are the two more likely use cases for where it happens. And I think on the stablecoin infrastructure side, you won't really notice it as a consumer. It'll just happen in your payment devices. And those rails will start to get moved first by multinational payments and then second through more domestic payments, largely because the infrastructure has started to move over those rails if, and I say if, there's an advantage in terms of actual cost and speed versus theoretical cost and speed, because we also are having this intersection of FedNow, which is a 24/7, 365 payment rail that actually works today. And so users could send a significant amount of money. Adoption isn't that great, but that actually does exist. And so big institutional users are going to debate which rail is actually more economically advantaged in which to send money.
Yeah. Michael, I want to get to custody and wallet infrastructure in a second, but because of how Sergey teed things off, Jennifer, I'm actually going to ask you, so what liability, counterparty, and settlement finality issues emerge when you're bridging these open smart contract systems that DeFi is built on with these regulated banking systems? No, for you. Michael's coming in a second.
Sorry, I thought you said both of us.
No.
Yeah, I mean, I think that's a very interesting question, right? Because you have the question of, an auditable chain and figuring out, and as you mentioned, Sergey, all of the data has to travel with that. So you have the question of finality, and you have the question of revocability, right? And so on chain, things are final, but there also probably needs to be a revocable process, just like you have today with wires and other payment systems. So I think it's a really interesting question of, is it final on chain, but what is the process to really have it be revocable if needed off chain and through the regulatory environment?
Oh, that's very interesting, because I mean, the whole point is for it not to be
Right.
revocable in many ways, although certain, obviously, stablecoin issuers are, I think, thinking about revocability. Okay, so to move to a different part of the infrastructure, but that is just as equally important, as you said, Fireblocks builds wallet infrastructure. And Michael, talk about how the custody broker approach today in traditional financial services contrasts with wallet infrastructure and sort of other digital asset technology, just to set the stage, and then I, of course, have a number of questions.
Yeah, so I think that first of all, when people think about custody, I think what they have in mind is either how banks used to have safes and they would basically store bare assets in those safes, or maybe like, the entire books and records, right, that currently exists in terms of some kind of like, tree that at the top level you have something like DTCC, and then kind of propagates to the various intermediaries that are creating a hierarchy of sub-accounts. The reality is that actually that function in blockchain and crypto is actually provided by the blockchains themselves, by the L1s. They're the ones that are, that's kind of the books and records. And what you do as a custodian or as a wallet provider, or basically the safekeeping element, is actually storing the password, right? Storing the private key that is the instruction to move either an asset from one wallet to another or operate a smart contract on behalf of that account. So conceptually, it's a bit different. On top of it, unlike, I would say, like, in the traditional space that, okay, there is basically one safe, right? You can actually operate much more sophisticated and improved mechanisms to increase the security, right? So instead of having, for example, one private key, one of the things that Fireblocks and a few other folks have built over the last couple of years is this concept of multi-signature or threshold signatures or multi-party computation, but essentially it's a virtual system that distributes the ownership over a wallet, right? So you need multiple parties to actually sign a transaction simultaneously to instruct the movement. And that creates like a much larger or much greater resiliency, right? From both a cybersecurity standpoint, counterparty risk standpoint, operational risk standpoint, compared to modes that you have in the traditional space. So that's kind of one important element that it's quite interesting to bring. I mean, it's actually nowadays when you look at all the crypto and fintech players, they all have adopted it. Also, in terms of most of the retail wallets, they've adopted it, and also I think the banks that have partnered with us, they have also adopted it. But generally speaking, every time that we do talk with bank, especially like, you know, bank IT, it is a fairly complex journey to get them think about how they can enhance their resiliency in that regard. By the way, you know, that type of technology actually proven itself to over the last couple of years to prevent quite a lot of disastrous situations in terms of theft in the crypto space. And I think that part of what we are working on right now is the regulators globally, and I think the more exciting thing is that we now have the opportunity to work with the regulators in the United States, is to actually bring frameworks, right, similar to what you have in Europe, like DORA, to bring similar frameworks into the US that will help regulators and traditional financial institutions with scoping and understanding how to implement those models, and make sure that as we build or embed those capabilities within the traditional space, we are doing it in a secure and safe way, because it's true, I think, like, you know, Jackie and kind of alluded to that, there is sort of a hump, right, that, and that's also been our experience working with some of our partners over here, is that there is actually a pretty significant effort that goes not actually in implementing the wallet infrastructure and the custody technology per se, but actually integrating it into the traditional systems. And it's not only integrating in the traditional systems, like just connecting those APIs, it's actually also to evolve the processes and the procedures and how IT is actually going to consume that within the bank. And the reality is, probably won't be surprised, right, that most of the banks, whether they develop their core banking systems internally or they're using providers like the providers that were mentioned over here, those providers and those systems that were built in the 70s, 80s, and the 90s, they're not really equipped to deal with it, not only on the level of you know, the fact that they're doing batch processing once a day, but actually even change management that sometimes expected to take weeks or months, right? You now have a situation that there is a fork on the Ethereum blockchain, and you need to update all your nodes to the fork, right? And you need to do it in the next 60 minutes. And if you're not going to do it in the next 60 minutes, you're going to be disconnected from the main ledger, right? So those processes, those IT processes, they also need to be evolved within those financial institutions to actually deal with this technology.
I was going to ask you as a follow-up what current banking practices need to evolve to be able to, but you already answered it. So, so Jennifer, we'll go down the line from you, but what's the biggest technological obstacle in having traditional financial services or banking firms plug into DeFi itself today? So applications like Uniswap, which allows for permissionless swapping of assets, or Aave, which allows for lending type activity. And then if you can each say what you're doing from your particular vantage point to try to move past these technological obstacles, that would be great.
Sure. I think the reality is you have to have expertise in both traditional systems as well as digital asset systems to understand how to integrate them and how they can best work together. So I'll start with some of the work that we're doing on the traditional systems. We were one of the leaders with real-time payments. We were actually the first bank to send a payment. When the credit limit increased, we were the first bank to send a payment there. We were one of the first banks on FedNow. The power of immediate payments is so important in this economy, and we continue to work with our clients and the 9,000-ish banks, Jackie, you mentioned adoption, we still have more work to do, right? And so getting those consumers and those communities access to immediate payments is a really first important step. Second is being able to move dollars 24/7. That is a big use case, particularly from our bank and our corporate clients who want to be inside the walls of BNY, able to settle dollars 24/7. So that's a really, and by the way, not a lot of banks can do that, which is why the digital asset structure really can potentially leapfrog some of the bank legacy infrastructure, but we've done both to make sure that we're ready. And the third is, AI, and we are heavy users of AI, particularly in the payment space, whether it's payment efficiencies and the operations, whether anomaly detection, fraud control. AI is going to really help us get more efficient and provide safer and faster payments. But then also across the industry broadly, ISO 20022 is really important because as we've talked about today, it's about setting standards. And that's why ISO is so important. And we've leaned in so heavily. We've tested with clients. We've worked with Swift. We do a lot of speaking on it. So it's really important to continue to control and really go out into the market and think about standards. And then, there's lots of folks in the industry thinking about it. I know CHIPS and Fed are also exploring, expanded settlement windows. So all of these things work together to make the traditional infrastructure more efficient. Okay, so, but there's still gaps, right? There's 90 plus immediate payment systems around the world. There's hundreds and hundreds of clearing systems around the world. We see that illustrated sometimes in cross-border payments with the different formatting. So there are still some efficiency that the digital asset ecosystem can really help us solve. And, if you think about, you mentioned digital asset custody, we launched that several years ago. We are heavily researching and working on both. And so we launched digital asset custody, and we have already integrated the traditional and the digital asset rails together in one application. So expand that to then stablecoin and some of the on and off ramps that you have between fiat and digital asset. We do that today for many clients and many of you in the room. And we work very, very closely with many digital asset providers, just even providing traditional banking services. So I think that's a really important part of learning that as well. But the interesting thing about BNY is, we touch about 20% of the world's investable assets. We clear $2.5 trillion of payments every day. So we have an obligation and an opportunity to really work together across the industry to continue to really set these standards. And whether that's through, Agora or Swift or Guardian and all the other projects that are going on, we're doing both of these things in parallel because ultimately they have to be able to work together.
They have a partnership with Ripple as well,
how
BNY.
Are you bridging this the biggest technological gap between bringing DeFi and TradFi together?
Yeah, so Rebecca, I think that we've started at 2021 when we did Aave Arc together, when you were at Aave, and I think that at the end of the day, the journey that we started back then. So Aave Arc was, I would say, the first project around DeFi back in 2021 that was really catered
Talking about
the
Aave, the crypto
client. And what we identified at that point in time is that for any intermediary that basically has some license obligations, whether money transmission, trust, banking, the compliance element and then the permissionless nature of DeFi were not really resolved, right? And we created basically a permission level on top of permissionless DeFi that solved that. Now, kind of fast forward to today, we have a bunch of projects in flight that are integrating DeFi and also providing the compliance level layer for DeFi, targeting the institutional market. I would say that main appetite right now over there is coming from the large fintechs, like the names that were mentioned here before, that they are, whether it's like the Stripes, the Revoluts of the world, etc., that they're already digital ready. I mean, they already have wallets, they already have like sizable amount of users in the tens of millions of users that own crypto assets and specifically stablecoins, and they want to figure out how do they now leveraging Aave, Morpho, Uniswap, all those things to basically give their clients better, more robust access to those markets. The way that we do it is basically twofold. The first one is really creating adopters and infrastructure for them that allows them to interact with those markets through a secure API. So something that we didn't talk about over here is actually the security element of accessing DeFi. Some of the questions over there is like, how do you know that you are accessing the right DeFi smart contract? How do you know that you're sending the right transaction? How do you have the right permission level and all the approvals that are needed to send a transaction? So we basically solve all that for them. We call it a native DeFi solution, so it gives them all the security that we were able to figure out for them for their CeFi interactions. And the second element is, which is actually still in the works, and I think that this is where a lot of collaboration is happening right now with the regulators, is really solidifying the approach around the compliance and kind of how do we KYC and how do we making sure that there is no illicit financial activity within those protocols, which is basically, if I'm now doing a swap on Uniswap, how do I know that the other guy, that the counterparty on the other side is not from North Korea, right, or some kind of OFAC sanctioned entity that if I own MTLs, e-money license, trust, that will be a huge issue. So, so for that, there are a few approaches. There are some of the traditional approaches that we've taken, like whitelisting, and now we actually have a team that is working on kind of the next iteration of that is using on-chain identity. And we think that on-chain identity, that is just like, a much broader component within the regulatory landscape that is now being looked at across pretty much like every regulator globally, bounded into that utility is going to actually unlock this for both retail, institutional, and probably will solve that in the most elegant and technologically native way.
Yeah. One quick anecdote before I turn it over to you, just about Aave Arc, which is from a compliance perspective, back 5 years ago now, we used one of the blockchain analytics companies to do an analysis of the smart contract pool, of all the assets that were in the pool, and to see what the connection was to any wallets that were associated with illicit finance. It was very, very low, and so we were able to sort of put that out there. And I just went back to the same blockchain analytics company maybe a month ago to ask about it, and the guy that I know there very well said, you were the only people to ask for something like this 5 years ago, and now all we get is banks asking for the same type of analyses. So, everything old is new again, and Aave Arc was a bit before its time. But Jackie, tell us about technological.
It's great. I don't think that there is technology as holding people back today. I think it's knowledge and ability to execute around building. And so on the knowledge side, I'd say core teams of financial services are not geared to have the insight and judgment to understand what's being built on a blockchain and how the products work. And so it's hard to both regulate or oversee something as a financial institution when you truly don't understand it. And so the knowledge gap, I'd say, is pretty extreme. And we've been doing crypto for years, and I think one of the things our regulators felt comfortable with is that we understood the products that were on our rails. And so when people were claiming they were being debanked, you could come to Lead Bank, and we were able to work with you because we actually understood the products and had the confidence of the FDIC and the Fed. I'd say the second issue around ability to execute, Michael made the reference about the velocity of the way things are being built and executed on chain. You have to be able to build and execute with engineers that can work in real time and have very quick sprint cycles in order to be able to operate in this dynamic environment. And I'd say a lot of financial institutions don't have that, and scale doesn't matter. Sometimes you can do more with 5 engineers than you can 10,000. And so it's more an issue of how do companies run in financial services where you have 50% of the market cap plus being 50 years older and more. And so a lot of these companies are going to have to reorient around velocity. And so the only real technical issue I've seen in the last few years is that around 24/7, 365, which Jennifer referenced. But having said that, you could adjust around that so that you could manage it and be able to execute within an institution so that you actually could send and release within an institution 24/7, 365. And so that's existed. It's just something that an institution had to build against until you were actually able to use Fed windows that are 24/7, 365, which you can today. And I also think now most companies are quite comfortable with the windows that exist. It's not optimal. So I'd say like that would be the one tweak I would make to make sure that the liquidity is able to be managed and all the counterparties are able to be managed across a dynamic perspective of what 24/7 looks like. You don't have consistency in all the counterparties that exist today. And I'd say companies like IntraFi as an example, or the institutions that federate bank deposits, or even on the flip side, core providers, which aren't 24/7 oriented in their mindset of how they do things. And so, my summary would be there isn't a technological problem today. It's a capability, not a technology.
I love that, Sergey.
Yeah, sure. So I heavily echo what Michael described. We are in similar situations with a lot of users. And I think there is a big hurdle to clear there in the traditional institutional world of integrating their existing systems with the chains. I think there's really three problems to solve. There's that first problem of the correct integration of the existing systems for books and records purposes, compliance purposes, key management purposes, all these different purposes with the chain, so that the large existing tech investment that was made by there's all these jokes about how banks still run on COBOL. Yeah, that's true. They're still going to run on all this stuff. So you have to make all of that compatible, and you have to make it compatible in an open standard. So you have to make it compatible in a way where, to Jackie's point, you can get 5 engineers to do it successfully themselves. Then the next problem really is, how does the transaction actually work? So, okay, I've synchronized my internal books and records requirements, systems, accounting system, whatever system, and now I have to do a transaction. How's that transaction going to work? How does that operate? What information does it carry along? What does it prove to regulators, and so on? And then the final point where we started mentioning Aave, the new version of ARC is Aave Horizon, which Chainlink is actually the main technology provider for, powering it for cross-chain compliance and a whole bunch of other things. That's where you have a model similar to what you have in banking, where the destination is responsible for making sure that things are a certain way, for making sure that they're not dealing with certain parties, that the liquidity pools work in a certain way. So then the third problem is, how do you get this DeFi community that historically has been completely disconnected from any regulatory anything to meet regulatory standards? And the answer to that is smart contracts, right? So you write smart contracts which automate compliance. You write smart contracts that automate the proving of things to the counterparty as well as to the regulator as well as to the DeFi team. And so that third problem requires a set of on-chain smart contract standards for compliance, for cross-chain connectivity, and for data into that cross-chain and compliance set of contracts. And then all of that will have to work together, where you'll have to have the existing systems properly synchronized with chains to meet their requirements. You'll have to have the transaction that goes across chains to be properly formed and convey the right information to the receiving chain, and to store the right information in all kinds of places that regulators and counterparties need to look to be sure that their transaction is correct and reliable. And then you need the destination of the transaction, in this case, the DeFi protocols, to have what's called regulated DeFi variant. So the reason you have like Aave and Aave Horizon is because you're not going to make Aave work this way. You need to make a separate version. And so all the DeFi folks need to make these separate parallel versions that are able to interact with all this regulated capital. That's called regulated DeFi. Seems to be that's what we're discussing here, which is kind of amazing. A year ago, I wouldn't have imagined. If you told me a year ago you're going to be at the Fed discussing regulated DeFi, I'd be right, Michael? Yeah. It's a crazy idea, isn't it?
No, I remember what we discussed 2 years ago, a year ago, yeah.
A year ago, right? 2 years ago, maybe, who knows? But sorry, it's a good thing. It's my way of saying it's a good thing. Thank you. So you have to get all three of those things to work. You have to get all three of them to happen. And then it'll all be lots of fun and a blast. And DeFi gets you 8% to 15% on the US dollar. So I can almost guarantee you that when you open the floodgates for people to get that type of yield on the US dollar in a compliant, regulated way, I mean, the yield will go down, but it'll still be high. It'll still be very high.
It's good. It's good that I'm a moderator, not a panelist, because I'm not sure I believe that there should be parallel DeFi systems, but we can talk about that off stage. Because I also think, to your point, it will take away a lot of the benefits of DeFi, including the yield and things like that. I think there are other both technological and compliance solutions we can be thinking about and putting into place. But before we move on to the concept of stablecoins and tokenized deposits, which are actually critically important in DeFi, in all good symbiotic relationships, people give a little bit. It's rarely 50-50. And so the question I have for everybody, and this is just like a quick, which is, does DeFi need to come 90 and TradFi comes 10? What's the give and take that we expect to see? Jackie, do you want to?
I'll start. We've worked with a lot of digital asset companies for a few years, and I'd say the one thing that has evolved but still needs more sophistication around it is that willingness to actually follow US banking law. And so, like a lot of companies that were debanked, there's different qualities of what they were willing to do. Some of them were just young and they worked with a bank that had no financial experience, and so they decided to pull back from the digital asset space. Like, that's legit if you don't have the team that's able to do it. But there are a lot of companies that are young and developing that if you actually had to go through the filings that are legally required as a US bank, they are somewhere on one end of the spectrum, which is grossly negligent, or on the other end of the spectrum, just unsophisticated and evolving. And that's not everybody. It's just a group of companies that are just young, developing, trying to grow as fast as possible. And they're just less willing to do what needs to be done in order to operate within the system. And so I have seen an evolution in the last few years where there was this incredible libertarian perspective about how people were going to operate in the DeFi world. And that has evolved, thankfully, where people have understood, and it was probably with the failures around Signature and Silvergate, that crypto companies actually said, like, oh my God, we're like reliant on the banking system. Like, our money markets are relying, our liquidity flows are reliant, so we have to step up our game. And I do think they made incredible strides. And there are some amazing companies in the space that are rock stars in compliance and everything they're supposed to do. But when you have an ecosystem of startups that is highly geared to growth, they hopefully will like hire consultants and go get people who can help them build the bridges in order to onboard appropriately into the financial system. And I think that's probably the thing that requires the most work. And people are largely receptive, not everyone is, but people are largely receptive to it.
Yeah, and as a transition, that was a good transition into this concept of stablecoins and tokenized deposits. And I know there's a separate stablecoin panel, but stablecoins are so critically important in DeFi because most traditional digital assets are very volatile. They don't always have a stable price. There can be large movements, as we've seen even over the last couple of weeks, and stablecoins usually are used as collateral for a lot of borrowing transactions on things like Aave and the like. And so you can't ignore how important stablecoins are, and what Jackie was talking about. Even with Signature and Silvergate, you were talking about centralized digital asset companies, but even when you have something like a depeg of a stablecoin, it can have pretty significant ramifications cascading through these permissionless systems as well. But Jennifer, to start, and I think this is really important because there are a lot of misconceptions on it, what are the benefits of tokenized deposits versus stablecoins? So that's the first part of the question. I'd say, what are the main differences? And then how do you see tokenized deposits being used for payments in a permissionless system, if possible?
Yeah, absolutely. So tokenized deposit, we think of that as cash in the bank, right? So it is a digital representation of a bank deposit. And so that stays at the bank. And so that stays within the walls of BNY as an example. And so the benefits of that are certainly cost efficiency, speed, but also liquidity optimization. You know, still one of the biggest problem statements that exists today in the payments industry is around optimizing your liquidity and reducing trapped cash and really reducing settlement risk. And so the tokenized deposits really help you do those things inside the wall of a bank. But then you have a stablecoin. So stablecoin is, think of that as cash outside the bank. It is backed by some form of collateral, cash, T-bills, what have you, but that can traverse across multiple chains and multiple systems. So we would see that existing alongside other forms of fiat and other forms of existing currency today. So there's a number of use cases. I think both are equally important, but they do different things.
That makes sense. So Sergey, obviously what Chainlink does in terms of pulling data and feeding it into, I'd say, the majority of the DeFi ecosystem makes sense from a stablecoin perspective, but how do you think about doing data feeds for tokenized deposits, especially when the deposits are sitting at different banks?
So Chainlink tries to aggregate data from multiple sources whenever possible. It's one of the reasons the system now secures approximately $100 billion in US dollars. And some of the bigger users have tens of billions of dollars. It's because the data is aggregated from multiple sources in various fault-tolerant ways. With tokenized deposits and these types of things and proof of reserves, you often only have one source of the data. So you can't aggregate across multiple sources. You can create some additional checks. You can do something called securement, where once data proves that the reserves are there, you can decide if something should be minted or not. And this stops cases of over-minting completely. That becomes impossible because the contract itself is responsible for checking whether or not the reserves exist. It's not a people-driven process anymore. It's a smart contract driven check. But the data is often only as good as the sources that you can get. And in the case of tokenized deposits, stablecoins, in the cases of more and more real-world assets, the data is often coming from a single source. And so people need to understand the risks that they're taking. There are risk frameworks like the Digital Asset Security Control Principles. Let's say that 5 times faster. DAS-CP. So that's an interesting risk framework where you're considering all the different aspects of risk, the on-chain contract risk, the oracle risk, the data source risk. But generally speaking, I think what's going to be the most useful is that when there's a stable coin or a tokenized deposit or a real-world asset, there's a way to create transparency for the market, right? So the market knows this tokenized deposit is guaranteed by this bank or this custodian in this class of account, with this data source being the only data source, right? And we already provide that information about our proof of reserves for stablecoins, and then the market can make their own risk decisions, right? So the best version of this is actually when you can provide what we call proof of liabilities, proof of solvency, other proofs of the status of the underlying banking partner or banking system. And I think personally that the more information that you provide about an underlying tokenized deposit, stablecoin, real-world asset, and once you provide that to a market that's sufficiently developed, where people are assessing risk because there's enough value in there to care about risk, well, then the stablecoins and the tokenized deposits and the real-world asset that prove things at a higher level and are actually built in a more de-risked way will be more attractive, right? So that's just that's the blanket assumption we have. And so our goal is to build systems that, just like blockchains create transparencies within the block, we want to create transparency of all the corresponding systems that put the information into the block, such as the data source in this example.
Makes sense. A few different questions, and I want to make sure there are really good audience questions that are coming in through the Slido, so I'm definitely going to save time for those. But Jackie, 2 different pieces. One, can we ever use tokenized deposits as collateral in DeFi? And two, can you ever see banks plugging into DeFi for liquidity provision services?
I think there's always an always. I think tokenized deposits, just in the way that, ACH is a messaging protocol that was started 50 plus years ago, tokenized deposits will be, messaging protocol for storing banks. It's as simple as that. Like, money is largely digital today. Like, the definition even of what fintech is largely blurred today because, it's a digital manifestation of money and the movement, storage of money. And so as it relates to tokenized deposits, it's really just advancing digital technology around what a deposit is and adding modern technology around messaging, identity, and programmability around the idea of a deposit. And so I think it's a technology that's going to be used. I think we started to see it, BlackRock, when they launched their ETF, was probably not tokenized deposits, but you could see the train coming down the line when you started to see asset classes get tokenized. And so it's just a matter of turning any kind of asset class into a digital messaging protocol. And so I think banks are going to use it broadly as a technology. How long that takes, say, is a massive question just because they don't have engineers. And they'll probably start with outsourced technology of other infrastructure providers.
Yeah, and I was going to say, Michael, you probably have something to say about how to bring this all together, too.
Yeah, I mean, I actually have some maybe slightly controversial observation on all this. We've been engaged with both stablecoins and tokenized deposits for the last couple of years. Currently 10% of all USDC and USDT is actually going through Fireblocks, so we have pretty good statistics. But we've also been engaged with quite a few banks on tokenized deposit projects since 2022, for example, with ANZ and the National Australian Bank in Australia. The main issue that I see with tokenized deposits on public blockchains, there are successful projects on private blockchains, like the JPMorgan coin, right? And back in the days, there was the signature that was also a tokenized deposit. On public blockchains, it's actually unclear what happens when when it goes from first party to third party, and what is the liability of a bank. It's actually not being established, and that killed, from what I've seen, every project or every bank project that was trying to do tokenized deposit on a public blockchain. Now, this is not a technological issue. It's a regulatory question that no one knows how to answer today. And that actually, I think, basically puts the true limitation of how tokenized deposits can interact with the DeFi primitives that we have today.
I agree. As a lawyer, the regulatory sirens were going off when I thought about how could we use tokenized deposits in DeFi. Okay, so to make sure we have time for these few questions that we've gotten, which are great, I just want to finish off going down the panel as quickly and concisely as you can say it. What are your recommendations for the Fed to prepare for the payments landscape as it evolves to converge with DeFi?
Yeah, so I would make the existing Fed infrastructure compatible with the stablecoin, tokenized deposit, and other payments infrastructure. I would make sure, I would ask the Fed to think about making the guidance very clear on what the risks are in relation to stablecoins, tokenized deposits, and these things, so that the payment landscape can grow, because the payment landscape represents essentially the buy side of the digital asset economy. And then the buy side makes the sell side, the issuance side, that makes the tokenized funds more attracted, right? So I would look to make your existing infrastructure compatible, and I would look to create clear guidance that manages risk appropriately to make sure that the stablecoin and tokenized deposit, the payment side of the digital asset economy, can grow successfully, and can grow successfully out of the United States more than anywhere else.
I would actually tread carefully and watch and iterate as we go over the next few years. There's two reasons. One, the intersection of AI, fraud, reversibility. We are at a moment in time with AI where we don't actually know what is going to happen from a fraud point of view. And I think the reversibility and the opportunity for fraud vectors is rather extreme. And so I think, you know, it's always going to be great until the moment when on a wide scale spectrum, you know, like everybody's grandma was just defrauded because of deepfakes. And so I think this intersection of trying to be super innovative, enabling crypto and new payments technologies and AI is worthy of just being incredibly, incredibly cautious. And I know that's very like nanny moment for everyone in the room since we're at an innovation conference. I just think the better strategy is slower and steady and watching it as opposed to trying to explosively change everything and not having managed this intersection of AI, which I think is still largely untested, unknown, and asymmetric risk into the system.
I tend to agree with both observations. The only thing that I would say is that there is still an economic question that comes quite a lot, especially in discussions with banks, right? That it's a question around how, well, the Federal Reserve eventually is responsible for the banking system in the United States, and at the end of the day, there is an economic question that comes pretty often with central banks around how stablecoins can, or can impact the credit in the overall system. And I think that this question also needs to be kind of further researched, and that there will be a clear guidance and opinion on how this all going to play out, because clearly it may or may not have big business model implications for banks.
Yeah, and I would agree with everything you said. I think 4 things. First is just continuing to upgrade the existing infrastructure, 24/7, et cetera. The second is standards and setting standards across formatting, just continuing that work, I think is really important as you look to integrate. I think third, Jackie, you said it is on fraud. Faster payments result, banks have to, and everybody else in the market has to adjust more quickly, right, to assess fraud and to make fraud decisions. So I think continuing to really lean into the fraud topic is very, very important. And then I think finally, and we talked a little bit about this earlier, is look, faster payments and stablecoins and tokenized deposits, like you can access liquidity faster, but then you have to have the associated kind of standards around stablecoin redemption as well as liquidity policy to support that.
Amazing. Okay, there's actually one question for everybody, and we have a little over 5 minutes left. So concise answers, but everybody gets a last question. So this question is from Congressman Foster for Sergey. Your internal Oracle syncing network does not use permissionless blockchain. Does this make you a trusted third party and single point of failure?
Yeah, so our system uses multiple independent nodes, just like blockchains do, and it does work with public chains as well as private chains. Generally speaking, those nodes can be configured into groups for a specific network that meets the requirements of a private user or a public user. So for example, if the Fed needed an Oracle network to do something specific, the Fed could choose the nodes and the conditions under which the nodes operate for the Fed-specific Oracle network. And that would be the risk that they choose in configuring that Oracle network. The public Oracle networks are configured similarly to how public chains are configured, with many node operators. Many of the node operators of Chainlink Oracle networks are also the node operators of any public chain nodes. So the Oracle network, there's over 1,000 Oracle networks running in the Chainlink standard. So you can configure an Oracle network to meet your requirements for compliance, location of the nodes, and these different requirements.
Okay. Jennifer, this question is for you. How would a revocable mechanism realistically work without undermining the decentralized, trustless nature of blockchain networks?
Yeah,
this is an easy one just to...
Right, just no problem. I mean, that's exactly the question. I mean, technically, right, Fed chips are final, but you can in fact like revoke them if there's an issue. You can call the bank, et cetera. And so there is a process that exists to protect consumers and to protect banks and corporations around that. And we're just going to have to continue to partner in the industry to think about how we answer this exact question in the digital asset infrastructure.
Makes sense. Although I find reversing bank transactions is not as easy as just calling your bank. Okay. Jackie, this is for you. In TradFi, settlement finality depends on trust in institutions, and in DeFi, it depends on trust in code. As they converge, who should provide the trust anchors?
Oh, I love that.
I love this question.
I feel like we should have Camus in the room to answer some of these questions. So, I mean, trust is trust, and I think every institution is responsible for their own code, regardless of whether they're theoretically supposed to be a traditional financial institution or a modern digital asset company. I don't think there's any difference. Like, and I think over time this distinction will go away. I made the comment earlier, like, what is an ACH? What is any kind of money movement? It's digital money movement that's sent through messaging systems. And so this distinction is largely going to disappear as digital asset regulation gets instilled into the US economy and US financial institutions, because it will have a different but somewhat comparable set of regulations, and it'll operate with KYC, it'll operate with a lot of the same trust dynamics that are established. Now, hopefully, the biggest change will be using modern systems like modern identification systems and modern technologies that we have today. I think that's still a problem just because so many institutions, like it took 10 years to be able to use DocuSign at so many institutions. And like when you get those red emails from banks that say this email's from external, like stuff like that as an emblematic kind of funny example will have to evolve so that identity can be deployed in a modern way. I mean, it exists today, and we have CEOs in this room who are experts at identity. And so it's up to institutions today to be able to adopt those rules. And I also find that anyone who says, oh, I can't do that because it's not compliant, it's a crock. It's like a total crock. When you actually go push on financial institutions' compliance teams, you're like, show me that law. Show it to me. It's not true. And somehow nobody edited out the garbage to deal with modern systems of today. And so I think when people edit and put in modern identity, you're going to be able to have modern versions of trust.
Great. Whenever people use compliant, when we're talking about DeFi, I'm always like, compliant with what? Like, just tell me with what. Okay, Michael, last question. What are practical strategies that you've seen that will close the gap between legacy payment systems, tech, and processes with digital assets?
In 1 minute.
Yeah, in 1 minute. Very simple. Also a simple question to close it out.
Okay. It's definitely like, a 5-hour seminar. But look, at the end of the day, I think that the truth is that there is just a lot of education that needs to go to the teams that are currently working on that in the traditional financial space. And I think that there are a bunch of enterprise-grade partners, providers, vendors, however you want to call us, whether it's like us, Chainlink, Chainalysis, a lot of folks that have built this muscle over the years, worked with institutions, and invested just like hours over hours over hours to basically bring the operations team, the compliance team, the technology teams, all those folks, and educate them on that. And it's also extremely important to bring the executive team on board in those organizations to understand it. I would actually argue that in most cases the final blocker is basically kind of getting the CFO, the chief risk officer, those guys over the line. And by the way, the most important thing is actually to give them. That's what I actually tell now all the people, like, download the wallet, download the MetaMask on your phone, and then I send them USDC, and then I tell them to send me back the USDC, and that's, I think, like, where the light bulbs go.
It's a reversible transaction. Just
kidding. It is a reversible transaction, yeah.
Well, thank you very much again to the Fed and Governor Waller and everyone here who put this together. Thank you to these amazing panelists who are clearly experts in everything they're working on and creating the bridges that we need to bring TradFi and DeFi together.
So a big thank you.
We're going to have more in a second. Stay with me. I'm going to give you the XRP announcement as well.
To Rebecca and our panelists. So I have to share that if I had created a bingo card for today, I would not have put COBOL on it. So thanks to Sergey for bringing that up. So we're going to start with a 30-minute break before our next panel. There's light refreshments out just.
Okay, we're going to have another panel in 30 minutes time. That panel will be stablecoin use cases, business models. Moderator will be Kyle Samani, Multicoin Capital. We might get mention of RLUSD here. We've got Charles, who's a co-founder and CEO of Paxos. Remember, they actually minted 400 trillion. So I wonder if they will, and they had to reverse that. I wonder if they will discuss that. We've got Tim Spence, Fifth Third Bank. We've got Fernando Terres, CEO of DollarApp. And Heth Tarbet, president of Circle. We all know about Circle. We covered their IPO. We invested in it early. So this is going to resume shortly. Let me just make sure that's all live. There we go. So I'm going to keep that, but I'm going to mute. Yeah, make sure it's muted. That's good. I want to finish the video on the deep dive of Evernoth's 1 billion XRP bet, a new kind of treasury company. So what I'm going to do is ask everyone, if you can take a second to please hit the like button and subscribe if you haven't done so already. What I might do is take a short break myself so I can have some breakfast, even though it's 3:20. Oh God, look at that. Did everyone see it? I've got ladybugs they're hibernating in this room for some reason, and one just went across the camera. That was crazy. So I might take a break myself so I can have some breakfast, even though it's 3:25 p.m. here in the UK. What I'm going to do probably is put a. I also need to see if I will be able to cover all these events. So look, stay with me. I'm going to replay the stream for anyone who missed the Fed speech beginning. Then we'll be back when it's live as well. They didn't mention XRP, they didn't mention Ripple, but I'm still very glad we're covering this because it shows you that the Fed, I mean, who would have thought that a year ago we'll be tuning in to a Fed meeting where all they're talking about is crypto regulations and DeFi. I mean, they talked a lot about payments. There's going to be more coming from payments as well, and then we're going to be hearing from BlackRock and stuff later in today's event. So it's just gives me even more confidence in my investments. Especially when they start talking about payments and how they need to start integrating it and how they need to give access to these companies with new wallets and Fed and the Fed needs to get involved and make it easy for these companies. It's all very bullish stuff. So I'll give you more analysis later. What I'm going to do actually, before we come back to XRP story, is I might put this from when Fed Waller starts speaking, put a countdown on the screen, and then I'll be back after I've had something to eat and I know if I can cover the whole event. So let me go back to here. This will be a replay. I'll put a replay live on here. So let me put this over here. And then let me put a countdown. This might change, might come back earlier. Let me do this. If you guys missed the Fed speech, I'm going to put that there now. There's going to be more coming up, but they're going for a break, so I might also go. Let me put this in, countdown here. Okay, I'll be back shortly. Let me just. Okay. They need to give us an XRP announcement. Yes. Ladybird. Yes, Ladybird. Do you guys see the Ladybird? I'm sitting on about $81 at 12. Okay, I'll be back. Let me play this for you again. This is Fed Waller's speech. I'll be back very shortly, so stay with us. I will have that playing over there. Okay. Let me put, and I'm also going to talk about Chris Larsen when I come back about the fact that he's been selling or transferring. I'll explain that. I heard some of you talking about that. We'll also come back with that Evernorth's $1 billion XRP bet as well. Let me go over here. Okay, thanks for staying with me. If you haven't got the newsletter yet as well, do consider grabbing the newsletter. That is the link in the live chat. That has all the XRP information on from today as well. If anyone else needs to go, keep the stream running. Go grab yourself a coffee, some lunch, and then we'll be back. If no one's seen the Fed speech, here it is, and we'll be back soon.
Good morning. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that had come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption, don't avoid it. As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution. A number of technological advances are transforming the payment system. Stablecoins and tokenized assets making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation in our market economy. The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need. The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services provided by the reserve banks obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we're discussing today, the Fed was running trains on steel rails to deliver and clear paper checks traveling across the country. FedWire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies. While this is a good start, I believe we can and should do more to support those actively transforming the payment system. To that end, I have asked Federal Reserve staff to explore the idea of what I'm calling a payment account. Today, Federal Reserve banks provide access to master accounts and financial services to legally eligible entities following our guidelines for evaluating account and services requests. The payment account would be available to all institutions that are legally eligible for an account and would be beneficial for those focused primarily on payment innovations. This payment account concept would be targeted to provide basic Federal Reserve payment services to legally eligible institutions that right now conduct payment services primarily through a third-party bank that has a full-fledged master account. There are many eligible firms engaged in substantial payments activities that may not want or need all the bells and whistles of a full-fledged master account, or access to the full suite of Federal Reserve financial services to successfully innovate and provide services to their customers. The idea is to tailor the services of these new accounts to the needs of these firms and risks they present to the Federal Reserve banks and the payment system. Accordingly, and importantly, these lower risk payment accounts would have a streamlined timeline for review. Payment innovation moves fast and the Federal Reserve needs to keep up. To be more concrete, let me describe a possible prototype that I've been considering for this type of payment account, or as I sometimes call it, a skinny master account. The account would provide access to the Federal Reserve payment rails while controlling for various risks to the Federal Reserve and the payment system. To control the size of the accounts and associated impacts on the Fed's balance sheet, the Reserve banks would not pay interest on balances in a payment account, and balance caps may be imposed. These accounts would not have daylight overdraft privileges. If the balance in the account hits zero, payments will be rejected. They would not be eligible for discount window borrowing or have access to all Federal Reserve payment services for which the Reserve banks cannot control the risk of daylight overdrafts. Now, I want to be clear that this is just a prototype idea to provide some clarity on how things could change. The upshot is that, in my view, the payments landscape, as well as the types of providers, has evolved dramatically in recent years, and accordingly, a new payments account would better reflect this new reality. As Federal Reserve staff examine this idea, we will engage with all interested stakeholders to hear their perspectives on the benefits and drawbacks to this approach. So you will be hearing more about this shortly. So let me wrap up here so we can get to the really exciting part of the conference, not me blabbering, which is about innovation in the future of payments. So thank you to the panelists who took the time to participate, those in the audience who agreed to be here, and the many others watching online. And a special thanks to Fed staff who moved incredibly fast to pull this event together and fit it into a very busy fall schedule for the Fed. So on with the conference, and thank you for being here.
Thank you, Chris, for starting us off. So I'm going to introduce the first panelist to come on up while I give a few housekeeping items. All right, here they come. So as a reminder, Chris mentioned we are showing this online so that others that can't be here today can follow along with the exciting program that we have. We will also be using Slido. So when you came in, you should have received a folder. Within that folder, there is a QR code and link within it. We're going to ask that folks submit their questions for the panelists using Slido, and the question and answer window will be open throughout the whole panel to submit questions. You guys can come on up. Also, if you need wine.
Let me just, I'm back, but I need to go again because I did not leave enough time. So what I'm going to do is put Brad's speech from the other day on, and then we'll be back with the next panel. I'm actually going to make some lunch while this replay was running, but there wasn't enough time. I do want to keep the stream going because there's a lot going on today at the Fed. So thank you for everyone who's just still tuned in. Do keep it open in a secondary browser. If you haven't seen this content yet, do check it out. So we've got a lot today. We've got AI payments, stablecoin use cases, tokenized products, and it goes. And then we've got Chris Waller again, and it all ends at 3:45 Eastern time. So we've still got hours and hours of this. All are going to be very important at any point. There could be big announcements. And it's always great to be listening to all of this. So what I'm going to do is go to your comments. Bitcoin is having a very volatile day with all of these announcements going on. Let me see if I can bring our stream from the other day, Brad's. Let me see if I can bring Brad Garlinghouse back on the stage. He did a speech the other day. If you haven't watched it, it's worth watching. Let me see if I can bring it up. I think it's over here. Stay with me. I'm just going to see if I can find. Yeah, I don't know what's going on with these ladybugs. Another one's just they're hibernating in this room. I need to get rid of them. I just feel bad. What have I tried? I was trying to find Brad's speech from the other day. So he was talking at the World FinTech Week DC. That was an important speech from Brad Garlinghouse just a few days ago. So let me see if I can. Yeah, this is it. Yeah. And then we'll be back when it's live again, right after I grab some lunch. It's 3:40. I've had no breakfast today. Fed Governor Waller, Bitcoin back to 110. Sensei's on his tea break. He's patient and clear. Ladybug climbs his camera. It's a good sign. Thank you, James. I love it. Okay, let me put this on for you because this is a bit more interesting. So then let me do my timer again. So do stay with us. That should be good. Okay. Play this. Okay, I'll be back. The timer's on the screen, and we'll go back to that Fed meeting. Right now, there is a replay of Brad Garlinghouse's speech. Let me put this. Quality, there we go.
Conversation. Brad Garlinghouse, CEO of Ripple, an absolute powerhouse, I think, both in the digital asset space and now in the Washington, D.C. space as well.
A lot has changed. 1 year ago, I was on this stage, and I was thinking about how much has changed even in that year, and it's profound.
I mean, that's what happens when a new administration comes into town, particularly one that had such a stark difference in crypto. I do want to start, though, as a Capitol Hill reporter, back a little bit with market structure. Obviously, you were listening with the last panel and kind of their assessment on things. Kind of sounds like this might be able to get done, perhaps not this year. But I'm kind of curious what you've been hearing, because Ripple, again, has become such a major player, I think, in politics on the Hill. What is your read of the tea leaves?
Well, I think one of the outcomes of having been the tip of the spear in the Biden administration's attack on crypto through the SEC is it kind of elevated Ripple's position. Even a year ago, sitting on this different building but stage, the SEC at that time was appealing the loss, and we were kind of continuing down this journey of the attack on crypto. And so we and many others in the industry always got more active in Washington, and it's I think profound to have such a pro-crypto Congress. The Clarity Act passed the House with, I think, 78 Dems coming over to support a Republican bill, which I think is indicative of the desire for these technologies to be embraced. Ripple certainly will continue to be active. I don't know how to handicap the Senate, what's going on in the Senate with the Clarity Act, their version of the Clarity Act on the Senate side. I've listened to some of the earlier panels with interest on that. It's always hard to know, particularly during a government shutdown, like how that's going to play out. But look, I remain optimistic. The industry needs what Ripple has already achieved, which is clarity. And we had to get clarity through a $150 million lawsuit and a federal judge. But we think the whole industry should have that same clarity. And so we've been fighting for that, and we'll continue to do so.
Do you think when you talk with some of your folks on the Hill, does it seem like things are truly at the standstill that they are? Or is there still, do you still sense that there is bipartisan momentum to get this done?
I think there's some momentum. You know, I think getting anything done in Washington these days is always a little tricky, but this is a topic which never should have been partisan, in my opinion. Like, it's almost like saying one side's pro-email and another side's anti-email, or, you know, one's pro-HTTP and anti. It's like, these are technologies. We shouldn't, I think about those in a partisan way. Almost as Brent McIntosh said at the last panel, it's, you know, how are these technologies used is way more important. And I think sometimes we lose the plot and people get too caught up in, you know, some of the politics of it. But look, I'm still hopeful when you see that kind of bipartisan support in the House. And, you know, certainly, again, you're seeing leadership from Senator Alsobrook, Senator Gallego on the Dem side, and you're certainly seeing tons of leadership on the right. I still think there's a chance that happens this year.
And kind of staying in the politics realm for just a minute here. Obviously, Ripple is part of a large crypto group that has been playing a really key part in elections. I mean, I think last year it was $200 million spent in races across the country, currently has a war chest of, I think, $141 million the last time I saw. What is the strategy for the midterms? Fair shake.
Yes. So, well, I mean, Ripple has supported fair shake from the very beginning. And again, I would highlight the name. Like, the industry wants a fair shake. Like, this shouldn't be as, you know, polarizing. And I do think under the Gensler SEC, the industry was attacked. There wasn't any effort to provide clear rules of the road. And so what we have been asking for are those clear rules. I think Fair Shake, I mean, they should speak on their behalf. I'm not on the, you know, board or, you know, an operator within Fair Shake, but suffice it to say, they're continuing to execute the strategy that played out under the last election, which is we want to support pro-crypto candidates on the left and the right. I mean, ironically, despite this topic being, you know, somewhat right-leaning, the last election, Fair Shake supported more Dem candidates than they did our candidates. And I think that's actually a healthy thing, because again, this shouldn't have ever been, in my judgment, bipartisan. I think the Biden administration kind of made it partisan in a way that isn't good for the United States. If we want to be a leader in technologies that are redefining how infrastructure works around the globe, I agreed with Caitlin Long on the last panel, like, this is very global. The US leaned into that in the late 90s with the internet. We've leaned out in blockchain. Like, it doesn't make sense to me. But I think this administration obviously shifted that. Things like Fair Shake are shifting that. And I think Fair Shake was incredibly impactful. And we have, you know, a very pro-crypto Congress. And we hope to see the Clarity Act get moved forward.
Absolutely. I guess I just do wonder, because it does seem like on Capitol Hill, obviously a lot of finger pointing, you know, a number of folks are pointing the fingers at Democrats after this draft was leaked, saying this is a step too far. Are they really as pro-crypto as they seem? Does that mean that you're kind of maybe less inclined to support Dems, or does that mean even more support for Democratic candidates, especially those who have shown an interest in promoting crypto?
I'm not just saying this because I'm sitting in Washington on a stage in front of, I'm sure, reporters. I don't think about it as, are we supporting Dems or Republicans? I think about it as, we're supporting pro-crypto, pro-innovation candidates who want to see these technologies as they are around the globe. I mean, the United States is not leading in this. And there is an opportunity for the United States to lead. So I don't think about it as, you know, should it lean more R or more D? I think about it as keep leaning into pro-crypto candidates and educate both existing sitting congressional leaders and a next generation of congressional leaders. I mean, look, the reality is there is clearly a segmentation of age around all things crypto and blockchain. And there's no doubt in my mind that over an arc of time, the US will get this right. It's unfortunate that under the kind of Gensler regime, you know, I think we slowed things down and it made it very difficult. We pushed things offshore where ironically it's less regulated and there's fewer consumer protections, which just makes no sense.
And of course, when it comes to sort of the meat of this law, what we're trying to get into is a large part of it is what is a security, what is a commodity. Of course, as you mentioned, you went through a $150 million lawsuit to get some of that clarity for Ripple. But I'm wondering, as you look at the market, I mean, are there things that should be a security? Like, how do you sort of define what Ripple's product is and why it's not a security versus other products? Is anything a security?
Well, so I think to some degree, the whole lawsuit for Ripple was about what is Ripple, which is a privately funded company that raised venture capital and issued stock associated with that. Those are securities. What is XRP, which is a technology, an open source technology that is kind of native to our products. We use XRP in our product stack, but there are scores of other companies building in and around the XRP ecosystem. You know, people will say things like, well, XRP has a CEO. And I'm like, who is it? Ripple has a CEO. That's me. There's scores, if not 100 other CEOs building around the XRP ecosystem. And I think that's when I hear people say that, I think, okay, they're not educated about what's going on. And so we need to educate people. Obviously, you see that in a number of other tokens where there's a very distributed, very open source community. You know, people don't understand, Ripple does not control XRP. It is open source. There have been amendments passed to the XRP open source technology that we opposed. We were against them and they still passed. That's okay, that's open source technology. There's other things we have championed that have passed, but it takes 80% of the community approving those amendments, which Ripple doesn't have control of that. Mm-hmm.
And so, I mean, if you were to define kind of what's a commodity versus a security, how would you do that?
Yeah, I'm going to do everything I can to dodge that question up here. I mean, look, there is language that has been proposed. I happen to think that there's parts of the Clarity Act that passed the House that are quite constructive towards that clarity. I think some of the things that have been circulated, I'm like, okay, I don't actually get how that, well, look, for Ripple, the one thing we will be adamant and absolute about is whatever is, these draft comments that I see, it's like, well, we already won a court case by a federal judge, and if what you're writing gives the SEC an opportunity to bring another lawsuit against us, like, okay, wait, we can't support that. You can't take us back. And I think the industry needs what Ripple has already achieved. Mm-hmm. And what Ripple has done, and we've invested literally billions of dollars in the crypto industry broadly and tried to be a champion of the industry. We fought the SEC as a champion of the industry, and I think that we will continue to support it on a multi-chain basis. Those that I think approach it as there is somehow one token to rule them all, like that's not going to be the future of crypto and blockchain. In the same way there wasn't one browser or one search engine or one auction website, or I'm thinking back to when I got involved in technology in the late 90s.
I kind of feel like there's one auction website now, though. But that aside.
Well, I don't follow that category.
So mergers and acquisitions. I wanted to ask, because Ripple has a number of examples of companies that they have acquired in the stablecoin realm, in the sort of infrastructure realm. What is sort of the plan here? What's the thought process? What's the end goal?
Partly because of the shift, I think people still underestimate the U.S. as the largest economy in the world went from very strong headwinds to pretty strong tailwinds. Now we're still figuring out as an industry what do those tailwinds mean in the United States. And again, having the chief legal officer from Citibank, is an example of that shift. And I think he even talked about how it was very, very hard for them to engage this industry. This has been publicly reported, but I personally was debanked by Citibank during the last 4 years. And I think, happily we're past that stage. But I still think people underestimate the shift in those headwinds and tailwinds. And Ripple's thesis has been, okay, now is a time to really be aggressive about growth. And that is both organic growth and continuing to build. We're in the payments business, leveraging core technologies around blockchain and the XRP ledger around payments. We're in the custody business. We're in the stablecoin business. And then earlier this year, to your point around mergers and acquisitions, we spent $1.25 billion to buy Hidden Road, a prime broker, frankly, the largest non-bank prime broker out there. And we bought for $200 million, a stablecoin company called Rail, which was one of the leading stablecoin companies for the enterprise. So corporate treasury looking to use stablecoins to solve some of their internal movement of money, and that has been a great acquisition for us. So we're going to continue to play offense. I hope I have some more news on that very, very soon. And we think now is the time to invest, and that partly because of that macro shift in government policy for the United States.
Interesting. And when it comes to government policy right now, I know we touched on this a little bit the last panel, that there seem to be certain agencies that are kind of giving the green light, full speed ahead, but there are groups like the Fed that are maybe a little bit more tentative. And I'm wondering kind of what your experience has been so far. Do you think that things are going to change when we finally get open a few more openings on the Fed? What are your expectations? Where are we at now? What are your expectations for the next few years?
So I have two thoughts about that. One, and as much as I have enjoyed some of the panels here today, one of the things I would ask everyone to do, both reporters and otherwise, is to hold traditional finance accountable for, yes, I agree, the crypto industry should be held to the same standard around AML, KYC, OFAC compliance. Yes, yes, yes. And we should have the same access to infrastructure like a Fed master account. You can't say one and then combat the other. Like that's disingenuous, and it's hypocritical. And I think we all should call them out for being anti-competitive in that regard. So that's kind of one thought of just there should be a level playing field. And to the extent we're seeing people act in different ways. Now, the other part I would say, as much as a lot of the Fed managed by this administration, the federal government, not the Fed, as much as that shift has changed, I think some banks are still nervous until those changes are codified into law. The Genius Act obviously helped, and that unlocks, I think, I had meetings yesterday in New York City where banks that would not have talked to us 3 years ago are now leaning in and saying, how can we partner around this?
Around stablecoin.
Around stablecoins, for sure. And again, the delta there is the Genius Act has codified into law. We haven't seen that happen. I mean, again, Ripple has had, we fought the fight and we have clarity that XRP is not a security, but the industry doesn't have that, which I think creates challenges for some of the more conservative banking infrastructure, even though they're like, yeah, okay, we're interested, but are they really leaning in because they're worried that in 3 years from now there's another election, and is there a shift? I think that's a little bit too cautionary, because I think every day that goes by, even if without the Clarity Act in place, there's more and more firm policy positions that agencies are taking.
And so you think that even though there might be some sort of regulatory shift with the next administration, whoever they are, you're not going to go back to where we were at with Gary Gensler?
I definitely don't think that was. Frankly, I think that was a dark day for technology in the United States, and they were not acting with good intent. And I could spend a whole half an hour session just on that. And I mean, you had a federal judge. This is a quote. A federal judge said about the Gensler SEC, "They are not following a faithful allegiance to the law." Yeah, that's pretty damning for a federal judge who happened to be appointed by Obama, that they would come out and say that about a Biden SEC. I don't think we will go back to that. And frankly, I think the ship has sailed. I think that you can't put the genie back in the bottle in the United States. I don't think you really could, even though Biden may have tried with Gensler. But I think now that we are where we are, we are seeing many banks lean in. But for years, the U.S. was a frozen market.
Right.
I mean, one quick data point is 80% of Ripple's hiring between 2001 and 2004 was non-U.S. because that's where our customers were. Our customers around the world were leaning in. The customers in the U.S. were, we got to be careful.
And speaking of banks, I mean, Ripple has applied for a national bank charter.
Yes.
Can you just sort of give a brief overview? Any updates in that process? How are things going there?
I don't know the exact answer. I mean, look, I think it depends who you talk to. It's been a little disappointing to see some of the traditional banks start to lobby against things like that. It's like, look, if we want more stability, we want clear regulation, having a Fed master account actually is a net plus to that. You want to de-risk stablecoins, having Circle have a Fed master account, have Ripple have a Fed master account, that's actually a good thing. And held to the same regulatory standards as a bank. Great, we're in. We feel like we're already doing that. Ripple launched our stablecoin under a New York Trust license, which we feel like is the gold standard above what even others have done, because we are all about serving institutional money movement. And institutions aren't going to work with us unless we have really leaned into being compliance first.
Mm-hmm. And I know there have been some concerns raised from community banks who say, look, if you give, Ripple and others a bank charter or a master account, we're concerned that you're already going to see funding, trillions I think are projected to go from some of these smaller banks into crypto. There's a concern about a lack of capital. How do you respond to that?
There's nothing that stops community banks from leaning into these new technologies also. This is kind of the classic, people are afraid of innovation and the innovator's dilemma. And we shouldn't penalize customers, consumers, based upon it may be a particular community bank's unwillingness to lean into new technologies. That doesn't make sense to me. Like we should want community banks. If anything, it should be how do we provide clarity such that community banks can be served and leverage these technologies and compete with Citibank. Like that's a good thing. Right now, the community bank has to pay Citibank. I shouldn't pick on Citi. I like Brent a lot actually, but. Let's say HSBC, they're not represented here. But the big correspondent banks are making money from the community banks by actually being their correspondent bank to settle cross-border transactions.
Mm-hmm. I'm wondering too, kind of dipping back into market structure here for a second. I mean, if the Senate doesn't get stuffed on market structure, you've said that you've already seen this increased interest in things like stablecoin in the markets. I mean, does that kind of put a freeze on things? If there's no regulatory clarity coming from Congress this year, no certainty, is that going to make it that much harder for a lot of the digital asset space to gain traction with companies, gain traction with banks?
So I think you asked the question in kind of a black versus white, and I think about it as gray. It depends upon the bank. It depends.
That timer on the screen is still correct. We'll be back in 16 minutes, but what I'm going to change it to is the Fed have started speaking again. So that was a speech from Brad Garlinghouse, who was about to wrap up in 30 seconds anyway, from last week's event at DC FinTech Week. We covered it. I gave you my analysis. There is a video on it on this channel, but we're going back to the Fed at the Payment Innovation Conference, where another panel has just started. I'm in the middle of eating, so I'll be back when that timer ends. So stay with us on this stream, and then we'll come back to the Evernorth's $1 billion XRP bet. I want to finish telling you all about that, as well as how they have to purchase all that XRP on the open market, and the squeeze that can put on stock. So let me go back to here. This is live from the Fed. This is their conference. So yeah, 15 minutes. You can see it live on the screen. That's when we'll be back, and I'll be here. I'll be listening to this while I'm having my food. So keep this open. Here we go.
As a reminder, questions will be open during the entire panel. So please use Slido for submitting them. And now I'm going to introduce our moderator, Kyle Samani. Kyle is a co-founder and managing partner at Multicoin Capital, an investment firm that specializes in crypto assets, tokens, and blockchain companies. I'm now turning it over to Kyle. Thank you.
Awesome. Good morning, everyone. Thank you all so much for being here. Governor Waller, thank you so much for organizing everything for us all. In order to kick things off, it's probably good to do a quick round of intros. So gentlemen, please take it away.
Hi, my name is Chad Cascarilla. I'm the CEO and co-founder of Paxos. We are a blockchain infrastructure company that both provides crypto infrastructure as well as issuance infrastructure for stablecoins.
Tim Spence, Chairman and CEO of Fifth Third. pending our the closure of the merger that we recently announced with Comerica. Will be the 9th largest bank in the U.S. But apropos to this discussion, we are a much larger payment facilitators. We facilitate about $17 trillion a year in transactions, of which the Fifth Third branded business is the.
This is no longer Brad Gardinghouse from last week. This is literally minutes ago from the Fed. This is live, and I'll come back in 40 minutes. Someone asked, is this live? The previous one was Brad Gardinghouse from last week. Live show, I am live. But that was from last week. This is the Fed from literally minutes ago. So this is live.
In America, backed by the best investors in the world. And with more than 1 million users, we allow them to dollarize their capital, grow it, and be able to transact globally, leveraging on stablecoins. Prior to that, I was the leading crypto at Revolut, and I also held a prominent role in helping build its growth engine, as well as taking its path to profitability.
Heath Tarbert, president of Circle, we like to say the world's largest regulated stablecoin issuer. We're issuer of USDC, and we also have a number of other products and blockchain technology. In a prior life, I was assistant secretary of the Treasury for International Markets, a representative on the Financial Stability Board, and chairman of the CFTC.
All right, guys. So let's jump into this. I think the intended framing for this dialogue, this is really supposed to be a conversation about technology. On stage, we have an issuer, a bank, and an app. So I wanted to try and cover kind of all perspectives for all of this. We will jump in with you, Fernando, first. You are B2C directly and close to a lot of end users who are using stablecoins every day. What are you seeing in terms of demand, usage patterns, feedback, across Mexico versus Argentina and Brazil? And if it'd be really helpful if you could share one end-to-end journey that shows why it's simple, fast, and useful.
Cool. Effectively, we're live in 4 markets, which are Mexico, Argentina, Colombia, and Brazil. And the use cases are pretty different country by country. In some cases are more around the store of value idea. So imagine you're a Colombian person, you want to dollarize your savings. But there's also elements on the transactional side. So imagine you're a Mexican person living close to the border and you'd like to travel with your family to the US, right? And you want to be able to spend internationally. Or also if you're a backend engineer living in Buenos Aires and you want to work for a company in Europe, in the US, and receive your payroll. So those would be some of the use cases which are pretty consistent across all of the markets. When it comes to the flow of funds, so to speak, or how we structure it, we have locally regulated e-money licenses, or we partner with them. And then, of course, with our crypto entity, we execute the rest of the flow. We're also principal members of both MasterCard and Visa. So the way we try to run the company is having these pools of capital, sometimes in fiat, sometimes in blockchain, to be able to bridge the world, so that we as product people swallow the complexity, so we can give the customers the simplicity and the benefits without them having to go through the complexity.
And Fernando, follow up here. Based on that journey, I guess you've been iterating now for a while. What's been maybe one major change in product or go-to-market that you all have learned from hearing real feedback from customers? Well,
I guess the first one I kind of mentioned already. Like perhaps the intuition could have been just store of value, but it turns out that transactional matters, right? So that's one of the counterintuitive ones that allowed us to actually dip into the transactional piece of the equation, which is interesting because the more use case you can serve, the more times you can bring your product to the customer, right? And then the second one, which kind of correlates to this one, is the fact that many of our customers are actually on the mass affluent side of the equation. So people who travel, people who work in technology, in finance, people who save, who invest their capital. So probably traditionally, most of the fintechs in Latin America had gone after the bottom side of the pyramid in terms of wealth, and perhaps we're penetrating from the top. So starting with the top 30% of the demographic pyramid, I would say.
Got it. All right, next let's move maybe over to Tim. Tim, as a bank here, you offer a service, which is the utility and the benefit of stablecoins. What are some of the problems that your customers, either consumer and their enterprise finance treasury teams, are trying to solve right now?
That's a great question. And I think maybe I'll get there, but I want to make a couple of points here just based on some of the conversations we had on other panels, because I think it's instructive as we think about pathways for innovation, where to look. Like, one of the rules that we use at Fifth Third is don't unsolve solved problems, okay? And I was listening to the discussions about interoperability and discounts and otherwise, and I couldn't help to but think back to Thompson's banknote guide, which at least the folks from the Federal Reserve will remember existed in the U.S. during the free banking era prior to the presence of the Federal Reserve, where individual banks had to figure out how to discount notes that were issued by other people. And I think the end outcome there, the conclusion there, was that we were better off with a single currency that was valued at par. That would facilitate commerce. So our focus has been on looking at the solutions that are in the market and finding ways, whether it's through partnerships or just through introductions in places where we need to provide them, to utilize things that can become industry standards. So, our clients, when you look at the issues that they face, we're principally U.S. domestic. But we have a huge manufacturing base because the legacy footprint of the bank is Midwest and Southeast. So moving money across borders is a significant issue today. That's a problem that we solve by referring business to other banks. And as a matter of practice, another rule we try to follow is don't enable your competitors. So we have spent a great deal of time in the stablecoin ecosystem looking at ways in which we could utilize stablecoins to solve the interoperability issues and both the FX risk associated with the delay in clearance and the need to work through another financial institution to move money overseas. I think, and that, from my point of view, will be the first and most powerful use case for the Fifth Third brand. The more interesting things to me, though, have to do with infinite divisibility of stablecoins and the programmability and the things that we're going to be able to do through the business that we have as an infrastructure provider, a little bit like Jackie, to leading fintech companies and others, to help them function in a world where agentic commerce is a material share of the economy, and where we can do more and more, whether it's for compliance purposes or to prevent fraud, or just to facilitate the linkage between contractual terms and payment settlement with the programmability of stablecoins.
Next up, Tim, another follow-up for you here. Given a lot of these outcomes, how do y'all think about buying versus building?
Yeah, my view is there are a handful of truly global banks that probably would benefit from having their own stablecoin, like that facilitates book transfers. So if you're JPMorgan, if I were JPMorgan, I would be doing what JPMorgan's doing. But there are like 4,996 banks in the U.S. that aren't JPMorgan or Citigroup or Bank of America or Wells Fargo. And for the rest of us, it's important that we move towards something that approximates more of an industry standard solution. That's the way that you solve for interoperability from my perspective, as opposed to layering more technology onto it. It's also how you solve for adoption, right? The tech here is obviously better than 150-year-old payments rails. Like, forget COBOL for a minute. Imagine what the FedWire was originally built on, given the comments that Governor Waller made at the beginning of the session. What doesn't exist today in most cases is the governance, right? And the governance layer is a thing that multiple parties need to be able to agree on here. And then we need to be able to drive user adoption. Like, Zelle was late to the party in peer-to-peer transfers, but it dominates today in terms of total volumes. And the reason it dominates is there's a single brand. It is and a governance mechanism that is embedded into something like, I think they have 80% coverage in DDAs in the U.S. at this stage of the equation. And it therefore made it much easier for people who weren't in college and splitting pizzas to move on to a world where they were sending money P2P via an instant payment rail. And partnerships make that possible in a way that, going back to a world where we were issuing our own currency probably wouldn't.
All right, next up, let's move to Chad. Chad, from the issuer operator seat, when should a bank build, partner, or just distribute?
How about now? There we go. I think it's difficult for any individual bank to issue, just like Tim was mentioning here. Even for the largest banks, I think it becomes difficult because the same reason Tim also mentioned, he doesn't want to fund his competitors, that's one of his #1 rules. And I think you end up in a world where that would be the case if everyone started to use someone else's stablecoin. That's kind of the beauty of it, is that because it's not just contained on your own systems, but it's moving into other people's systems, you have to really create a value proposition to enable others to want to enable that. And so if you're the largest banks, you might be able to, but from everything I've seen, actually some of the largest firms all are trying to figure out how they can do this together. Maybe a la Zelle, and there's the Zelle bank effort. There's a global bank effort that was announced, I guess almost 2 weeks ago now. And so that's what we have seen is that, and I'd maybe mention a third point, which is there's a little bit of a skittishness because some of the large banks don't want to necessarily end up having their own token that could be facilitating a cross-border illicit activity, and that there could be brand risk from that perspective as well. So that has all, I think, ended up pushing institutions to try to think about how can they use something that is brand agnostic, that has the interoperability, that allows them to be able to capture the economics. And I think there are a number of different ways you can do that without having to build it yourself. Obviously, building it yourself could create brand recognition. It can create better economics if you're able to create a way in which the market would create widespread adoption. And that's where there is this push and pull of the network effect that's inevitable. Largely, stablecoins today, and I don't certainly believe this will be the case in 2 or 3 years, are for the crypto ecosystem. And so can you get it in all the wallets? Can you get it on all the exchanges? Can you get it in the DeFi protocols? Can you enable it to have the right on-ramps and off-ramps through all the other parts of the payment system? Visa, MasterCard, the merchant acquirers. That's a lot of different gating points, and all of those gates have to say, yes, we would like to be able to accept this. And that means you're not going to end up with thousands of stablecoins that will be a rail. I think you'll end up with maybe 2 to 5 stablecoins that could be a rail. You can end up with thousands of stablecoins that look like a prepaid debit card or a co-branded card. I'm old enough to remember MBNA, who basically built almost 20% of the credit card market based off of having, Notre Dame credit card. I had one of those too when I graduated. And so you can imagine having lots of choice, almost infinite level of divisibility because of the technology and because the Genius Act and blockchain have set standards and set interoperability. So I can see there being so many different types of stablecoins, but not really so many stablecoins that ultimately you will use on a global basis. And that's what I think every institution has to think about, no matter how big you are. Where do you want to be? Are you large enough to maybe try to make a run at that? And most institutions aren't, so how could you instead find a way to work cooperatively?
Can I add one thing to that? Because I think I totally agree with the point you were making. I was sitting in the audience earlier gritting my teeth at the term TradFi every time it comes up, because Fifth Third is an old bank, that's true, but it's the least interesting thing about us. So I am, at the moment, I'm going to propose that we go with scaled fi versus DeFi. At least there was one other bank in the room because there were some claps over here. And I know Jennifer feels the same way. But the point you're making, Charles, which I think is so critical, and the reason why we probably do need to arrive at a standard and have a couple of different networks, is in order to scale, you can't have an artisan model. Like, you have to have an industrial scale model. You have to have agreed upon governance principles. And you have to be able to support lots of different endpoints. And there's just no way to do that when you have so many different potential solutions in the market. So I totally agree.
Yeah, I'll just add my own little commentary. As someone who is a very active user of DeFi systems, I think most folks trying to get into the space don't appreciate the nuances of the complexity of the DeFi protocols and the on and off ramps and the wallets and making all those things work. It really is pretty difficult from a user experience perspective. All right, next up, we're going to Chad and Heath on this next one. What are the top 2 bottlenecks at the perimeter? So things like KYC AML, wallet UX, things of that nature. What are those 2 biggest bottlenecks? And then what's fixed and what do you think is going to change in the next couple of quarters?
You sure? I feel like we should give you a chance to talk.
All right. Well, my wife doesn't always say that. That's it. But so look, at a high level, when I think about frictions and sort of what are the things that are barriers to stablecoin use case, right? Or just using stablecoins, I'd say there are really two big buckets, two meta buckets. The first is the thing trusted, compliant, and transparent? In other words, do I need the Thompson's banknote guide or something like it to know whether or not I'm actually going to get my dollar back, right? I think the Genius Act largely solved.
I am back. I was listening. Just to remind everyone, this is live from the Fed. They are doing a day today where they're going, it's called the Payment Innovation Conference. So yeah, it's all about payments. We've had references to Ripple and XRP, not named yet, but right now, what's going on is the stablecoin use cases and business models. We've got Circle CEO, we've got Dollar App CEO, Fifth Bank CEO, and Paxos stablecoin CEO. So I'm going to go straight back live to it, and then we'll go on to that Ripple partnership deal, $1 billion worth of XRP being bought. Please do hit the like button. Please do subscribe. Thank you so much, 1917A Buckley, for giving away memberships. If you have just tuned in, make sure you're hitting the like and subscribing to win those free memberships. Here we go, back to the live conference from the Fed.
But we're not going to give you a Federal Reserve note. We're going to give you 50 euros. Would you be able to actually buy your dinner at Reagan with euros? It's a perfectly solid currency. It's an outstanding one. It holds its value. But it's not necessarily have utility in certain settings. And so two big barriers to utility and liquidity.
Crypto is pumping on this conference.
Was mentioned earlier, the banking rails. Making sure that you can move in and out of fiat currency back into something like a USDC or a Paxos stablecoin as quickly and seamlessly as possible. So Circle, for example, has spent years building out this network of reserve banks and partner banks for customers. In fact, we're pleased that Fifth Third is a part of that network. So that's the first thing. And then the second thing for barriers would be the blockchains themselves. USDC is natively on 28 different blockchains, but it's very difficult to move currencies among blockchains. We have something called the cross-chain transfer protocol. But again, if your stablecoin only works on one or two blockchains, again, that's another barrier point.
And maybe what I'll add is I maybe break it into two categories. One is some of the friction in the stablecoin world is how do you get back out of the stablecoin world. And he was describing a lot of those, especially when you live in a world where you have to move money 24/7. And so this adds quite a bit of complexity if you think about, well, someone shows up with a stablecoin, they want dollars, and it's 11:30 on a Friday. How do you make that possible? And there are plenty of examples of that. And then on the other hand, it could be, I'm in Asia and I'm putting money to work and I want to make sure that I'm able to get a stable coin. And you're tied to US banking hours. And so there's many different types of complexities around interacting with the traditional financial system while being able to have an effective stablecoin product that works. The second component is exactly what Kyle was describing, which is I'd say DeFi and crypto is still not abstracted away enough where it's solving just the problem as opposed to requiring you to actually understand the underlying mechanics. To date myself, I kind of think back to trying to get on the internet, and it was like trying to get on when there was this thing called Freenet. And you had to dial up and you put this receiver on a thing and you got some weird noises and you could get a little line of text that would come down. By the way, as absurd as that sounds, that's actually not that unusual when you kind of go through the DeFi ecosystem. And it really shouldn't be that way, or frankly, just in crypto in general. I think that'll all get abstracted away with great consumer products that allow you to solve a problem, just like, no one knows how the phone works, or at least
look at this, XRP
does,
pumping.
But yet everyone knows how to use it. Crypto, blockchain, DeFi, stablecoins need to be just like that, which is, I think, what Dollar App is, for instance, doing, which is just making it so I can solve my problem. Is I want to be able to move dollars, I want to be able to hold dollars, I want to be able to have it happen instantaneously. It needs to be that simple at all times. There are so many different complexities depending on exactly what your use case is for stablecoins still. And so I think those things are all problems that can be easily solved. People are working really hard at solving them, and I think that they will absolutely get there. There are large firms like PayPal, which launched a stablecoin several years ago, and they were one of the first to come out and say they wanted to launch it being a scaled financial institution. We don't want to call it, yes, you're welcome. And I don't think we call them TradFi, they're a real fintech company, really huge in terms of their scale. And they launched a stablecoin. And that's an example of someone being able to take this technology and be able to move it into the traditional system and be able to try to solve problems in a way that you couldn't otherwise. That's how I look at what can happen here.
All right. Next, I'm going Heath. You got a solo one. What are some programmable features, maybe things like allow list, conditional transfers, and others that are going to make stables invisible in workflows in the next 6 to 12 months? Hopefully, we can overcome some of these challenges.
Yeah, the whole goal, I was thinking about this the other day, and I remember about 20 years ago, you would talk to someone, a family member, and you'd say, well, we should go out, and we should buy this thing, and someone would say, well, I'm going to go on the internet and buy it, right? We don't say that anymore. We just buy it. It's just assumed. And so we're going to get to a point where stablecoins themselves are just floating around like any other form of electronic money, like credit cards, debit cards, most of which are, by the way, are not legal tender. And so what are some of the programmable use cases that sort of we're thinking about? You know, Circle is focused on all use cases, but particularly thinking about enterprises.
Crypto is pumping,
right?
guys,
So
on this conference. Please do hit the
overseas,
like button. Please do
let's just say,
subscribe.
a Korean manufacturer who wants to sell goods overseas to Latin America. It takes 5 days for the money to move, and sometimes takes, is extremely costly. So you can imagine a scenario where all of this is built in, and the moment the goods leave the factory floor, through smart contract technology and programmability, the money is automatically sent, or when it's received on the other end. So trade finance and just trade in general is something that could be supercharged through stablecoins and the programmability that it offers. Another thing we're seeing is treasury functions, right? And even for scaled financial institutions, we have a large scaled financial institution that is actually using USDC, for example, to move money inside the institution across borders. And so again, a lot of that is programmatic, and the features matter. I will say that in some ways, we need more than just programmable money. We also need the underlying rails to be enterprise grade. So one of the things that Circle is doing is we're reading the CPMI IOSCO paper, we're reading stuff from the BIS, and we're saying, what are the barriers to large enterprise use of blockchains so we can actually make programmability really effective. And so we're developing something called ARC, which is sort of an enterprise grade L1 blockchain that has, sub-second deterministic finality that makes it very, you send the money, boom, it's done. You don't have to wait. There's no probability. There's no 51% attack concern. Using something that's very stable like a USDC as gas, and other features as well, including privacy layers. So it's just very important to say you got to combine the programmability with the underlying.
This is the president of Circle
really
talking.
These use cases.
If I can just jump in on that one, I think there's a lot to be done here. I think one point of encouragement for anybody who is building, like we have a fairly sizable business, essentially selling software, like subscription software to corporates to automate payment workflows. About a third of the total revenue the bank does annually now is attached to people who utilize software to eliminate some manual step, whether it's recon or payment scheduling or otherwise. There's a lot you can do with programmability that is technically better than people using bill pay services to schedule a payment, right? But it has to be much better in order for people to change the behavior. Like the law of good enough works against any new technology, because if the existing method works well and it doesn't cost much, and especially on the consumer side of the equation, most payment initiation is free in the US, you have to be able to demonstrate some significantly better value. So demonstrating programmability, showing people, hey, you can program the payment so that it moves consistent with your payment contract is not meaningfully better than just pre-programming your whatever sourcing software you're using to initiate an ACH instruction at the point in time when you've hit the date that the payment is due. You have to actually focus on the integration, right? That is the place where you can improve a step. So instead of having to pass contracts and have somebody sitting, in a bullpen somewhere working AP files, that there are agreements that are standardized at the time of the procurement that then pass straight through to the financial institution or the wallet provider that then automate. It's just that's the step we're going to have to take here, because just because we can doesn't mean anybody will.
Very good point there from Tim Spence.
All right, and then I think we have a
He's from
follow-on here
Fifth
for
Third
Heath.
Bank.
What's actually production ready now for enterprises?
Bitcoin's up 5% from the lows this morning. Massive swing.
It's looking to bite us. Things like what's actually production ready now for enterprises, and specifically around things like illicit activity detection, and where are false positives looking to bite us?
Yeah, so the whole area of making sure you're on something that's trusted, right, is in many ways critical for enterprise adoption, right? And enterprise is going to is going to be extremely hesitant to risk its reputation to go on a blockchain where potentially North Korea is a validator, right? And so there are a number of factors like that that we're taking into account. So for example, ARC, the blockchain that we're creating, will actually have permission validators. So everyone will be vetted in advance. And also making sure that the institution that you're getting the digital assets from has an AML CTF program, it's compliant with the Patriot Act, all of those things matter.
All right, next up we're going to interoperability and orchestration. This one's for all of y'all, so feel free to jump in. Keep it clean out there, boys. Where is interop already good enough? And where is it brittle? What orchestration layer or layers are going to enable a truly tech-agnostic experience?
Actually, I can get started from the consumer standpoint. At the end of the day, it's not so expensive to maintain some liquidity buffers to orchestrate, because even today, like it's still pretty aggregated. Like the question is, what happens if we end up in one of these like ridiculous situations where it's so atomized, no? But right now, from the consumer standpoint, I would say we don't see that being a big issue. You need to hold some liquidity buffers, but again, no, like you don't really have FX exposure. You have some credit risk that you need to manage, but we haven't encountered that being a big problem. No, keen to see like on the scale side, how do you guys perceive it? No, but on our end, it hasn't been a big deal.
Given the interest that we expressed in cross-border payments, it's the on-ramps and the off-ramps. It's the point you made earlier about the need to cobble together your own ecosystem if you want to move money utilizing stablecoins today. The actual use of the rail is much easier than getting money in and then getting it out in another jurisdiction, ensuring that the person that you're paying has the ability to accept it and to convert it back to fiat. My big fear, I think there are lots of really interesting things that can be done with tokenized deposits, but that's the place where I think the interoperability issue is the biggest. If we can land on a handful of, call it standard stablecoin payment rails, I don't know that interoperability is a problem so much as it is just getting to a point where the adoption on both sides of the network, on the send and the receive side, are native as opposed to through a third party and then a transfer.
We're in a bit of a strange interregnum where the Genius Act has passed, and you can be forward-looking Genius compliant, but you aren't Genius compliant today. And so that's actually created a huge proliferation of stablecoin issuers from a white label side and otherwise. And so I actually think if you had a moment of risk where something could go wrong, it's probably now, between now and 18 months from now, because you have so many different firms that are operating in ways that may or may not end up looking like they've aged well. But I do think that once Genius comes into effect, when the rules are put into place and everyone is have to follow them, which I guess gets you all the way to 3 years from when it passed, you're going to have a clear set of rules, and that should create a level of fungibility that can be relied upon as long as the standards are widely enforced, and I think also adopted in a number of different international jurisdictions, so that you create this capacity where it is truly cash and cash equivalents. I think that's where we'll go. And so between blockchain and standards, you do create a capacity to have interoperability in a forward-looking basis. You don't today because stablecoins still have counterparty risk to them, depending on exactly how they're constructed. most of them still do. And certainly a lot of the new ones also do as well. And so that's where there's a real interesting dynamic that exists right now. I think that also, and this is really, I think, Tim's point, there is a lot of complexity around having to be able to manage that liquidity because those are not the same liabilities. They're almost, in some ways, akin, though not the exact same thing as a deposit, because you have the counterparty risk related to them. I think that'll all get worked out over time, and we'll get to that end state where I think that will lessen maybe either the capital that you might have to hold against stablecoins, the amount of risk limits that you would have to put into place, the counterparty capital charges that you might need to carry. But I don't think we're there yet. So we're getting there, but there's a lot more work to be done yet.
Maybe you asked about orchestration. I think, and this goes to sort of Tim's point about sort of not unsolving problems that have been solved. A lot of the domestic payment system works rather well. There are obviously improvements that can be made, but once you step outside U.S. borders, it becomes a lot more complex. So one example of orchestration is something we've created called the Circle Payments Network, where we have institutions on various sides that are orchestrating FX flows using what Governor Waller has called the stablecoin sandwich. But right now, to send money to Brazil from the United States or from the European Union to the United States, it can take up to 72 hours going through various correspondent bank accounts.
And that's why we want XRP.
We've been able to get that down to 72 seconds using basically fiat on either end and then the stablecoin rails in between. So it's a great example of where orchestration, as you asked the question, actually can make a difference to solve a problem that is a real barrier to use case. The other point I just want to think about is tokenized deposits. We've mentioned it a couple of times. There's a couple lines in the Genius Act that just gives a scant reference to it, but this country has never really thought about tokenized deposits and the potential impact on the banking system. And as a former regulator myself, I'd ask the question, I think you used the term, used 996 banks in the United States. Yeah. If in fact, 5,000 banks in the United States, many of which are community and smaller banks, immediately overnight tokenized their deposits, they moved at the speed of the internet 24/7, as a bank regulator, I might be a little concerned about that, right? And so I think if we are going to go down the road of tokenized deposits, unlike stablecoins that are backed one-to-one with very high-quality liquid assets, if we're using the fractional reserve banking system, which is subject to deposit insurance, the discount window, and essentially a government intervention model, and we're going to tokenize that and move it quickly through blockchains, I think more public policy work should be done.
All right, and then we're getting to the last question here before we open it up for Q&A. This is for all of you all, so please jump in. Great tech always lets you do old things better and some new things that you couldn't do before. Could you all each please give one example of a use case that you think are going to become possible using stablecoins in the next 1 to 2 years that are maybe not possible today? And maybe as a bonus if you want to get AI
crypto really popping now.
But y'all go for it.
I guess I can get started, but it was kind of mentioned already by Tim before, but the idea of having a large financial institution initiating a transaction on blockchain is literally a game changer, because you suddenly move into 24/7 money movement made instant, right? So I think that would be like the biggest change to expect on that side, I would say.
I'm really excited about the potential for fungible collateral that can move around the world and across exchanges and otherwise. We have a couple of clients who run large exchanges who are exploring that sort of mobility, and it would make a material difference to the institutional investors and counterparties that trade on those exchanges.
I think one of the interesting components is that if you really kind of look at the dollar on a first principles basis, it's basically a wrapper. It's kind of a wrapper today for government securities, maybe some gold, some other things that are on the Fed balance sheet. It's a wrapper, but essentially a stable coin is an even smaller subset of what the dollar is. It's basically only cash and cash equivalents, only T-bills, only overnight repo, and some bank cash. And you can imagine once you start having tokenized treasuries and tokenized repo, as Tim was saying, you can actually completely change the way in which the collateral mechanisms work for how you could run repo programs, how you'd be able to instantaneously be able to create a stablecoin on chain. A lot of the frictional elements of stablecoins start to disappear. It actually becomes quite democratized, and I think there's so many questions that come up around, well, you can't really have stablecoins pay interest, and I think the Genius Act struck a good compromise there. But in some ways, I think that really just becomes a bit of a sideshow when you have tokenized treasuries, because you're then able to immediately swap in and out of something that's giving you yield into something that isn't giving you yield. And so then, you can have that artificial construct, which makes sense in some sense, but that's not really the ultimate end space for what stablecoins are going to look like, or even the financial system will look like, because you can have the underlying assets themselves be able to move just like a stablecoin moves.
One area you asked specifically about AI that I think about, and this may be beyond 12 to 18 months, but there are people right now that are thinking through these issues and working on them, is sort of the economics.
Don't forget about Coca-Cola, guys. Look at it now, above $70. Martyn was right.
AI is visiting that website, calling data from it. It's possible in the future no one will visit my website anymore. So I'm a producer of data, I'm a producer of content, and at some point you've got to interact with the AI and perhaps charge something, and I can't help but think that agentic payments plus programmable money, stable coins, could play a role in that whole new emerging economic system that we're still trying to figure out.
All righty, and now we will jump into Q&A. Our first question here, of course, is coming from Anonymous. This one's for Charles and Heath. Fast forwarding a decade, how do you think proof of reserves will work, and how will it be different from how it works today?
Well, the good news is we've got the Genius Act. That'll be implemented. So we'll have the transparency that's there. But I think if you potentially combine that with AI agents and zero-knowledge proofs, there could be something there as well. But right now, the Genius Act solves that through transparency, through audits, or sort of the old-fashioned way. It's entirely possible there could be other ways of making sure that those reserves are confirmed as well.
The way it works today is, I think Circle and us, we do monthly attestations. We have KPMG, and they look at what's in the bank accounts, which is actually the hard part, and then they look what's on chain, and they say, yes, that matches up. And you could try to do that more frequently, but it's actually the complexity is not what's on chain, it's what's off chain. And how can you get that snapshot and be able to get it reliably? And maybe the way I was just answering the prior prompt is that when you start having the underlying assets on chain for the stablecoin, well, then it's very simple. It's like very easy to do that match and be able to see it completely directly in real time at all times. And so I don't think it's going to take 10 years to get there. I think the tokenized treasury market is already starting to grow, and it could be quite significant in a relatively short period of time. I could imagine in something like 3 or 4 years, a situation where maybe the percentage of your reserves for a stablecoin that are not held in on-chain format could be quite low. But ultimately, you have to have it be 100% in order to be able to really have it be 100% matched, same to same. But I certainly think we're going to get there.
All right. Next one here is for large volume financial market settlements. What resilience features should stablecoins have beyond those required in the Genius Act? This one's for anybody. Maybe the Genius Act is perfect. All right, I guess no one's got anything. Genius Act is perfect. There you go. Thank you, Senator Haggerty and team. All right, Chad, here's the question you were expecting, of course. With the problems last week, what went wrong with the minting process? Did the blockchain work as expected? And I guess for context, for those that don't know, I think last week PayPal, for 24 minutes or thereabouts, printed $300 trillion US and then unprinted them.
We printed it, actually. Don't cast aspersions here. The mistake was entirely ours. Certainly, we didn't operate at the standards that we expect of ourselves. There's an interesting situation where you try to determine where does it make sense to be fully automated and where does it make sense to have manual interventions in order to be able to create additional levels of security. And in this case, our operational manual processes were put into place for a deliberate reason in terms of being able to create very secure cold minting processes. But it's something that we rarely use. And so that led to an error in how much was minted. We knew within a minute or two it all was contained on our system. It never left our system.
Gold and silver
which, by the way,
falling
should
off
never
a cliff.
diminish,
Money's
how
going into
seriously we take
crypto.
this. But it did, of course, lead to there being an overmint of a fantastically large number. And of course, the unwind of it. I think that, the importance of this, to me, is it underscores the value of the blockchain. It actually shows the transparency that you can immediately have into what's going on. And so in this case, an operational error that was entirely internal to our systems is now immediately visible to everybody. So I'm sitting here, of course, talking about this and making it really clear about what we could do better. But that's important because that means you can have this level of transparency throughout the entire financial system over time. That's a really positive thing. It's, of course, painful to go through, but I think you could just imagine having a world where you would be able to see exactly what's happening in real time and being able to have that level of transparency to understand how firms are functioning. And that can create confidence in the financial system in a way that the opacity that exists today has really limited. And that's why you get accelerator effects, and that's why you get run on banks, is because you don't know what you don't know. And so you're never going to have a perfect world where everything is completely transparent, but the more transparency you have, I think the better the financial system will be over time.
All right, I think we have time for maybe one more question in here. And of course, this is a nice phone one for us to wrap it up. If stablecoin issuers can theoretically have Fed payment accounts themselves, what need is there for banks in the workflow?
Well, there is a big value in intermediation, right? And if you don't have bank deposits, then the bakery perhaps cannot get a loan. And there's a massive value in that. And I think anyone who's rejecting that value is not really understanding how the economy works, no? So of course there would be a lot of value for banks, no? And perhaps this might be like a sort of Marxist view, no? But you still can eventually bring transactional value to cost to zero, and the margins get compressed in transactional business. Perhaps the implication would be that financial technology will be all about balance sheet in the end, right? So perhaps the question will be the opposite, no? And banks will be even more important.
I mean, I may just leave it at that. I don't know that. I think the point that you made, Fernando, that's dead on is I don't know how much people understand about the business, and not just the role that we play as a safekeeper of deposits, but as a provider of multiple payment services. As a lender, the role that we play in maturity transformation, which is important from an economic perspective, to your point. And I just think at the end of the day, all complex ecosystems require integrators. Okay, they just do, and they're, for the average individual, potentially short of healthcare, is no more complex, opaque, harder to navigate ecosystem than managing your personal finances. And the byproduct of that is, with the exception of people who live day to day, there will be values to bundling and to the build out of, there will be value to bundling and to the build out of services around the actual currency itself. Because if that wasn't the case, then, for the last 50 or 100 years, we would have just been carrying stacks of cash around in wheelbarrows, right?
And maybe I'll add my 2 cents with 2 hats on. First, my Circle hat, then as a former regulator. So wearing my Circle hat, I mean, we put billions back into the banking system. It's really important to us that we're able to put money back into the banking system. So it is, in fact, continuing to do credit, generation, credit intermediation. And I think, we are very supportive of that. The last thing we want to do is have a situation where the banking system is disintermediated, right? Stablecoins are meant to be a payment mechanism, meant to be a version of cash.
The market seems to be turning around. We might be going back to euphoria soon. We'll do full analysis after this.
COVID crisis, where our clearinghouses in the United States, the large, important financial market utilities that didn't necessarily have a Title VIII designation and therefore didn't have Fed accounts, found themselves awash with cash, tons of cash with variation in initial margin, with no place to put it. Because the banks, to argue your point, your point out there is the supplemental leverage ratio disincentivized banks to hold cash. And therefore, we had a scenario where the clearinghouses had all this cash on hand, banks didn't want to take the cash, and we were in a major conundrum. So I would say there are instances where having a deposit-only account, not discount window access, not any kind of borrowing facilities, but just a safe place to put cash in certain circumstances would probably provide a stability backstop for the stablecoin industry.
I also think, one of the important benefits of Genius in having payment stablecoins is that you can now separate fractional money, which I think is very important, from money that you're using in the payment system. And so having non-fractional money that is able to move through the payment system creates a capacity for there to be more resilience in financial crisis, where you can have accelerator effects or you can have run on banks. And when they were conjoined together, which they really had to be because of just the limitations from a technological standpoint, you had whole parts of the payment system that were locking up when certain banks were having problems. And actually having some capacity to have those not be totally intertwined can be very effective in times where I think there are systemic risks that really become endemic in the system. And certainly part of that could be having use of a Fed master account. And it doesn't even have to be necessarily being able to go into debit at the Fed. It's simply being able to have funds that you're able to put at the Fed. And so in that way, you can not necessarily disintermediate the banking system, but you can create a mechanism for intermediation to continue through the payment system, even when there are times of stress.
All right, actually, we do have a few more minutes. I misread the clock. So a couple more for y'all guys. Any thoughts from this group on how the issue of revocability might be addressed in the stablecoin ecosystem?
That's probably for me. Yeah, so it's very important that transactions on blockchains are irrevocable. And as I said before, one of the things that the Basel Committee and others have said is an issue with certain blockchains is the fact that you have the possibility of having 51% attacks, and you have probabilistic settlement as opposed to final deterministic settlement. So no question that anytime something is on a blockchain, we really do need settlement finality. That's a separate issue than the one which is in a world of consumer payments where chargebacks have become an important part of the way that our consumer payment system works. Is there the ability to create some kind of opt-in as an application layer on a blockchain to facilitate chargebacks, right? To bring some of those great things that we have in the scaled financial system of today into the Web3 world. So that's the way I think it's an entire, if there is a need for something like that, it would be done through an application layer that everyone would opt into voluntarily, and at the same time preserving the irrevocable nature of the underlying blockchain transaction.
All right, going down the list here. Go for it.
I think there's a really interesting question on this one because given your point, like there are some
look at crypto
use cases
go now
that are not amenable to being switched, right? I think one of the things that drives me nuts is whenever we try to compare the cost of accepting a stable coin to the cost of accepting a credit card payment, because if the decision on what sort of payment to accept was entirely in the hands of the merchant, right, they wouldn't be accepting credit cards today. The reason they accept credit cards is because people want to pay with them. And people want to pay with them because they want float or credit or rewards or the consumer protection associated with the ability to charge back a payment that you didn't make, right? So those are features of the product. We've spent too much time on and those features require economics to be able to provide them, right? It's a simple utility. And the economics around the payment, then are attached to that, the provision of those sorts of features. And my own personal view on this one is we could spend a lot of time to replicate the feature functionality of all the different legacy payment methods and get nowhere, because what would happen is the cost to accept a stablecoin would have to go up in order to support all of these sorts of benefits. And in turn, you wouldn't see any sort of value shift. Whereas we have payments that move today in places where revocability isn't a requirement, right? It's not a valuable feature. And just mining those markets has got to be a huge TAM for people who are out there. So trying to get every rail to do everything doesn't seem to me to be the right long-term solution. Given that the rail that exists, the tech that exists today, there's a massive capacity overhang to do things where some of the things it can't do aren't a big problem.
All right, going next on the list here. Are we more likely to see existing payment rails like SWIFT move to leverage stablecoins, or see new rails for banks to adopt?
Man, I feel like that one's mine. I'm fond of, I think it's one of the A16Z folks, but the saying that the sort of battle for any market comes down to whether the incumbents get the innovation faster than the disruptors get distribution, right? And that's what you're going to see with all of the legacy payment utilities here, is the legacy payment utilities have to find a way to rewire around new technologies, new protocols, faster than the insurgents find, financial institutions that are interested in riding on the rails. And I don't know that I would handicap that, but things that move large volumes have to be built to avoid hard right turns. And it means inherently they have to be slower, right? In this particular case, like our stance as a company has been to keep our options open. I tend to think that the insurgents may get the escape velocity faster than a lot of the incumbents are able to adopt the innovations in this particular market. But there's that's by no means settled.
All right, another one for Tim. What's the net impact of stablecoin adoption on credit creation? Do stablecoins drain capital from banks, institutions that primarily extend credit?
They wouldn't drain capital. They would drain deposits, and deposits.
I'm going to give you the Ripple news, $1 billion worth of XRP being bought straight after this. Then we've got another event, so stay with me. Then we can go into charts. Crypto's pumping. I just ask everyone, please hit the like button and subscribe.
Down to the rules that need to be written around anti-circumvention on the Genius Act. Okay, it's clear to me that the intention behind the law was to prevent stablecoins from earning interest. It's not clear to me, based on the behavior in the market, that everybody intends to abide by those rules. And if stablecoins are allowed to pay interest, they pose a threat that is equivalent to, but potentially far greater than, money market mutual funds did when they were introduced many, many years ago. And that would have a direct impact on the ability, on credit formation. I think there are some clever strategies there. So to the point that Heath made earlier, circle round trips deposits back into the banking system. That's quite useful in terms of supporting the ability to form credit. But if my read is right, and the intention of the law was to prohibit people from paying interest, we should just get about prohibiting people from paying interest, whether they call it rewards or anything else, right?
All right, speaking of yield-bearing stablecoins, Heath, this one's for you, but others feel free to jump in. Why should or shouldn't we have regulated yield-bearing stablecoins in the United States?
Well, the answer is we do. They're called tokenized money market funds. And so that's the circle position, is that a stable coin is the effect of the equivalent of cash. We think the Genius Act got it right. backed 1-for-1. Anytime you're paying out and it's paying out interest, that obviously introduces more risk. But that said, we do think there's a need, obviously, for interest-bearing instruments, interest-bearing digital collateral. And so we've created, it's not available in the United States, but something called USYC, which does precisely that. But Circle's always taken the position that it's a security, it's a tokenized money market fund. And so I think those distinctions make a great deal of sense, and they're consistent with current law, including the Genius Act.
All right.
This is very interesting stuff,
all of the
guys.
questions. And I think we're probably coming in on time as well. So I think we landed the plane successfully, gentlemen. Thank you all.
Okay, let's see what they're going to
Thanks to
say. I
Kyle
think
and
there
all
will be
the
a break
panelists.
and we'll be back with the next, but I'm going to give you more
So yes,
information
you brought us
during the
in,
break.
right on time, and actually just a minute early for lunch. And I know we have
Oh, they cut her off. Okay, so they're going away from lunch. We've already had a lunch. So what we're going to do is I'm going to give you some analysis on that. Crypto is pumping in the background. So we'll keep this open in the background. This event will continue at 1 p.m. Eastern time. So I think that's an hour from now, 1 p.m. Eastern time. Yeah, that's an hour from now. I don't know if we'll be live. We probably will be. So that's going to start again an hour from now. But what I want to talk about while that's all going on, again, all bullish stuff. That was stablecoin use cases. That was the CEO of Paxos was there, the CEO of Fifth Third Bank, the CEO of Dollar App, the president of Circle, all there. All bullish stuff. Market was pumping in the background. But I want to go back to our top story of the day because we didn't get a chance to finish this off. It's all about XRP. Remember, it's always on the tip of their tongues. And it's really strange that no one's mentioning Ripple or XRP. There is BlackRock coming out later, and also Franklin Templeton and ARK Invest. So they might... it's Cathie Wood next as well. That would be interesting. Yeah, and Coinbase. So they might be more likely to mention Ripple and XRP, but even so, I think the best is yet to come. It'll be interesting to hear from Cathie Wood next, CFO of Coinbase. We've also got Stripe, head of AI, Google Cloud Richard. That might give us some more insights. We then have Franklin Templeton and BlackRock. They might be talking about ETFs as well because they're talking about tokenized products. Anyway, it's all great. It's pushing up the markets. It's always good to see what's going on in the background. Imagine the Fed is now talking and hosting these events. I mean, we would not imagine it 1 or 2 years ago. Let's go back to our top story of today, which is that Evernorth $1 billion XRP bet. It looks like this company is going to be buying $1 billion worth of XRP and taking on other treasury companies such as MicroStrategy and others within the Ethereum space. But not for buying Bitcoin, not for buying Ethereum, actually buying XRP and using that XRP. There's a lot more to cover. So what I'm going to do is give you a quick synopsis of what we've already gone through, and then we'll record the second half of the video, which is all stuff we haven't covered yet. So just a quick overview for anyone who hasn't heard about this yet. Please do firstly hit the like button. Please do subscribe if you haven't done so as well. Let's see if we can see. We're on 105,208. Let's see if we can keep pushing the subscribers up. Maybe 106,000. That would be great. Or 105,500 would be amazing as well. Let's go back to... I am having an issue having the super chats on the screen, but that'll be sorted by hopefully tomorrow. But David Hensley has just given a super chat and says, Sensei, thank you for covering all of this. David Hensley, thank you for being a member for over a year, for all the work you do as a moderator, and for tuning in, and everyone else tuning in. But David Hensley, really do appreciate it. Thank you for the super chat. Thank you very much. So deep, so massive landmark deal around Evernorth Holdings Incorporated. It's going to be it's a newly formed US digital asset company. It's backed by Ripple Bank. It's backed by SBI Holdings. It's backed by major crypto investors, Paternera Capital, Kraken, GSR. They're planning to go public in the next sort of 5 months via merger. And they're targeting over $1 billion in proceeds, which they're going to be using to buy XRP. They're going to be going under the ticker symbol, and you can really tell this is all going to be about XRP, this company. The ticker symbol they're going after is XRPN. That will be incredible. What I'm actually going to put on the screen is the countdown to the next Fed event. Oh, wrong one. There we go. We'll use this one. So I'm just going to put a countdown because the Fed is going to be live again. Fed event. That's starting on the hour. They just broke for lunch. So let me just put this here. Just in case anyone's wondering when the next Fed event is. So unlike a traditional SPAC listing, Evernorth's purpose is single and transparent. They've got a very, very clear goal. They want to become the world's largest publicly regulated XRP treasury. The company will use most of the capital raised for open market purchases of XRP. They're buying it on the open market. Remember, that has a real effect because it's taken away from the float. It's not behind the scenes. If I just go over to crypto market, just while all of that was going on, just want to remind everyone that Bitcoin is pumping and it's looking pretty good. There is a case to be made that the crash is coming, but in my opinion, there's just the same amount, the same chance that we will continue pumping into euphoria, then crash. And I think that crash will be brutal, so we will come lower than we are today, but I think we will have that last euphoric run. And what Bitcoin has just done by holding these levels at 107,000 is showing that there is still some strength in Bitcoin, and the way it's pumping today, it's a massive, massive swing from the lows of the days to where we are right now. That's a 6% swing up for XRP. That's obviously trickling through the cryptocurrency market as well, and it's certainly outperforming the stock market. Just a little bit of a backdrop of what's going on right now. And we've just got a membership given away, so make sure you are hitting the like button, subscribing, and interacting, and then you could win this membership. So Nada, thank you so much. You've just given away one membership. That's very, very kind. I remember... Did you? Yeah, you bought a membership, didn't you? Nada, thank you so much for giving away a membership. Oh, perfect knowledge. Congratulations. Do thank Nada for your membership. Someone's just asked, is Joel Court's part of this? Yes, he is part of this. So David Schwartz. Oh no, Joel Carts. What do you mean Joel Carts? Who's Joel Carts? What is that name? Do you mean David? Oh, David Joel Carts. Yeah. So yeah, David Schwartz is definitely part of this. Yes, he is part of this. I'll explain to you why he's part of this. Because remember, he left Ripple but stayed on the board. But now he's part of this new company. That is correct. Where were we? So yeah, that's what's going on here. So once listed, Evernorth's model will blend institutional reserve management with active on-ledger participation. I'm just gonna do this. Where were we? Yeah. Okay. So yeah, we've been through all of this, the significance for XRP and market implications, massively significant scale, visibility, institutional accessibility, the demand, supply, it's going to take away from the demand. Then we looked at different assets, Bitcoin, Ethereum, obviously, and how they've got treasuries, MicroStrategy, and all the other companies. They hold about 7.8% of the total supply of Bitcoin. In treasuries, then when you look at Ethereum, about 3.8% of the Ethereum circulating supply is in these treasuries as well, about $18 million. But XRP is actually outweighing Ethereum. We've got 10 billion in... How many do we have? About $12 billion worth in treasuries at the moment. And then if you include what Ripple holds, then it's just astronomically more than how much Ethereum is in treasuries. And then you add an additional 1 billion from Evernorth holding. You've got XRP, which is sort of half the market cap of Ethereum, having a lot more demand, a lot more tokens in treasuries. So to me, that shows that at some point, in my opinion, XRP will flip Ethereum and become the number 2 currency. Do I think it's going to become the number 1 currency? I think it should do, but I'm not holding my breath for it. I don't think it will anytime soon. It's got a lot more utility than Bitcoin, but again, the market is in favor of Bitcoin, which is fine. Number 2 slot would really push XRP up anyway. We then got Brad Garlinghouse, who was endorsing all of this, partnering with Everthorn. So yeah, he's very, very happy about this announcement. He says it's something special. Then we talked about what Evernorth is actually doing. So they've literally said in their listing, the majority of the net proceeds will fund open market XRP purchases to build a treasury. That's what they can use the IPO money for. They also said the remainder will be used to sort of like research and development for working capital expenses, Wi-Fi, yield and DeFi deployment. And also, it's not just like most other treasury companies, like Bitcoin treasury companies, where they just hold the crypto, park it, and just hope it goes up, because at that point, you might as well just buy an ETF. That's not the point. They are actually going to be adding to the XRP network, adding to the XRP ecosystem by operating validators. Remember, these validators are sort of like these nodes, making more decentralized, help these transactions go through. So they're going to be operating validators. They're going to be providing liquidity to institutional lending services using XRP, bringing sort of a yield to XRP. They're going to be participating in decentralized finance as XRP as a collateral. They're going to be auditing everything, so their independent governance is promised from them. They're going to be buying it on the open market, very transparent. We're expecting this to all happen by the end of Q1 2026. And they've got the backing of major players. We've also got Chris Larsen, CEO, co-founder of Ripple, being part of this. So let me just remove these timers for a second. We'll make them much smaller while we do this second part of the video. Earlier in the stream, we filmed all of that. That was just a recap. Here are the parts we haven't gone through yet. Remember, this is all part of the newsletter. If you haven't got the newsletter yet, it's the first link in the description. It's also in the live chat. You get a free trial. You can have the annual plan. You can have a free plan. You can have the monthly plan. The monthly plan will be going up in price by the end of the year once we introduce the new perk for all premium members. If you already have the monthly plan, it won't change in price. If you've already got the annual plan, that won't change in price. I'm just letting everyone know that in the next sort of couple weeks or months, that that monthly plan will be going up in price. So let me come on to this. So now moving on to the impact of open market purchases. So remember, they have pledged that they're going to be doing it on the open market. That brings a few different characteristics to what can happen with XRP's price. It's a little bit different than how others might play it, which is actually good for the XRP holders. It's a bit more transparent and it can have a supply shock. Remember, nothing I say is financial advice. So the impact of open market purchases, what are those impacts? A critical detail in Evernorth's filings is the requirement to purchase XRP on the open market rather than receive allocations from Ripple or affiliates. That distinction matters. Open market acquisition means that every dollar raised translates into direct demand on public exchanges, OTC desks, and market maker inventories. This is having a global effect on the flow. It's not just you're paying someone and then they're giving you XRP. It's happening on public exchanges. So at current prices, what can this mean? At current prices, $2.40, $2.50 per XRP, which is fairly low in my opinion. Again, it can go lower, but my target for XRP for the bull run is $10 targets, and the next bull run is $50 to $100. So yeah, I mean, quite low. They can go lower if we go into a bear market today and we don't have that bull market. I've said XRP can come down to 50 cents to $1. I'll just buy more. I'm not selling any until we reach targets of maybe $5 this cycle. Anyway, at current prices, $2.40 to $2.50 per XRP, a US 1 billion US dollars deployment equates to roughly 400 to 420 million tokens, or about 0.7% of the circulating supply. While that figure may appear modest, concentrated buying by a single regulated entity within a defined time window can meaningfully tighten liquidity and affect price discovery, particularly on XRP's spot markets, where daily turnaround averages US about the volume's around 1.5 to 2 billion. So that's how effective it is. The fact that there's two things key here. It's open market purchases, so they are going to be taking away from the float. And secondly, they've got a 10-day time span, which is sort of reported of how quickly they have to buy those purchases. So it will have a price on the effect on the price. It's nothing crazy. So analysts note that inflows of this magnitude equate to roughly 1 days of global spot liquidity. That could push XRP prices as much as 10 to 15% higher during the accumulation window if executed quickly, or by several percentage points even under a more gradual schedule. The actual effects will depend on execution strategy, OTC participation, and concurrent market conditions. So it's very, very difficult to say how much can it push the market up. Some research would suggest current conditions, current prices, not much going on in the markets, low volume. Normal volume. You might get a 10 to 15% pump on this. It could also be a 50 to 100% pump. If the sentiment is good around the time, if there's low flow, if people are front running this trade, if there's short squeezes, if the market conditions are great, if the S&P 500 is going up, and you then got someone buying $1 billion worth of XRP, maybe not over 10 days, maybe buying it over 2 days, that's when you can have XRP move 25, 50, 100% in a day. So it really depends on the structure. If you're crashing, if you're in a bear market and you're going down and down and down, and then someone buys $1 billion worth of XRP, it might not even have an effect depending on how many sellers there are. So it really depends on that market condition. But the fact that it's on the open market, it will most likely have an effect on price. If it was not open market, then you wouldn't even know it's going on and you wouldn't even have a chance for it to go up 20, 30, 40, 50, 100%. Let's talk about David Schwartz for a second as well. And also, let's talk about Chris Larsen, because Chris Larsen has been actually, his wallet has been moving again. Last time Chris Larsen sold some XRP, I think he sold it or something. That actually marks sort of the peak for XRP, potentially of this cycle, but so far in the cycle. So Chris Larsen, he had an X post and it says, "Congrats to Ashko Blue and Evernorth XRP team on today's launch. Evernorth fills the missing link today in XRP's capital markets and XRP's usage in DeFi products." He's saying it's great. There's a gap in the market. We don't have treasuries, many big treasuries, and not much DeFi usage for XRP. So you're filling a gap. And then he says, I'm proud to invest 50 million XRP in the firm. You may see some wallet movements on this. So we have seen the wallet movement. He's basically, instead of giving cash and investing in a project, he's just investing with XRP. So in a way, he is selling his XRP. It's an interesting way of saying it. Of course, this is the way he has to say, I'm proud to invest 50 million. He's selling, essentially, but he's investing. So either way, you can word it how you like. He's basically putting his money, which he's perfectly entitled to do, to invest into this company. The good thing is this is not just a random company he's investing in. This is also basically an XRP treasury company. So that money is basically going to be kept in XRP. His investment is still in XRP. So that was in reply to this X post. Big news. We're going public. We've entered into a business combination agreement with Armor Acquisition Corporation, a transaction expected to raise over $1 billion, creating the largest public XRP treasury company on the NASDAQ under XRPN. So just to let you know what's going on there. We've also got David Schwartz, who basically quit from Ripple, but then moved to the board. And he said he's going to make an announcement about what he's doing next. And he's back. Everyone thought he was leaving the XRP community. He's in it more than ever. So David Schwartz, the architect, returns. Perhaps the most eye-catching element of Evernorth's announcement is the return of David Schwartz, Ripple Chief Legal Technology Officer, or not anymore, and one of the original architects of XRP Ledger itself. He was working on this years and years ago, the original architects. It's great to have him back. Schwartz has been central to XRP's technical credibility since its inception. The engineer who helped design its consensus mechanism and guided its evolution through regulatory headwinds, performance upgrades, and interoperability developments. His decisions to step in as strategic advisor to Evernorth signals more than personal endorsement. It represents a bridge between XRP's technical foundation and its institutional future. It's great to have him back. Here's his announcement on X. He says, XRP community, I promised I'll have an update on my next adventure soon, right? Well, here's the start. I'll be a strategic advisor to Evernorth XRP, held by my friend Ashko Blue. Evernorth was founded as a regulated, scalable investment vehicle to tap opportunities for XRP in DeFi and capital markets, extending the entire XRP ecosystem. I'm excited to get started. For investors, this matters. Schwartz presence ensures that Evernorth's treasury model won't simply hold XRP, but will understand how to operate within its ledger architecture. Remember, he's the chief technological officer, or he was. He knows everything about XRP. He basically built XRP. He was one of the people that worked on it on the very, very early days. Some people say, oh, wait, he did also work on Bitcoin, or early wise. Anyway, he knows exactly what he's doing. So this is more evidence that this is not just a random company who knows nothing about XRP, just buying it and holding it. They are using it. They want to develop it. They want to make it better. And who better to have on board than David Schwartz? So it shows they're not just going to simply hold XRP, but will understand how to operate with its ledger architecture, running validators, leveraging RLUSD stablecoin liquidity, and integrating with DeFi protocols natively. His advisory role effectively ties Evernorth back to the protocol design philosophy. Utility first, speculation second. It also marks the first time in years that Schwartz has attached his name to a commercial initiative beyond Ripple itself. This is something big. He's been with Ripple his whole life. He's not just gonna, and he's probably was getting paid a lot. He's not just going to randomly go over to another company because of the money, he just wants to be part of building XRP's ecosystem, and he's chosen this company to go to. So, and it means a lot. It's the first time other than Ripple. So for everyone who just thinks XRP is all about Ripple and what Ripple does, there's now quite significantly big companies also are now going to be quite effective on how XRPs run and how much utility there is for XRP. And this is another company that's there. I imagine in 5-10 years from now, there's going to be so many companies that are using XRP. Maybe Ripple wouldn't be the one that we all always look out for headlines for. There'll be other companies with bigger headlines than Ripple. Remember, right now, there is no CEO of XRP. I want to make that clear because a lot of people think XRP has a CEO and Brad Garlinghouse is a CEO. There's thousands of companies that use XRP. It's not just Ripple. And here's another one. His advisory role effectively ties Evernorth back to the protocol design philosophy: utility first, speculation second. That's always key. If we don't see any utility on a token, what's the point of holding it? You don't know what you're holding. It also marks the first time we've read that. So it also marks the first time in years Schwartz has attached his name to a commercial initiative beyond Ripple itself. A move seen by many as a sign of renewed confidence in XRP's next growth cycle. In short, the technologist who helped build the network is now helping shape its institutional layer, and alignment gives Evernorth's launch far greater weighting than a typical SPAC listing. So here's some key takeaways for XRP investors. A publicly listed XRP treasury vehicle backed by major institutional players now exists. Evernorth's model aims to combine reserve asset accumulation and yield utility development, a differentiated structure for the XRP ecosystem. Comparatively, XRP's corporate treasury strategies are far smaller than Bitcoin, Ethereum analogs. Evernorth may significantly change that scale dynamic. Investors should monitor the speed of XRP accumulation, average purchase prices, transparent disclosures of holdings, and performance of the yield utility deployment side. We're going to be covering this company's merge. We're going to be covering its IPO. We're going to be covering its earnings calls. We're going to be covering its purchases. We're going to be covering its average price. We're going to be covering its net asset value. We're going to be all over this, so make sure you are subscribed. The structure introduces new variables: open market token demand, treasury accounting, valuation of the equity token holdings and yield business, and how market prices XRPN relative to underlying assets. Now, let's flip over to SBI Holdings, something that's always a little bit under the radar, but massive company. And it's a strategic backer and a long-time XRP partner, SBI Holdings, and it's also a partner with Ripple. So SBI Hold, and also investing in this company. So what is SBI Holdings? SBI Holdings headquartered in Tokyo, Japan, massive market for XRP. People always forget about that. And led by Chairman and President Yoshitaka Kitoa, has taken a central role in Evernorth transition through US $200 million PIPE, private investment in public equity. Private investment in public equity commitment. The announcement released today, 21st of October, it might be tomorrow if you're watching this as a video, confirms SBI's participation alongside Ripple Labs as well, and other investors in Evernorth's planned NASDAQ listing under the ticker XRPN. Massive players are coming together to back this company. Let me read you this. This is their official letter that went out today. So, announcement of investment in Evernorth, operator of the XRP treasury business. This is their official announcement. SBI Holdings today announced that it has invested in a PIPE, a private investment in a public equity, financing for a US-based Evernorth Holding Incorporated, alongside key SBI Group partner, US-based Ripple Labs Incorporated, and other investors. Mentioning Ripple there, that's quite significant. Evernorth is a company established to promote the adoption of the crypto asset XRP. It's just incredible. People that say XRP is a scam, it has no utility, it's going to go to zero. Look at this. This is literally the company has been made to promote the adoption of XRP. I mean, how much more bullish can you get? Imagine creating a company to just promote something. It's just, incredible. Anyway, I keep saying Evernorth. What is? Not Evernorth. Evernorth is a company established to promote the adoption of crypto asset XRP at an institutional scale. The company plans to list on the US NASDAQ market with the ticker XRPN through a business combination with Armada Acquisition Corp, a special purpose acquisition company, and is expected to raise a total of $1 billion. SBI Group will contribute $200 million in cash. Look at that. They've got Chris Larsen contributing about 50 million XRP. What's that? About $250 million. We've got another company from Japan giving 200 million in cash. They're not even giving XRP, they're just giving money in cash. 200 million, here you go. That is the announcement from them. What's the proceeds going to be used for? Well, the proceeds will be used primarily to purchase XRP on the open market. Here's 200 million in cash. Go buy some XRP is essentially what this company is saying, and do it on the open market. Even there, more confirmation there that this purchase is going to be on the open market. To build one of the world's largest public XRP treasuries. This treasury endeavors to continuously increase its asset value, not only by holding XRP, but by actively utilizing institutional lending and decentralized finance. They're going to be growing their XRP through basically lending, DeFi, and utility. Furthermore, all financial reporting will be done independently, audited by a major audit firm designed to ensure a high level of transparency and governance. Literally telling you now, this is explaining what this company's going to do. It's going to be independently audited, which is always great to hear. And here we go. Here is a little sales pitch for XRP if you weren't bullish enough. XRP is one of the few digital assets with a clarifying regulatory framework in the US and a proven use case in global payments. One of few digital assets. There's thousands of cryptocurrencies, and this company is publicly listed company is saying it's only one of few, suggesting that 99% of the crypto market is full of rubbish and XRP is one of the winners. So again, let me read it again. XRP is one of the few digital assets with a clarifying regulatory framework in the US and a proven use case in global payments. This transaction will provide a simple and highly liquid investment opportunity in XRP through a reliable framework of regulated, audited, and publicly listed company. We believe Evernorth's approach which seeks returns not just through market, but by participating in the growth of entire XRP ledger ecosystem through activities such as operating an XRP ledger validators, is extremely significant for accelerating the further adoption of XRP by institutional investors. They're saying they're going to buy XRP, it's going to go up in price, but that's not the only way they're making money. They're going to be running nodes, validating the system, making money that way. They're going to be DeFi, interest, and also they're saying this particular deal, and that's why we're making a video on it and saying it's so significant, and maybe the most significant news this year on XRP is the fact that this is, their words, extremely significant for accelerating the further adoption of XRP by institutional investors. So the SBI Group has long promoted the practical use of XRP both in Japan. Remember, that's why it's so big in Japan, because of this company. They promoted the practical use of XRP both in Japan and internationally, including through establishment of SBI Ripple Asia, a joint venture with Ripple. This investment in Evernorth further strengthens these efforts and aligns with our group's strategy to build an innovative financial ecosystem centered on digital assets. The SBI Group will continue to make every effort to contribute to the development of the XRP ledger ecosystem and sound growth of the entire digital asset market. And if you want more information, you can actually contact them as well. So, who is this massive company then? Well, it's quite a significant company. So, SBI Holdings, remember this is the one that's just invested 200 million, and one that's been a long-term advocate of XRP, the one that's been partnered with Ripple. Who are they? So SBI Holdings is one of Japan's largest diversified financial conglomerates, active in banking, securities, asset management, venture capital, and digital asset businesses. The group operates over 200 subsidiaries and affiliates worldwide, and manages substantial blockchain and fintech investment portfolio. SBI was an early institutional adopter of digital asset technology, running the SBI VC Trade crypto exchange and SBI crypto minting unit, and maintaining long-standing strategic ties with Ripple Labs through their joint venture SB Ripple Asia, the entity that introduced Ripple Net payment solutions across Asian banking corridors. So this is how significant they are. They're the ones that actually partnered with Ripple Asia, and then they brought across Ripple Net payment. So why does this investment matter? SBI describes Evernorth as a company established to promote the adoption of crypto asset XRP as an institutional scale. Its $200 million contribution forms part of the $1 billion plus capital raise that will be used primarily for open market XRP purchases to build one of the world's largest XRP treasuries. The company will also deploy its holdings into institutional lending DeFi strategies rather than holding passively. SBI's statement emphasized these 3 points: transparency and governance, regulatory clarity for XRP, ecosystem participation. SBI framed the investment as consistent with strategy to build an innovative financial ecosystem centered on digital assets. The group believes Evernorth's model, linking balance sheet accumulation with ecosystem activity, can accelerate institutional adoption of XRP. So here's the strategic context. This is the last point on all of this. SBI has championed XRP integration for nearly a decade, using the token and the XRP ledger in remittance, FX, and settlement businesses across Japan and Southeast Asia. You can thank this company for a lot of utility for XRP in Asia. The firm has participated in nearly every major Ripple ecosystem initiative, including the MoneyTap consortium of Japanese banks and Ripple's on-demand liquidity services. The Evernorth investment extends that partnership into US capital markets, marking SBI's most direct participation yet in an XRP-based listed vehicle. With Evernorth's public listing expected in Q1 of 2026, SBI's involvement provides both financial credibility and regulatory familiarity to a structure designed for large-scale institutional access to XRP, positioning the group as a bridge between Asian fintech adoption and Western capital market participation in XRP's ecosystem. So there you go. SBI is a massive part of this. They've actually got the largest treasury, I think, in the world for XRP, and now they're contributing $200 million just for this company to go out and buy some more XRP. Anyway, I think this is the biggest news of the year for XRP. Once we get that ETF as well, which I think, remember, so much nonsense out there. Everyone's saying, well, look at this deadline, look at this deadline. Remember, we were the first people to bring you the deadlines about a year ago, and we told you 200 days ago, and we told you exactly what dates will get approved. But then we were also the first to tell you about a month ago that ignore the deadlines, they don't matter anymore because there's a new way of listing. And then there was a shutdown anyway. And then we told you, don't worry about any ETF coming out because there's a shutdown. No one's going to be focused on bringing out an ETF. So ignore everyone else. They're all paid to say stuff. They all tell you to go leverage trade and lose all your money so they make money. We're here to tell you the real information. We don't hype it up. There's no need to. It's good. Don't expect to be rich overnight, but stay on top of the news. We'll give you all that news on this channel. There will be 2 other videos as well for you guys to go check out. There'll be the newsletter over here. Do go and subscribe to the newsletter as well. But yeah, good luck, guys. This is very interesting. Until next time, as always, take care of yourselves and each other. Okay, so that will come out as its own video as well. I'm going to go over to the live chat now. Let me just make sure I'm recording that. Perfect. Let me go to the live chat and then we'll come back to the Fed as well, because they're going to be resuming talks. Trump is about to go live. Oh my God. Oh my God, is Trump about to go live? I was about to take a break while we're waiting for the next Fed event. Yeah, here we go. Live to Trump.
That sound, it reminds me of money. In this case, it reminds me of lack of money because I'm paying for it, so it's the opposite. But it's going to be one of the most beautiful ballrooms anywhere in the world, and it's going to be able to take care of tremendous things. When you have, as an example, I'm going to see President Xi in 2 weeks. I'm going over to South Korea. We're going to meet in South Korea. We're going to talk about a lot of things. They want to discuss the fact that they're paying 157% tariff. It's a little higher than they thought. And we're doing very well. I think we're going to do well in that negotiation. We've done well, as you know, with Japan, with South Korea, with Europe. The European nations got together. We made a deal. And it was all based without the tariffs. You could have never made the deal. I'll tell you what, tariffs equal national security. Remember that. Tariffs equal national security. You got to remember that. And they also equal wealth for our nation because we've taken in hundreds of billions of dollars in a very friendly manner, given to us by nations that used to take it from us. And they used tariffs on us. We never used it on them because we were foolish, or we were led by people that weren't business people. But it really does. It equals national security. And I wouldn't have put out, I mentioned 8 wars, 9 coming. Of the 8, 5 were based solely on trade and tariffs. India, Pakistan were going at it. 2 nuclear powers, and serious nuclear. 7 planes shot down. They were ready to go, and I called them up. I said, you go to war, and we're not doing a trade deal. And they said, well, what does one thing have to do with the other? I said, it has a lot. You're nuclear powers, and if you do it, we're not doing a trade deal. And 24 hours later, they called me, we have decided not to do it. We stopped the war. We stopped the potential disaster, a nuclear disaster, because of trade. And it's been really amazing. But the tariffs have made us a wealthy country. They've given us tremendous defense. They've given us things that we can do for other countries, very positive. But again, really, it's national security, it's national defense, and they are so important. And it's incredible that
some people are talking about Trump or Obama. So just a fun little poll, because I guess they're the 2 most popular presidents of recently. So let's see what you guys think.
Foreign countries now that we are doing very well with, taking ads. Don't go with tariffs. They're taking ads. I saw an ad last night from Canada. If I was Canada, I'd take that same ad also. But they're actually on television taking ads. But I do believe that everybody's too smart for that. We have a very, very big and important case coming up. We should win the case based on the legal merit. We should also win the case based on all of the things I just said. But we're a wealthy country again. Last week, as you know, they found $31 billion. They came to see me. Sir, we found $31 billion. They said, we don't know why. I said, was this a good find or a bad find? It was a good find. It was a plus 31. We're used to finding negative 31s, right, for the last 30 years. I said, check the tariff shelf. Well, those tariffs haven't kicked in. Yes, they did. They kicked in 2 months ago. Check it. He comes back 2 hours later. Sir, you were right. We have an additional $31 billion, billion, not million, Lindsay, billion, that we just found from tariffs. They kicked in earlier than we thought. You were right. We're a wealthy nation again, and we're a nation that can be secure. We're a nation that can start paying down our debt. And with tariffs, we're the wealthiest nation ever in the history of the world. Without them, we've got to slog. We've got to slog. But remember this, other nations, including China, Japan, European nations, they used tariffs against us for many years. That's why we owe $37 trillion. That's why. But they used tariffs very successfully against us, and we had presidents that never fought it. But now you have a president that does fight it. So I just want to welcome you to the incredible Rose Garden. It's just
Trump
is
much more popular than Obama on this channel.
We did it, brought it back to health. It was in very bad shape, actually, and we brought it back to health. First Lady Melania did a fantastic job on it. The surrounds and everything. It's all brand new wiring. You know, underneath there's a lot of wire, a lot of things. Everything brand new, everything beautiful. The only thing we did is we had to get a hard surface here because nobody could use it because of the grass. So I just want to welcome you, and I hope you're going to be here a lot. We're going to use it for meetings. We're going to use it for press conferences. Now we can use it. It was unusable before, and now we can use it. But everything that you see was redone. All of this was redone, and the whole White House is being redone. Some of you came through they call the Rose Hall. They call it different names, but you probably noticed, I don't know if you came through this door, did you notice the white marble floor that was put there? That was made out of Home Depot tiles, about 1 foot by 1 foot. They were all broken, about 30 years old. And I replaced it with book-matched marble, paid for by your friend, President Trump. It's like, it's amazing how people like it when you say you paid for it. When I say I paid for it, they say, oh, I love it. But it really, they did a beautiful job. They're great talents. They're very talented marble people I have. And they replaced it with beautiful Paradiso marble and statuary marble. And it's really, really beautiful. I want to thank the outstanding leadership team, and you really do have that. Majority Leader John Thune, who's been my friend. He really, really has done an amazing job. Thank you, John. Thank you. Done an amazing job. I didn't get to know John as well in the first term, and I've gotten to know him very well over the last 9 months, John, and you're doing a fantastic job. Thank you very much. Really great. Majority Whip John Barrasso, who's an outstanding man. Thank you, John. Thank you. Great guy, too. Conference Chair Tom Cotton. He loves that military. He loves the, he loves the military. Policy Committee Chair Shelley Moore Capito. Shelley, thank you very much, Shelley. Vice Chair James Lankford. Very good. James, thank you. And you know, we have everybody but one person here. You know, everybody showed up. I figured you'd have like, I'd say 40 would have been a good number, right? We have everybody. We're just missing one person. You'll never guess who that is. Let me give you, he automatically votes no on everything. He thinks it's good politics. It's really not good politics. He's an automatic no. But I don't know. Look, if he wanted to come, I'd probably let him come, right? I'd let him come. Begrudgingly, but would let him come. And National Republican Senatorial Committee Chair, an unbelievable guy, Tim Scott. You know, Tim, I shouldn't say it because it's so, I don't know if it's good or bad. But Tim ran, and he was very effective and very good. But he was on the debate stage and everything else, he was good just because he's good. but he wasn't as good as they thought he was. And when he got out of the race, he endorsed me almost immediately. And I used him as a surrogate. And I wasn't sure if I should because, you know, sometimes I want a total lunatic to get up and fight for me. And Tim is a really good person. So I wasn't sure. And I put him on the stage, and he ripped the heart out of everybody. He was so brutal. He was so unbelievable. It turned out to be absolutely one of my best surrogates, and it includes a lot of you people that were here. You were all surrogates. But Tim ripped these people apart. And after watching 2 or 3 times, then I wanted him all the time, right, Susie? I said, I want Tim Scott, get up there. But he was so good. And I said to him, Tim, when you fought for yourself, you were much different. When you fought for me, you were a tiger. You were like unstoppable. You were, really was. You all saw that. What's the difference? He said, I've never liked selling myself, and I love selling somebody that I really do believe in. I really believe in you, and I just felt that way. And it was so nice the way he expressed it. And I want to tell you, you are a champion. You are a winner, and congratulations. Thank you very much. I never love telling that story because I'm not sure if it's a good or a bad story, but I'm telling you, you are an amazing guy, and you fought for me so hard, and I really appreciate it. You got to be my #1 choice, Tim, so something happened. I appreciate it. And you're doing great doing what you're doing right now. I also want to thank the entire Senate Republican Conference for your tremendous work on confirmations. Boy, did we have a couple of weeks, huh? We had some, I signed
the
like
results
150
are in.
of them, and I didn't use an auto pen, by the way.
Obama 22%,
You know,
Trump
when you sign
78%.
these important, like a general getting approved from 3-star to 4-star, and all of these different things, and big confirmations, and, you know, big stuff, you really have an obligation to actually sign it, I think. You probably noticed right there, number 46, we put up, right? We put up a little bit of an auto pen. We have 46. We have 45. We have 47. It's very interesting. Yeah, 46 is an auto pen. It's up there. It stays up there. People like it. It's probably going to stay up there for a long time. It's true. And I know you're looking into that. And by the way, the auto pen person said he never spoke to Biden. He worked the auto pen. You're not allowed to do that. So if you're looking at anything, just remember it. And remember, they treated us very badly. They treated us very, very badly.
New
so
poll
I think
up.
You're allowed to just report the truth, including the confirming of my cabinet much faster than first time. I mean, we went so fast, and I give John Thune and all of you credit for that. It was amazing. All of a sudden, I was calling John, I've got to get him approved. Come on, John, because I was getting like one every 2 weeks.
We do have Netflix earnings potentially. If anyone does a $10 super chat right now, we'll stay live and do the Netflix earnings for you guys tonight. Always very, very volatile. There's some news of a takeover as well. So if you want the Netflix earnings, just someone do a $10 super chat now.
Is this like, are you for real, right, James? John Thune did his job, and you got them all done, and you have all those people out there working now, and instead of being very upset with the fact that we couldn't get them approved quickly. So I really appreciate it. You used a method that I wish you could use on U.S. attorneys. You know, I have 10 U.S. attorneys who are phenomenal, a Harvard, a Yale, a this, a that, all top. And the problem is they're not going to ever be confirmed, I guess. I put them in. They'll be there for 3 or 4 months, whatever, and then they have to leave. Because anytime you have, as you know, anytime you have a Democrat senator, not even 2, just 1, they'll say because of the time we're in, we're not approving that person. We're not approving. They never do. They won't approve. And therefore, because of blue slip, I have to tell the person after 3 months, I'm sorry, you'll have to leave. And I put somebody else in. And I've had Democrat senators say the only one we'll ever approve is a Democrat. This is not constitutional, and I hope you can look at that blue slip thing, because I have 10 people that are phenomenal, and they're going to have to leave office. Highly educated, top of their class, everything, and they're going to have a mark on their career that they were a U.S. attorney for 3 months or 4 months, and then they had to leave. And that's so unfair. It's unfair to the public, because the public voted for me in a landslide. And I'm supposed to be picking the U.S. attorneys, and this goes for judges also. But actually more so even for the U.S. Attorney with a blue slip. Posts, and that's just been over the last couple of weeks. It's an unbelievable thing what you've done, John, all of you together. So working closely with me, and House majority, the Republican Senate also gave us the largest working class tax cut in American history. And you passed the Lake and Riley Act to throw illegal alien criminals out of our country. You passed the Genius Act and the Take It Down Act with the support of our wonderful First Lady. She got, by the way, she got actual support from the other side. It was bipartisan. I think Rand didn't vote for it again, but I think it was only Rand. You had bipartisan support other than maybe Rand. But another one I'm going to ask you to vote for, and it's in the House now, and I hear it's doing well in the House, James. It's Kate's Law. A young lady named Kate Steinle, I remember it so well, probably 8 or 10 years ago now in San Francisco. She was holding...
We are waiting for anyone to do a $10 super chat so we cover the Netflix earnings after.
It was beautiful, but the person wasn't beautiful that did this. And this was an illegal alien that came into our country 5 times, was thrown out 4 or 5 times, they don't even know, but a lot, and came back and shot her through the head. And she went down and she looked at her father, Daddy, Daddy, something happened, and she immediately passed away in his arm. And, I mean, you can imagine, it was so sad, such a beautiful, beautiful, beautiful person. Father was destroyed, you know, virtually destroyed. And they passed they wanted to pass what they call Kate's Law, and it's now, again, in Congress, and I hear we're going to get it passed in Congress, and when it gets up to the Senate, I hope you guys can pass it. And basically, very simply, it says that if you're an illegal alien and you come in and you get thrown out, if you come back and get caught, you have to spend 10 years in jail. Very simple. Very simple. If they would have had that, Kate Steinle would be alive today. That was a big event at the time. If you remember Bill O'Reilly, for those of you that like Bill, I think I like Bill, but he was the one, he devoted his life to that law, trying to get it passed. I think it's time that we pass it so that if you get taken out of the country and you come back illegally, knowing that this law is in existence, you go to jail for a 10-year period, and it's going to keep the repeat offenders from coming in. It's going to really keep them from coming in. Senate Republicans have already voted 11 times to get our government back and open for business. We have record business. We're going to be, I think, by the time I hit month number 12, I think we're going to have $20 trillion of investment. We're over 17 right now. As an example, President Biden had less than $1 trillion for 4 years. We're going to have $20 trillion in less than 12 months, and we're over 17 trillion right now. So it's the largest amount in our country by far, by many times. That's in our country. But here's the one. It's the largest amount in the history of the world. There's never been a country that's had anywhere near 17, or it will be 20, and it's going up fast. A lot of it's because of tariffs, because they're coming in because they don't want to pay tariffs. In other words, they make their product in a certain country, and they used to just send it in here, and there was no charge, absolutely. Now, if they have to pay a 20%, 30%, 50%, 100%, or 2% tariff, they say, well, it's better if I build my plant in the United States. It always amazed me. I did this first term. We had the greatest economy in the history of our country in first term. We had COVID, and we did a good job with that. That was a curse for every country in the world. It was terrible. But we had the greatest economy we ever had. But if you remember, I started the tariffs, but I held it off because it wouldn't have exactly been good at the time to tell France, you know what they were going through, you know what Spain was going through and Italy was going through, that, by the way, we're going to charge you tariffs. But I had started the process. We were going, the country was doing good.
We have Cathie
and
Wood
I took
on
in
next.
hundreds of billions of dollars from China. I put the full tariffs on China. Biden left the tariffs because he couldn't. It was too much money, but they gave so many exceptions that they were essentially meaningless. In other words, here's the tariffs, but you don't have to pay if you look at somebody the wrong way. You don't have to pay. So they didn't pay very much. But with me, they were paying hundreds of billions of dollars. And again, I have a great relationship with President Xi. I expect to be able to make a good deal with him, and I want him to make a good deal for China, but it's got to be fair. For years, they were making $500, $600, $700 billion, $700 billion, and we'd be making nothing. It was a one-sided. Honestly, we built their military. We built China's military with the money that we lost for so many years getting ripped off. So now we're going to have a fair deal, and I think we're going to have a very successful meeting. Certainly, there are a lot of people that are waiting for it. Maybe it won't happen. Maybe it won't happen. Things can happen where, for instance, maybe somebody will say, I don't want to meet. It's too nasty. But it's really not nasty. It's just business, and we're going to do a good job representing you people and representing the people of our country. Unfortunately, in a craven and pointless act of partisan spite, Chuck Schumer, who I've known for a long time, and the radical left Democrats are holding the entire federal government hostage to appease the extremists in their party. And they are extreme. I mean, I've never seen anything like it. They're extreme, and you know what? We had a landslide election. We won the popular vote by a lot. We won the swing states, all 7. Remember, they said, oh, if Trump could get 3 swing states, he'd be... And, well, I didn't get 3, I got 7. We got all 7 by a lot, by record numbers. We won the Electoral College, 312 votes. They said it's very hard for a Republican. It's harder for a Republican, although now I think we've swapped it. I think it's now harder for a Democrat, because if you see what we've done with the Hispanics, with the black workers and black men, and recently a poll came out with black men and women were doing so well. You know, they want security. They don't want to have their city destroyed. Women in Chicago, beautiful black women walking around with red MAGA hats because they don't want to be mugged and shot and everything else. And then you see a Democrat get up and tell you how safe it is in Chicago. Do you know they've had, in a fairly short period of time, 4,000 murders. This is over a short period of time, 4,000.
We'll be going over to the Fed events shortly. That will resume, and there'll be Cathie Wood, Coinbase, all of that sort of stuff coming up shortly.
Almost 100 shot. And then you listen to this guy, Pritzker. I've known the family for a long time. They threw him out because he was no good, and he became governor. He's got money through the family. He's got money through the family. But they threw him out. He became governor. I said, I wonder how he's going to do. It's a crime palace. It's a shame. And you know what we did in D.C. is unbelievable. You people, you can walk down the middle of the street, Mr. Senator. You can walk down. You can have your wife meet you at the restaurant, and she's not going to be accosted, shot, beat up, raped. It's unbelievable how bad it was. It was one of the worst in the country, and now it's stone cold. I don't say the word perfect, but it's pretty damn close. And, you know, they would average more than a murder a week in Washington, D.C. This is just before we got here, a murder a week. Think of that. The capital of, in my opinion, the capital of the world. They come from Iowa, they come from Indiana, they come from Florida. You call up the parents, I'm sorry, sir, your son has been shot and killed. We have no crime here now. We have no crime. And the National Guard has been unbelievable, the job. Unbelievable. And you know, it also looks better. I do a tour. I hop in that beast. I feel very safe in the beast. The windows are this thick. But I hop in the beast, and I tell the Secret Service, let's drive around town. I used to do that myself. I could drive myself around. I actually like that better. But now I don't think it's a good idea. But we drive around in the streets. The place is looking much, the grass is good, the fences are down, there's no tents, there's no anything. We are looking like it's just a whole new look. And the most important thing, there's no crime. And we're going to fix the roads. We have great pavers. We're going to fix the medians in between the roads, which are half of them are falling down. We're going to take some of the tiles off the bridges, the tunnels that you have. They've been up for 40 years. They're rotted. And we'll put up brand new, gorgeous white tiles like it's supposed to be. But this place is looking really good, and we haven't even started the real fixing up of the town. We're getting rid of the graffiti. You notice there's almost no graffiti anymore. A lot of that beautiful statuary marble had red graffiti all over it, had bad signs up, and it stopped. We've taken out 1,700 career criminals and people that came in through an open border. They came in through Biden's open border, and we've taken them out. The thing having to do with all of the elements in the great, big, beautiful bill, I'll tell you, it's amazing what we've done. $200 billion in costs for medical. What we've done, $50 billion for rural hospitals. And remember, no tax on tips, no tax on Social Security, no tax on... Think of all of these things that we've done. This is the biggest, this is the greatest bill. Social Security, no tax on overtime, but no tax on tips. I got that from a waitress in Nevada. I was making a speech, and I'm at one of my restaurants in the hotel I own there, and I say, how are you doing? Well, sir, it's terrible. They're taxing my tips. They're going, I wouldn't have even thought that. And I looked at it, and she said to me, sir, there should be no tax on tips. I said, say it one time more. No tax on tips. I walked outside to the press. I said, there will be no tax on tips. She was right. And we won that state by a lot. That's not a state that we win by that much, David, but we won it by a lot. So it was pretty good. But that bill is chock full of so many different things. So it was the biggest bill. I'm actually saying this to the fake news so that they maybe print it, but maybe not, because you people know. It was the biggest bill ever passed in Congress. And what we did was a little risky. We put everything into the bill, John, right? And some people were against it. They said, no, you got to do small bites. And we gave it a shot, and we got it passed. I got a call from John. He said, it was 3 o'clock in the morning. Sir, we have 4 hard no's. Could you please call him? I said, what time is it, John? It's 4 o'clock in the morning, sir. So I call up. One of you is sitting right here. I said, Jim, could I say hello to you? It's 4 o'clock in the morning, right? He said, sir, you have my vote. I said, wow. Then I called up another person. I'll use fictitious names. Doug, could I get your vote? You've got it, sir. Then I called up another one. How about Josh? Could I have your vote, Josh? Because I like Josh. And Josh, who can be very difficult, said, sir, you have my vote. His wife was screaming at him on the other side. Sir, you have my vote. But I called people, and they weren't really hard-nosed. They wanted a little attention, unfortunately, at 4 in the morning. Sometimes I like the ones that don't like the attention, but we'll take it anywhere we can. And we got it passed, right, John? And nobody thought that could happen because you have a small majority. And in the how about in the House, we had a majority of 3. We actually went down after that for a period of about 2 months. We went down to a majority in the House of 1. And I kept saying, you know, because I'll tell you, Mike Johnson's great. The team, these 2 teams, did you ever see 2 people more different? One's tall, one's slightly less tall. We want to be polite. They are very different people, but they're the same in terms of talent. They did the 2 guys, and they get along incredibly well. We all do. We get along great. But we passed a bill. We don't need to pass any more bills. We got everything in that bill. There's nothing else we have to put. We got the largest tax cuts in history. We got the extension of the Trump tax cuts. We got all of these things. And, you know, remember, they lie. They will look at I saw it the other day, they were talking about, I call it the great, big, beautiful bill, but that's what it is, the great, big, beautiful, the biggest bill ever passed. And what they say, they make up stories. And I saw they were interviewing a senator, and they said, well, what's wrong with their bill? He didn't know what to say, because there's nothing he could say. It covers everything. He said, death. It brings death. Now, if I'm a regular person and I hear that, I say, oh, that's terrible. But it's just the opposite. It brings life. It brings Medicaid, Medicare, Social Security. It secures all those things. And they just are so bad. You know, they said death. It was like death. And there's nothing about death. Theirs is death because they're going to lose Medicaid. They're going to lose Social Security. They're going to lose Medicare. All of those things are going to be gone because the whole country would be bankrupt, and you're not going to have any kind of medical insurance. So with us, it's the opposite. And it's a great bill. We don't need any more. And I want to just...
We will be coming back to the Fed meeting. It's just we might... I think we want to just keep listening to President Trump. He shouldn't be too much longer.
For an extension. Chuck Schumer and the Senate Democrats need to vote for the clean bipartisan CR and reopen our government. It's got to be reopened right now. We're not doing that. They are the obstructionists. And the reason they're doing it is because we're doing so well. We're doing well all over the world. We're doing well with the close to $20 trillion that I just told you about. It will be that number, but even if you take it down to over 17, that's a guarantee. We're doing well with everything. Car plants are pouring back into our country. AI plants, we're leading. We're dominating China right now in AI. And I did something that I think you'd like because we have an old grid. It's a tired grid. It doesn't have the juice that you need to fire up these plants. You know, these plants will need more than double the energy we have right now for the whole country. That's how big it is. And we can't do that. There's no way we can do that. China's building right now 52 power stations. But I did something better. I'm letting everybody build their own power plant so they'll become like an electric utility in addition to AI. But if they want to build their own plant and we get their approvals within less than a month, it used to take 5 years prior to rejection. Sometimes a guy in Louisiana, they had one that took 12 years and then they got rejected. I got it approved in 2 weeks when I got into office. That was the first term. And the plant is up now, and it's been a great thing for the state. I did it twice, actually. I got 2 of them that were dead after 12 years, and I got them approved, both of them in less than a week. And that's what we're doing. Lee Zeldin, by the way, is doing a phenomenal job, Environmental Commissioner, I have to tell you. He knows that we have to get them fast, and we're getting them fast. So we're leading China in the AI race by a lot. Under Biden, Democrats voted 13 times for continuing resolutions to keep the government open. And all we want is simply to ask them to do it once again. They always voted for it. They never voted against it. Nobody votes against it. But they do that, and they do. It's partially my fault. I mean, I'm watching you, and I'm looking at all these great faces that I've seen, really great people. I think with few exceptions, a couple of you I don't like that much, but with few exceptions, great people. And you look at what they do, and you look at the game they play, and it's a horrible game. And, you know, we have the hottest country ever. This is the hottest country anywhere in the world. And I say this, I'm sure you've heard me say.
I want to be clear, we are live. Hello, we are live. This is live. I don't understand. Paxos, you said this is cost me money. This broadcast is live. We are live right now. Thank you, Martyn, for clarifying. We're waiting to go over to the Fed. That will start shortly.
Thought we'd see this. And right now you have the hottest country anywhere in the world. We do. We have the hottest country anywhere in the world, which tells you about leadership, and that includes your leadership. So as you know, my door is always open to anyone. It's not like that AOC. How about her, where she said, she's talking about having rebellions and everything. She said, well, my door is always open. But she's not the leader. I'm sure the leaders felt very nicely about when she said her door is open. Who the hell wants to go into her door anyway? She doesn't know what the hell she's talking about. She's the one that started. You know, I remember, I'll never forget, she never took a course on the environment. And I watched her one day, and she was on television. She said, yes, our planet will be dead within 12 years. That was a long time ago. Our planet was supposed to be dead. Remember the 12-year theory? We were environmentally dead. Now, these people, they've got an agenda that nobody quite understands. The good news is they don't understand it either. They really have no idea. But the people do. The people understand. We're giving you the biggest tax cuts in history. All of these things, it all adds up that we should do fantastically well in the midterm. The only thing wrong with the midterms is that statistically, when you look, a president gets elected, and for some reason, and nobody, even the great John Thune, cannot explain to me, for some reason, even if he's a reasonably good president, and we've had success like nobody, but for some reason, you lose the midterms. I don't know why. I mean, the odds are tremendously against, like 92% or something. It doesn't make sense. If you have a great presidency, it only makes sense that you win the midterm. So there should be no reason for it. Somebody's going to explain there might be some dark, deep psychological reason where they want to vote the opposite way. I don't know what it is, but we have to win the midterms. Otherwise, all of the things that we've done, so many of them are going to be taken away by the radical left lunatics. I mean, we're going to end up with a communist mayor in New York. Can you believe it? A communist. Remember, I would always say, we will not have a socialist elected in our country. Remember, I'd say that all the time. And I was right. We skipped socialist. We got a communist elected. So I didn't tell a lie. I didn't tell a lie. I was right. We'll have a communist, not a socialist. But we've already seen the impacts of the dangerous game that they're playing. Democrats are causing delays in our air traffic control system. So important. We wouldn't have had, there's Pete Buttigieg. He spent billions of dollars on fixing the air traffic control. They'd use copper wire going into glass wire. Any union electrician here or any non-union electrician would say you can't hook copper into glass. It doesn't work. They spent billions of dollars. They turned on the system, and it was stone cold blank. We're getting a brand new system. We have bids out now. We have 3 great companies bidding. And I want one bid. Sean Duffy's doing terrifically. I want one bid. I want just bid, and they're responsible for everything. Not where they had like 1,000 contractors. Every contractor, they're all running around. In the end, if one of them does a bad job, we want to be able to blame somebody, and it's going to be one of the very big companies because there's a lot of interest in it. So the air traffic control system is going to be rebuilt. Over 1 million federal workers right now, as you know, are going unpaid. That's the Democrats' fault. And children, tourists, unable to visit the museums in Washington, D.C., that we now have beautiful, safe streets, but we don't have the museums open. We should probably just open them. But we are doing things that nobody's ever done, nobody's ever seen. So all of this and the pain that the Democrats have caused during this reckless and completely unnecessary affair, and you could call it the Schumer shutdown or the Democrat shutdown. You can call it whatever you want. And I will say this, that we have Darth Vader. You know Darth Vader, right? Darth Vader is a man who, I think he's sitting right. Is that Darth? Stand up, please, Darth Vader. Stand up. Does everybody know? They call him Darth Vader. I call him a fine man. But he's cutting Democrat priorities, and they're never going to get him back. And they've caused us, and they've really allowed us to do it. And by the way, thank you. You're doing a great job, I have to tell you. So really a great job. Because many of the things that they're cutting, like the New York project, $20 billion we're cutting it, they're not going to get it back. I mean, they're not going to get a lot of things back. They may not get it back. Maybe we'll talk to them about it. But they're losing all the things that they wanted. But many of the things that they wanted are things that we don't want. Things that are just so bad for our country. And we're cutting those things out. So while they thought they were doing maybe bad, maybe indirectly they're doing good. The cynical comment that they've made all over the place and all of their cynical remarks proves beyond all doubt that Schumer is a calculating political partisan, but we knew that. But he's somebody that's in deep trouble. He's losing in all of the polls. He's even losing to AOC +3. Remember +3? What happened to the +3? Are they still around? I had one. I met when I was at the United Nations, I met the president of Somalia. And I said, I have somebody I'd like to give back to you. He said, no, thanks. We don't want her. He didn't want any. These guys go on strike. It's really a shame. So I'm asking them to be smart. It's not working. They're getting killed in the polls. The public understands what they're doing. They're doing the wrong thing. And with that, I just want to say welcome to the White House. When we're finished, they do a great job. When they're finished, we're going to all come in. It'll be a little crowded, but that's okay. Into the Oval Office, we'll talk a little bit, couple of minutes. Got some interesting things. And I think I'd like to have, if I could, John come up and say a few words, and we can close it out. And by the way, this is an open mic. It's open to the world. I think they can hear me out on the street. If anybody wants to come up and say after John, say it. We're all friends, and you can speak your heart out. But we've got to get our government open. and the Democrats are trying to keep it closed. Thank you. John, please.
Thank you, Mayor. Thank you, sir. Well, Mr. President, thank you for having us.
So we heard there that we might get some more announcements in the Oval Office. I'm going to go over to our Fed event. We have paused it so we don't miss a thing. We're basically very close to being live. This is when Cathie Wood is about to take the stage. So let me introduce this. This is the Payments Innovation Conference. We're on to our quite a big panel here.
I see folks are
So
still...
let me introduce it. Everyone, please do hit the like button and subscribe. Let's see if this brings the market back up. We've got Cathie Wood. I'm sure they'll introduce themselves in a second. So let me just press play. We're maybe like 5 minutes behind, but it was worth pausing it and listening to President Trump. Let's go straight to the next panel.
In a little bit. But I'm going to introduce our third panel. I'm very excited to have us a group of folks that's going to talk about AI and payments. Our moderator will be Matt Marcus. He's a co-founder and CEO of Modern Treasury, a payment infrastructure company focused on the automation of payment movement. And with that, Matt, I turn it over to you. Take it away.
Thank you. We have the coveted after lunch spot, so everyone stick with us. I just want to thank the Fed for hosting us this week, Governor Waller, thank you. And also we've gotten to work with a lot of the Fed team over the years, and so we've always been very impressed with everyone we get to work with and just sharing the mission around advancing money movement in the country.
Thank you for everything you're doing to make this such a beautiful place. This is
supporting that with the infrastructure you provide. I'm the co-founder and CEO of Modern Treasury. We're a payments infrastructure company that works with fintechs, startups, public companies to help them automate money movement. And so we work with companies that provide critical infrastructure to the economy.
The speech is over from Trump. We'll be back with him in the office.
Healthcare, education, payroll, so forth. So I'm excited to get us together to talk about AI and payments. And so we have a great panel here today. I'm going to let everyone introduce themselves in a second. But we'll try to cover a few different areas because, what does AI and payments mean to you is something we'll cover different areas. We'll talk about agentic commerce a bit. That's a big theme of the day, so we want to make sure to get in there. We'll talk about fraud, which is always top of mind, especially with AI, so want to make sure we talk about how companies are thinking about that, how you can think about that. AI also impacts our internal processes. So how do we fight fraud? How do we build software? How do we advance payments innovation? And so assuming we have time, we'll get there as well. So that way we can think about how are we pushing the ball forward on innovation in the country. So with that, we'll kick things over for intros from the panel. We can just go in order here.
Great.
The red light means on.
Okay. Hi, my name is Cathie Wood. I am founder and chief investment officer of ARK Invest. We manage roughly $40 billion in equity assets focused exclusively on technologically enabled disruptive innovation. So the 5 major platforms are robotics, energy storage, AI, blockchain technology, and multi-omic sequencing. And our focus today especially is the convergence among those technologies. And I know that's one reason we're here. So very happy to be here. And I must say, I want to give a shout out, first of all, to Governor Waller and to Sunaina. About a year ago, I'm going to say, I found out, she approached me, I think, that you had a director of research on innovation, and I thought, wow, now we're talking. I hadn't associated the Fed with innovation, but I see how much you all are doing. You all are doing now, and she has been a force, to be sure, working with you, Governor Waller.
I love that intro.
There is a new poll in the chat.
I'm Alicia Haas. I'm the Chief Financial Officer of Coinbase. Coinbase is one of the first and definitely the largest in the US crypto infrastructure companies, and a company that offers the ability to buy, store, transact in over 300 crypto assets on our platform, and then increasingly building on-chain. We have co-founded USDC, which is the second largest global regulated stablecoin with Circle, and are the largest distributor of stablecoins in the US market and globally. including USDC, PYUSD, and others. And importantly, are continuing to build tools for developers for them to build their own crypto solutions, their own payment solutions, and excited to be here for this conversation.
Awesome. I'm Emily Sands. I'm the head of data and AI at Stripe. Thank you so much for having us today. Stripe builds programmable financial infrastructure. So we support millions of businesses around the globe in accepting payments, moving money, and growing efficiently. Those millions of businesses include many SMBs, startups, including most of the AI startups, and also very large enterprises, including about half of the Fortune 100.
Hi, everyone. Thanks for having me. My name is Rich Widman. I run Google Cloud's global crypto strategy. Our team is really responsible for doing basically three simple things, not to understate it. The first is our main charge is to think about how large enterprises like Google incorporate some of these new technologies, not just in terms of our products, but also into our own kind of financial infrastructure, our own financial or enterprise DNA. The second thing that we're responsible for is we recently launched a layer 1 blockchain called the Universal Ledger, which is built for institutional payments, which has dominated much of the discussion today. And then lastly, we're also responsible for working on large open standards related to agentic payments, most recently the Agentic Payments Protocol, or AP2, which we partnered with Coinbase and about 100 others on in terms of thinking about what agentic commerce will look like, what forms of payment will agents use, and how do we complete that trust chain so that users and merchants can transact with AI confidently.
Great. Well, Emily, we'll start with you. Agentic commerce, we've heard about that a bit. What is it?
So we're all experiencing how AI is shifting, especially over the last year or so, from just knowing, giving you the answer, to doing, executing on your behalf. And that shift from knowing to doing is quite profound, and one of the first industries that it's transforming is commerce, how commerce gets done. Agentic commerce is actually a spectrum, but I think of it as an agent facilitating a transaction between a buyer, whether a consumer or a business, and a seller. And if you think about a very simple but powerful consumer experience like instant checkout in ChatGPT, you can go today and look for a Halloween costume and get recommended costumes from millions of merchants. Maybe they're not all selling costumes, but certainly millions of merchants selling on Etsy, and you can buy direct in one click. And that feels slightly more deterministic than maybe the pie in the sky version of agentic, but along the spectrum you see things like Perplexity travel search and booking agent, where I can say I want to go to Paris, these are my dates, here's my budget, and it finds the flights and finds the hotel and gets the reservations for me on my behalf in a cohesive package. And so, Stripe has worked with businesses for over a decade, helping them sell wherever customers are. And early days for us, that was helping you sell online and in apps. We also have an in-person payments product with Terminal. And then it was helping businesses sell through platforms and marketplaces. And today, the new wave is agentic. And so we're really working arm in arm with the merchants that run on Stripe to help understand what is agentic commerce going to demand from economic infrastructure. I'd say there's two core needs that are sort of bubbling up to the top. One is businesses need to have a way to crisply articulate what they sell, their products, their prices, their inventory, their checkout experience to agents. And just like there's not one model provider to rule them all or one model to rule them all, right? We're all switching across providers and switching across models. We also don't believe that there's going to be one agent commerce solution to rule them all. And so we recently announced the Agentic Commerce Protocol, which is a shared standard, a shared language really, that allows merchants to communicate cleanly with agents around what they sell, how they price, and how their products should be shown. We co-developed it with OpenAI. Millions of merchants have already adopted it, and we're really excited to see the traction because a core challenge for businesses of all sizes, but especially small businesses, is making sure that they can efficiently expose who they are and what they sell to these agent facilitators. The second issue popping up, the second need, which won't surprise anyone in this room, is just fraud and growing risk vectors in the context of agentic commerce. And these are really multi-party risks, right? So as the consumer, I want to make sure my payments credentials are safe. I don't want the agent to see them or use them without my permission, nor do I want the merchant to see them or use them unless there's need. As the agent, I actually don't want to be directly in the flow of funds. I don't want to be the merchant of record. I don't want to take on the risk for the transaction. I just want to facilitate the transaction between the consumer and the merchant. And then as the merchant, well, gone are the days when I can just block all bots, right? Those heuristics aren't going to work because they're going to throttle growth. I need to be able to distinguish which are the legitimate transactions from legitimate customers passed through legitimate agents versus which are malicious. So, we recently released our shared payment token, which is a new payments infrastructure that allows the agent to tokenize the payments credentials of the consumer and pass them over safely to the merchant. And as those tokens are passed over, they include fraud scores. The same fraud scores from our Radar product, which has been around for over a decade, to help the merchant understand the validity and credibility of that transaction. So, again, early days, I think as we move down the spectrum of I'm just buying a Halloween costume in ChatGPT to I'm really unleashing agents to go do, most of my day-to-day commerce for me, we'll continue to evolve the protocol, we'll continue to evolve the underlying infrastructure like the shared payment token. But however it evolves, it needs to be an open ecosystem because, again, many merchants need to be able to sell through many agents, and it needs to work safely for the consumers and the agents and the merchants alike.
And I'm sure the protocol supports different payment methods, but cards is what it's starting with right now for the most part.
Lots of talk of stables today, but many people still use credit cards, believe it or not.
Okay.
Yes, so we support over 125 payment methods. And I'll also note, I said open as if that's only open across agents or open across merchants, but it's also open across payment providers. So we are often passing that shared payment token over to the merchant to use on another PSP. That they're operating on. And so we really want to make it easy for global customers to engage in agentic commerce. We support over 125 payment methods today, but we also support the shared payment token used on other PSPs.
I think that's one of the, just to chime in here, one of the focuses that we had when we worked on our standard was something similar to this, which is, we should let the consumers and the app builders and the merchants kind of pick the path of least resistance or the path of optimal outcome for them. And it's one of the reasons why when we were talking about this, I think a lot of the discussion around any agent payment protocol was really, what does payments look like today? And how do we make payments today work with agents today? I think our point of view was what will payments look like tomorrow? And when we think about agents and their capabilities in the commercial realm, what are some optimal forms of payment today that might be small, but we think have an opportunity to maybe have even a head start in this world. And I think that's one of the reasons why AP2 works with X402, which is the open standard that's what's actually been around for quite some time. I don't want to bore people with this, but it's been around since the beginning of the internet, but it's basically an HTTP request that's called payment required. And so in many ways, we actually see stablecoins as an optimal form of payment for agents because they do facilitate all the things we've been talking about today, which I won't rehash. But I do think it is important as we think about what merchants want and what consumers want that we leave the option open to them as opposed to kind of dictating or even just walking them down the path of inertia that already exists in the space. But I do think there's a lot of unhobbling that still has to happen there. It's still early days for sure.
I mean, the internet taught businesses that they need to meet customers where they are, which was online. I think agents are teaching businesses that they need to meet intelligence where it is, which sometimes is in MCP servers and has a bunch of different, right? And payment methods and payment infrastructure will need to evolve to support that.
So Alicia, going towards stablecoins a little bit, what's been happening there? Like, what are some of the recent developments that you're looking at, and how does that play into this space around agentic commerce?
I cannot agree more that we need to meet customers where they are. And what customers have shown us is that stablecoins are being rapidly adopted. Stablecoins have crossed $300 billion of market cap. And the two that have been adopted, importantly, are open infrastructure stablecoins. They are interoperable. They have deep liquidity. They were built on permissionless networks. And I think that's a really important data point around what we're seeing customers adopt. So they were born from necessity to enable traders and market participants of crypto trading have a US dollar to settle into in a 24/7 market. Regular fiat dollars did not offer that because banking hours were not matching the crypto markets. And so as market participants grew accustomed to stablecoins, it's now opened up this door to payments. And we have three catalysts that have occurred. One is regulatory clarity. And with the Genius Act, and for many of you who have been involved in getting that legislation passed into place, I'm really grateful because it has provided now many market participants the confidence to come and now build in this space. We are seeing growth and adoption of banks, PSPs, corporates, merchants. Everybody's now saying, okay, this is interesting. Let me talk about the benefits of stablecoins and what payment flows those could be uniquely suited for in my business. It's not going to fix everybody's problems. There's going to be a lot of credit cards. I fully agree. Just like we text, we email, we send mail. Like we have lots of ways we communicate with data. We're going to have lots of ways we communicate with value and we send value to one another. So, but what we have today is regulatory clarity. We've also seen blockchain scaling. And so we now, for example, with Base, our layer 2 solution, we do $1 trillion of monthly volume on Base. We are already at the thousands of transactions per second. This is real. Theoretically, it has no upper limit on its scaling. I think it's important to think about companies that are focused on scaling only may be missing security and or decentralization. So this is an important three-legged stool. I don't think it passes notice that AWS was down yesterday and it impacted a lot of access. Ethereum was not down yesterday. Base was not down yesterday. So decentralized protocols show a lot of resilience.
There was reports of some issues with Ethereum. There was absolutely no reports of anything going wrong with XRP, however.
Already things such as optional privacy on Base, the tooling continues to get better. It's much like AI. Like every month, every year, we just see big leaps forward in terms of these technical advancements. So where this dovetails then with agentic commerce, where we're also seeing these big leaps forward day by day, I think that stablecoins, much like Emily and much like Rich said, are uniquely suited to agents. Agents can't open a traditional bank account. Like that doesn't get through a bank onboarding process. They can open a wallet. They can be programmed. These are programmable dollars where they can set limits. They can white label the addresses they want to pay with. And as you think about the growing types of machine-to-machine transactions that we're going to have, we think it will grow up alongside of human-to-machine transactions or human-to-human transactions. But it's going to be a growth of the number of transactions that we see.
There's a new poll in the chat.
And so stablecoins, we think, are uniquely suited to micropayments. Like, it's really hard to do a
Thank you for everyone tuning in. Please do hit the like button, subscribe. New poll in the chat. Cathie would be next to speak. Very, very, very interesting, this one.
It's uniquely suited then to, hey, go do some code for me. Oh, you need to go buy compute? Great, go buy some more compute power from Google Cloud. Like, program that in. Moving with speed. So I think we think there's a lot of very natural problems that will get solved immediately with stablecoins. And we're just at the beginning. And then as our colleagues have shared, each of us, we are all involved right now in building critical infrastructure. We've talked about X402, which is enabling any developer to seamlessly embed payments now. We are building these as open standards. We are sharing these out to the world for others to build because interoperability, adoption, we think will grow to create the most consumer and business benefit. It will lower the cost and create just more inclusion into the financial systems. There will be use cases that will go through different paths, but we believe that this will drive a lot of global adoption of these technologies.
Yeah. Rich, this morning we heard panelists mention the use case of agents scraping the internet and reading content and making these microtransactions. How do you think about that relative to DP2, X402? Is this in that agentic commerce bucket? How do the different technologies support those types of microtransactions?
Yeah, so this is, I don't want to get too deep in the weeds on the technical side, but if you're a builder in the audience, right, and you're used to making API calls, and a lot of API calls, honestly, could be done by an agent on behalf of the user. And so whether it's the sort of almost like the pay per crawl kind of example that's been used, there's a whole host of others, right? We think about it in the context of even just think about bots interacting with websites or anyone interacting with the website. it's kind of funky to payment gate it for a bot right now, but with X402 or some of these agent payment protocols, you actually could have a bot hit a website, it get a 402 request for payment, and then a micropayment could be made to allow that agentic intelligence to basically have some limited access to the site. So it's, instead of it always being, it's got to be a proof of a human, or I'm blocking it entirely because I'm worried about IP or other things, there's actually now another modality for commerce that can take place. And then in that context, you would think like, well, what is the value transfer that should be paid by an agent for looking at a single website page? Maybe it's a couple cents, I don't know. And in that context, a traditional payment method really just wouldn't make sense. So I think when it comes to anything that involves an API call or hitting a web page, these things can be wrapped by an agent in some ways and then served either to other agents or users who want to interact, and having a common protocol or standard with which they can make a payment, I think is really important. Otherwise, you're just going to end up with really just a bunch of bad phone calls between agents or people and agents trying to get access to a website and saying, oh, well, I only accept this, and you haven't sent me the standard payload I'm required in order to authorize this payment. So I think it's really just about that script. The other thing that I see as an opportunity here is really thinking about how people browse, right, and like the buying experience generally. And so in many ways, I think the agent that we're used to interacting with of yesteryear is this little chat bot that like you go to the insurance site or you go to the Reebok or the Nike website, and those things are pretty much useless unless you really hate this merchant and you want to yell at them and like you're like, I just want to talk to somebody, you talk to the chat. But I do think there's an opportunity where websites can become far more optimized for browsing, where an agent actually helps me navigate the website in a way that looks and is far superior than what happens today, which is I type in something for like, I'm looking for shoes. It gives me a list of shoes that are for men, size 10.5, and I'm just going through very slowly. You could have a personalized experience that I think agents will unlock, where it sort of is doing the hard browsing for you and surfacing up options that it thinks you'll want. So again, that's a situation where the agent is playing a role either by helping the user interface with a system, a website, or with an API of some kind, and then enabling new forms of commerce entirely, right? So the example of the browser looks exactly like what it is today. It's just an agent optimizes it. But doing API calls wrapped by an agent looks very different than what it looks like today. Usually developers are getting an API key. They got to go to the website, they put their credit card in, they get the API key, they go back, put the API key in their coding dashboard, then they access it. And that's just a really clunky experience for things like data or any news feeds, pricing feeds, and things like that. So our view is that it will accelerate in many ways the proliferation of apps that contemplate, we'll call it agentic workflows or machine-to-machine interactions, but it will also optimize what I would consider to be like human-to-digital interactions or human-to-web interactions in a way that perhaps is probably a little bit more real for folks in this audience as opposed to the developer ecosystem.
So we heard a little bit about credit cards and stablecoins, and then the base infrastructure. We're at the Fed, so I'm remiss not to mention FedNow and then the work there also, because we've been doing quite a bit of work on FedNow and the real-time payment schemes at Modern Treasury. And so I think even there too, when we think about agentic commerce, there's potential as those rails progress around the information that's encoded in the payment rails, the request for pay standard, potentially coming into some of these experiences, opening up other payment methods for the agents. So I think a central message here is there are different rails available for agentic commerce. It's not just any one of them, but there's high standards for what the rails need to support. For Cathie, I was hoping you could talk to us about why this all matters. So why is it good for society, the economy, if we have more commerce going through agents?
Yeah, and I'm learning a lot. Thank you. Oops, here we go. Learning a lot. So thank you to the panel. It increases my confidence that real economic growth, real GDP growth is going to accelerate. We have had a thesis for some time that productivity gains are going to drive real GDP growth much faster than anyone dares think. And I'll just give you a quick reason. So if you look at, and bear with me a moment, if you look at the period from 1500 to 1900, there really wasn't any innovation. And according to our chief futurists' analysis, working with academia and so forth, Real GDP growth globally in that period was 0.6% per year. This was global. Then we had the Industrial Revolution, so three major innovation platforms back then: internal combustion engine, electricity, and telephone. Real GDP growth with that revolution, and that's the last technology revolution, true technology revolution, cutting across sectors. Real GDP growth increased from 0.6% to 3% for the last 125 years. We believe that with the breakthroughs like this one, and the productivity gains, because that's really what you're talking about, that are being unlocked here, that real GDP growth in the next 5 years will accelerate to 7% plus. And productivity gains, of course, now that's a global number I'm talking about as well. Productivity gains, knowledge worker productivity gains are the biggest reason. You know, we see productivity gains shifting up into the 4 to 5% range, if not higher. So this
There's a new poll in the chat.
Our confidence. I love the open source movement and how, you know, I remember in earlier days in tech, and I've been around a long time, there were fist fights at this moment in the evolution of new technologies. We've learned not to do that, but learned about programmability, interoperability, open source. So again, it's increasing my confidence that the productivity gains that we are projecting coming out of the 5 platforms I discussed with blockchain technology and AI, 2 of the most important, it increases my confidence that these growth expectations will be realized.
The historical numbers are really interesting there too. You know, we see so much investment going into AI right now, but how does that compare to what we saw 100 years ago for other similar waves? Is this normal? Is this a lot? Is it worth it?
Yeah, we equate this to you know, the massive investment that took place around railroads and the early days of transportation. But what's different about this one is railroads had limits, right? Intelligence and imagination does not. And so we are looking at investment dollars. I know the big question is this another tech and telecom bubble? We do not believe that at all. First of all, back then, the seeds for what we are enjoying now had been planted during the 20 years that ended in the tech and telecom bubble. They were seeds. There was too much capital chasing too few opportunities too soon. The technology wasn't ready and the costs were way too high. We did not get the cloud until 06. Again, there were gleams in the eyes. I remember them. I was in the business at that time. We didn't get the first big breakthrough in AI until deep learning, 2012. Even bigger, thanks to Google, transformer architecture in 2017. And I can just give you a sense of how off-base investing was back then. If analysts had been using something that is central to our research, Wright's Law, they would never have invested in personalized medicine back then. It cost, to sequence the first whole human genome in 2003, $2.7 billion. We were not at a scalable point, $2.73 billion. Today we're down to $200. And we have, you know, the convergence now of life sciences and AI. So seeds back then, flourishing now. And I think, and this is somewhat contrarian, but it does, again, as I said, it does fit with Wright's Law. I think we might be underestimating the impacts of AI. Are there going to be bad investments? Yeah, capital chasing some ridiculous ideas. Always at this point in the cycle, there are. But given the productivity gains we see being unlocked, we see a lot of this investment as justified now.
That makes sense. So, Rich, how, if you're a leader, a public or private institution, company, how should you be thinking about this? Like, what's too early? What should you be investing in at this point?
Yeah, I mean, this is kind of like the ultimate question. I think if you're at a large institution, whether you're a regulated bank, whether you're in the tech space. So in many ways, I think this type of discussion, like what's happening here, is actually very critical to the next step. One, because it creates an opportunity for people to share ideas in an open way, much like the open standards we've been talking about for the last 30 minutes, right? Not necessarily written in code, but written in sort of communications and emails about, hey, we're interested in making the leap. How do we mutualize the risk with the right partners such that we're all marching forward on this path to innovation and trying to unlock the power of these technologies without necessarily owning all of the risk ourselves? And so I think, not just the public-private dialogue, but also private partnerships. That's been one of the key things for us. And I already mentioned what that meant to us in the AP2 standard, right? It would really not be a good idea, in my view, with all the change going on to basically launch a closed source point of view about how payments and agentic models should work. But even when it comes to some of the technologies we're talking about today, stablecoins in general, our journey has been one of partnership, just straight up. And the reason for that is we cannot do everything ourselves, right? Every institution has its strengths, it's the things it's very good at. It has areas where it needs to supplement where it's not its strongest. And so I think that's been the path here, is like people who are trying to kind of go it alone. I find that they struggle the most. Maybe it's a build-buy partner decision, but that's generally been our point of view, is there are things that we can do well and we'll be opinionated about. AI is one of those things. There are things where we know we have partners in our ecosystem where they're the subject matter experts, and doing a 1 + 1 = 3 situation is actually better than us just trying to do that ourselves. And those are our payment partners, it's the custodians at the crypto companies, it's the protocols themselves. We haven't talked about auditability and accountability when it comes to agentic commerce, but that is where blockchain protocols shine. Because right now, if you think about traditional payments and rails, there isn't really a public auditable record where both agents of the user and of the merchant would actually be able to verify something happened. And so that's, we are trying to work through that layer cake, offer our own technology where we think we have a strength, and then pull in partners where that works. I think that's actually, probably we all agree with this on the panel, is that there's some things that we can do on our own, and then there's some things where we're a little bit better together.
And I would just encourage all of the companies to listen to their customers. What we're seeing now is that customers are really demanding the products and they are seeking the benefits. And so listen to your customers, what do they need, and then serve them in the best build-buy partner way that you believe that is best for your company.
Yeah, talking to customers, always.
Always, customer's always right.
Yeah, customer's always right. Cathie, how do you think, for folks here from the public side, how should they be thinking about accelerating this innovation? What's important to support the ecosystem as it's in this moment?
Well, and I'm going to thank Coinbase for its leadership. I remember in the day when the SEC was suing Coinbase, we were sitting there saying, okay, what do we do about this? And your leadership really helped drive the clarity, the regulatory clarity that we are beginning to enjoy now. So anything...
Yeah, I mean, they were suing Ripple in a much, much worse manner, and Ripple actually came to Coinbase's rescue at the end of the day. They failed to mention that.
We're looking at the prediction markets and thinking this could be a real place, again, for more clarity, and we're seeing some, but risk mitigation in terms of commerce, buying insurance for your air flight. I mean, it's a ridiculous cost now. If we bring, it's really bringing consumption and investment together. I think that's a convergence that we're seeing more and more. I heard probably 10 years ago, Jack Dorsey and Mark Benioff talking about this concept, and I'm hearing it more and more up here as well. So this idea that the consumer is involved in deciding how much a risk, covering a risk, insuring against a risk should cost. So I would also say this idea in terms of clarity, but also technology, the programmability, open standards, not putting roadblocks in the way there. I think that is going to be critical. Again, we're hearing this on the panel. And so, I think because our regulatory regime was so hostile, especially against blockchain technology, we're coming through a rubber band stretching, and now it's going because we had a lot of time to think.
We did.
We had a lot of time to think, and it might have been a blessing in disguise. We certainly didn't think so at the time, but I think a lot of very good things are happening because regulators, they understood finally that if we were going to block innovation, it was going to leave our shores. And for goodness sakes, this is the next generation internet. We started that movement. We should complete it, and we should encourage it, into the rest of the world now that the cost of innovation is collapsing as much as it is.
Well, we're going to move on from agentic commerce to other good things that are happening in the world. So we'll get back. I can see from the questions we have agentic commerce questions in a bit. Emily, I was hoping you could talk about how AI is just impacting startup formation, the types of things, and what people are working on, and what is that demand of the payments infrastructure these AI companies need?
Yeah, so we talked a lot about agentic. Agentic is a sliver of the AI companies and AI work and AI value being done. And one of the things that's fun about working at Stripe is we get kind of a front row seat to each successive wave of innovation. The current wave is AI. And we are a bit of the skeletal system for AI companies. So they use us, yes, for payments, but also for billing and for reaching global customers and for tax. And so, all of the Forbes AI 50 companies that actually monetize on Stripe, and we get this kind of glimpse into what's happening with AI. You mentioned, Richard, the importance of symmetric information. So maybe I'll share a few trends in the AI wave we're seeing, and happy to go from there. The first is just the rapid pace of monetization. So many of these companies are private. And so it's a natural question. Is it a bubble? Is there revenue? Is the revenue real? Maybe only investors know, or the flashy number that someone puts in their press release. But I can tell you from looking at the AI 100, we call it, the 100 AI companies that are highest grossing on Stripe, the monetization is very real, and it's a pace unlike anything we've ever seen before. So to give you a sense, these AI companies, on average, get to 30 million ARR in just 18 months. If you want to benchmark that with the 2018 cohort of equally promising top 100 SaaS companies, that's 3-4 times as fast. And the earlier cohort, right, you get to 1 million ARR. You get to 1 million ARR in less than a year. Again, 4 times the pace of earlier SaaS. And part of that is that these companies are going global basically from day one. Our AI 100, they finish their first year already selling into 55 markets and having the majority of their revenue come from outside their home market. And that might not surprise you if you're talking about a French startup that also sells into the US, but it is also true for US companies selling abroad, right? They're selling models and infrastructure and digital art and music and all sorts of borderless goods and services. And LLMs are really good at translation. So it's really easy to go global fast and to grow revenues very quickly. The second trend we're seeing is actually in the monetization model. So traditional SaaS had near zero marginal cost. So it made sense to sell sort of seat-based licenses. But with AI, the costs, the compute costs, the GPU costs are very real. And so that's breeding whole new monetization models. Usage-based billing, right? Charge per token, per workflow. Outcome-based billing. Intercom's a great example. They charge per support ticket resolved, which is a great way, actually, to tie pricing to the value that they're creating for businesses. And then most recently, if you look at the companies, starting up over the last couple quarters, we're seeing a growing swath of what people call AI wrappers. And sometimes this is used in a derogatory way. I do not mean it in a derogatory way. These wrappers are brilliant, right? They are bringing an existing LLM that somebody else has and providing a wrapper with the local relationships and domain expertise and data to solve a problem in a vertical industry, right? So Nabla and Ascribe for healthcare, or Harvey for law, or Studio for architecture, right there. And we saw the same thing in SaaS. Started vertical, started horizontal like Salesforce, went vertical like Toast. But the move in AI is happening much faster. And the monetization corollary of this is that these wrappers, because they're built on top of someone else's LLMs, have business models that are inherently tied to the cost of the underlying LLMs. So increasingly, we're seeing monetization models that track and price in real time to the changes in the underlying LLM costs. You can think of it as like a percentage on top. So that's the second trend. The third trend I would say is actually stablecoin. We talked a bunch about cards, but like if you go to Vercel today to use V0, you can buy in stablecoin. That wasn't true just a few months ago. You can think of many of these AI companies. Shadeform is a great example. They're a GPU marketplace. They're selling internationally, right? So ACH isn't an option. And they have high dollar costs, like you're talking thousands of dollars in your transaction. So international cards are pretty unsavory. You get hit with a 4.5% fee, and you're likely to be declined at that size. So 20% of their revenue today comes from stablecoins. And we actually ran an experiment with them and learned that half of that 20% is fully incremental. As in 10% of that business would not be being done at all if stablecoins were not available because those buyers did not have access to another payment credential that was relevant. We talked a bit about fraud, but just to state the obvious, like transaction fraud, fraudulent disputes, that's what really matters if you're a retail company or traditional SaaS. If you're an AI company, you actually care a bunch about your compute being stolen. So you care about the full funnel of fraud. You need to know at the time of sign up, is it a bot? You need to know if the person engaging in your free trials are going through serial free trial abuse. You need to know if the person buying your large enterprise program and then burning down your credits is actually going to request a refund and leave you in the red. And so we're seeing a need for an increasing breadth of fraud-related signals well beyond sort of traditional fraudulent disputes. And then I'll just close with businesses are now being built in AI dev tools, like Vercel, like Replit. And it's not just AI businesses that are being built in AI dev tools. It's all sorts of businesses. And so payments infrastructure now needs to be deeply embedded in those tools because building a business isn't about building a functioning website with a back end and a front end. It's also about supporting transactions and enabling the money flow. And so we have a new product called Claimable Sandboxes, actually, which just lets you build your business in a box right within your AI dev tool. But I really think in the same way we talked about agentic commerce, consumers wanting to buy in whatever their AI tool of choice is, we're increasingly seeing the same trend for developers.
Can I just add one thing to this in terms of are we in a hype cycle? As we've sized it, by 2030, consumer-related, whether it's subscriptions, commerce-related, or advertising. Advertising is going to be a much bigger business. But those three will add up to, by 2030, $1 trillion in revenue opportunities. And many people will say, well, goodness, we're seeing spending $500 billion by Stargate. And well, that leaves out sort of the enterprise side. And I know we'll probably get to this in a moment, but the enterprise side. And we think between hardware and software, that is between a $8 to $9 trillion opportunity and maybe 15 trillion by 2030. For some of the reasons that you're stating, this is moving so quickly and it is having such a profound impact on businesses so much more quickly than we've ever seen before.
And what does it demand from financial infrastructure? It demands seamless and fast spin up of a business to integrate payments. It demands a much more robust and broader set of fraud controls. It demands access to new payment methods, including stablecoins, and it demands economic infrastructure that supports all these new monetization models so that the market can figure out efficiently sort of that intersection of supply and demand.
Right, and just to close this circle. So we're talking a lot about, it's B2B, it's business to consumer. I think so much of the benefits are coming in, productivity gains, and that doesn't show up on the top line. It can be turned into margins, increased wages, increased R&D, or lower prices. And so I think many people don't understand the other ways this can turn around other than directly to the top line.
Alicia, we heard Emily mention stablecoins as part of that flow a second ago, and I was hoping to just go back to that to talk about fraud as it relates to stablecoins. How should businesses think about that? Is it more or less than what they see with traditional payment rails?
It's the same problem with different solutions. So fraud exists in all payment types. Fraud's existed in credit cards, in checks, in wires, in cash. So there is fraud in stablecoins. However, stablecoins introduce a whole new set of tools to combat fraud. And I think it's important to think about those as opportunities. It's the first time you can see on-chain and permissionless networks the entire payment flow. You can use then AI and machine learning to look at payment activity and really have better informed fraud models that you can do proactive risk management on. You have the ability for whitelisting and blacklisting various addresses on a personal basis, at a company level, at an economy level. There's also a concept of freeze and seize, where if a stablecoin ends up in a bad address through proper law enforcement and through proper judicial proceedings, you can freeze that asset and then remit the underlying dollars back to the fraudulent actor. The other thing with merchants is these are final. There's finality in these payments. There isn't a concept of chargebacks with stablecoins. And so from a merchant standpoint, this is a benefit to them. You can still then have different processes to then have reimbursement. But the key here is the tools only get better. As I mentioned earlier, this technology continues to evolve and build. And we are in the earliest days of looking at what fraud prevention is, but we actually see less fraud, quite candidly, on our own systems coming from.
Please do make sure you hit the like button and also subscribe if you haven't done so already. I'll recap you on that big XRP announcement as well. We've got Cathie Wood here giving some good insights. We've got Stripe AI ahead there. We've got Google ahead. We've got Coinbase here. We've got lots here. And then we're actually going over to BlackRock as well. So yeah, stay with us. Hit the like button. Thank you everyone for tuning in.
In looking at reconciliations and making sure that we are then ensuring that the transaction was legitimate, my own team can reconcile our crypto transactions. One person, half a day. It's basically all automated. It takes a team of 15, like 3 full days to reconcile our fiat transactions with all of the payment. So your back office costs, your settlement risk, you just take a lot of risk of settlement and risk of reconciliation out of the back office that accrues to the bottom line.
Does that end up... that ends up helping you just build more at the end of the day. So, I mean, Coinbase pushes out a lot of product. Seems like this probably helps.
It's all about efficiency, productivity gains. We can see by the end of the year, half of our code will be written by AI bots. And so that's the equivalent of almost doubling our R&D workforce. That's crazy.
Wow. Yeah. Cathie, I'm sure you want to touch on that. I mean, what are the implications of that? I mean, there's a lot more innovation being driven by AI-assisted engineering teams, a lot more R&D there. What was the result of that at the end of the day?
Yeah, sorry, Matt.
Go ahead.
It's the first place we saw how provocative the productivity gains were going to be. And that as we were doing our forecasts, we were having to raise them, as some of the early building blocks came through. So, and it got us to thinking more about that GDP growth number. Yeah. The productivity gains, again, can be turned around in so many ways to drive real GDP growth. So this panel is increasing my confidence in that forecast.
Yeah. Awesome. Well, I think we can move on to the Q&A. Just a reminder, folks can pop questions in here, and I'll take a look as we go. But there are 2 questions that are sort of similar on here, going back to agentic commerce. They're a form of what are real-world places where you can actually use an agent, so use ChatGPT today to make a payment. I'm curious if anyone on the panel has bought something with an agent. We could start there as an anecdote, but otherwise, where are places we can actually use these today? Go ahead.
So I really did buy my 6-year-old's Halloween costume on ChatGPT Instant Checkout. It hasn't arrived yet, but we still have like another week, so I feel good. No, it'll come. I have tried using Perplexity's travel search and booking agent. Actually, the Paris example, I was going to Paris for a Stripe tour in Paris, and then I was staying with my family, and it gave me great recommendations. I did not do the all-in one-click package, but I could have with one click had it buy my flights and buy my hotels.
Was there a reason you did it?
The reason I didn't is because my work had already booked my flight, so I actually didn't really need the full package. And then FIA, Bill Gates' daughter's startup, is actually really cool. You can use it it's agentic shopping, but it also does like price compares. So it's sort of an always-on agent to figure out the best price for you. And then there's a bunch of niche-y ones. So one that I like is Barista Agent. If you have like specific tasting coffee beans, but you want to broaden your aperture, it sounds really niche, but I think it'll just give you a sense. Like there's not going to be one agent to rule them all. You go and you tell it like your preferences. I like kind of chocolatey beans, and then it goes out and it like scours the internet, but you have this conversational interface to engage around your bean preferences, and then it buys it, and they literally showed up at my door. So I think there's a lot of examples in the consumer space.
She is very bubbly, isn't she? All her hand movements is crazy. Brings good energy to the show. I love it.
With a complete Stripe integration and Claim Your integration. So I think we are on the path, and I think it is still quite controlled, quite deterministic. Humans are still generally making the final call for the basket of things they are buying. And it'll be interesting to see kind of the pace of evolution.
Yeah, I think it looks a lot, it feels very similar to me when I was younger and buying things on the internet, and you're like, I don't know if this is actually going to get here or not, but I hear this is really cool, and my friend said that.
Let me know in the chat. Say yes or no. Shall we invite Emily Sand on the show, the AI head of Stripe? We can invite her on the show. She'll probably come. So let me know, yes or no. Should we invite her on the show?
What we see is very similar to what Emily said, right? We see a lot of what I'll call like paved roads already that kind of unhobble some of these issues that I think we've kind of spotted throughout the panel, where more work needs to be done. But there is a ton of interest. Like one of the demos that we did live, actually I think it was on stage at one of the Coinbase events, was somebody basically using their agent, their Gemini agent, kind of troubleshooting an issue in their house, which is, for any of the dads here, this is probably something that's near and dear to your heart, at least it is to mine. And there's a problem, and they're talking to their agent, and their agent says, hey, give me a second, I'm gonna go and look for some agents that deal with home improvement. A Lowe's agent comes into the picture, it basically diagnoses the issue, and then it gives him a list of options that he can purchase for this new part. I think it was an appliance or something. And you can actually, the way that we do these demos is we unpack it so you can actually see the messages between the agents, and you kind of almost get to look inside the transactions themselves. In a consumer context, you're not going to see all of that. It's going to be abstracted away. But just in that demo and in that work stream, you can start to see like merchants are realizing how much it will increase the velocity of consumer transactions. It's also going to change the patterns of consumer behaviors, right? Are they thinking about big box stores, or are they thinking about showing up here? And what I will say is every single merchant we talk to has an agentic commerce strategy, because they realize that people are no longer necessarily going to be walking into the stores, but maybe accessing their website via an agent of some kind. I think the other area where I see it that we've started to tinker internally, and shout out to some of the stable coins that we use like PYUSD, is actually playing around with.
Susan, we haven't really discussed Netflix too much. It's coming up, but no one's done a $10 super chat. If you want us to cover Netflix, you can do a $10 super chat, and we can do the full analysis for you. Susan, you might want to do that.
What I would say is like all the real world counterparty risks that might be involved in a B2B transaction. And so those are the types of examples that I think are quite interesting, and probably we'll see more folks work on this. But I have to say, in the crypto space specifically, there are teams that have run at this 1,000 miles an hour, and I know there are teams that already today you can use their agent. And by the way, you bring your own agent if you want, to buy things on Amazon, like order snacks for the office. And that, I think, is, again, they're doing, I would say, all of that unhobbling work. That it takes a lot of time, but we're going to start seeing people do that at an aggressively faster pace. I think the merchants will try and meet them in the middle as they see consumers prefer this path.
I'll just add on, in crypto, you can have an AI financial advisor that goes and buys crypto, buys the dip, manages your wealth portfolio in crypto, executes all your transactions, and we have a lot of employees internally who will test the bot against their own investments. And so they'll be on chain saying, did I buy the dip right? Did I invest in the right dollars? So it is moving very quickly, and I think that you will see use cases expand. And I agree with Emily, there's going to be multiple agents that serve multiple use cases, and I think that consumers really are going to lead this wave, and then you're going to see businesses follow up with products and services to augment and support them.
And I'll just add one thing there. That's very important because We think the consumer is going to move much faster than enterprises. Many people think this is about using tools in enterprises. No, it is not. It is about reimagining, reconfiguring your business. That is going to take time. You work with Palantir. We're only 70 people, and we're working with Palantir because I feel like this is so important and such a big opportunity. And we're doing this kind of away from the CTO. He's involved in it, but it has to be kind of orthogonal because the whole opportunity is orthogonal. So the MIT study that came out a month or so ago saying, hey, nobody's seeing productivity. This is going to be hard work to set up and really transform. It's going to take time, especially for the large enterprises.
It's actually, there's a question about what are the labor economics implications of these productivity gains? Are they offset? So it sounds like initially not as much, but over time, much more so.
What's very interesting, and we're experiencing it in our own firm, I thought we wouldn't be hiring many people, but we're hiring more people now. Why? When I go to the finance team, for example, why? This is the easiest thing to automate and with AI. And the answer is we don't have time. So we're hiring very young people who are AI natives, forget digital natives, AI natives, coming in and empowering them to make this happen. So, but in terms of labor, I think there's a bigger question. The history of technology is it is a net job creator. Sure, there's displacement, but boy, talk about the best time this could happen. Baby boomers, I think, are retiring. I'm not sure if this is quite the right number, 1.3 million per year. We have immigrants, let's just say the immigrant population growing much less rapidly and maybe shrinking in here. And so, you hear about truck drivers, you hear about transportation, hair on fire, that's such a big employer. They are, these businesses are being hurt by a shortage of labor. So we think, if you put into OpenAI or Grok, one of them, what jobs are going to be created in the next 5 years by AI? And you'll have to prompt a little further and say, we want you to use futurists, science fiction, sure, strategists, economists, technologists, all of that. You'll come out with a huge list of jobs. I highly recommend it.
Yeah. Another question we have here is, how is consumer privacy improved or at greater risk with agentic payments made with stablecoins? I don't know if anyone wants to take that, or Rich, it looks like you got something.
I mean, there's a couple things that I think there's a real opportunity to kind of improve the privacy surface area that consumers have vis-a-vis the merchants, right? So everyone kind of knows the story of they put some information into a website for a merchant or a financial services provider, that individual or that entity has suffered a hack, and then all of a sudden you have this issue. And so you can really start to create ways, and this is where it dovetails really nicely with some of the innovations that are happening in the blockchain and generally the cryptography space. We're experimenting with the idea around basically delegating authority.
If you haven't done so already, please do hit the like button. Please do subscribe. We've got BlackRock coming up shortly. 100,000. With 50 more subscribers, and we get up to 106,300 subscribers. Let's see if we can do that. Let's continue listening to this very interesting, important stuff. And then we've got BlackRock, and then Fed speech once again.
To basically this idea of giving our information to a third party, and then they just keep it forever. And the analogy that I like to go back to is it's kind of like you walk into the bar, and instead of them just looking at the ID and then they give it back to you and you go get a drink, they hang on to it forever. Even when you leave the bar, they still have your ID. And that's crazy. But that's literally what millions of people do every day. And so zero knowledge proofs kind of create that situation as it should work at the bar, which is they verify your age. In fact, it's even better. They don't even see the rest of the information on the ID. They would just know this person is authorized to be in this location, and then they have what they need from the merchant responsibility standpoint, and you as the consumer don't have to worry about the honeypot risk. So I think that, that chain of trust that we talked about at the beginning of the panel has an opportunity to make giant leaps, both as it relates to privacy, but also consumer control along the way. So that's one of the areas that we see opportunities, particularly as it relates to like identifying information or identity.
One question we just got, I think we can end on here too, is for Emily, just how do you protect the less tech-savvy users in these types of situations from people who are trying to drain their wallets, get information they shouldn't have?
Yeah, so I mean, in the case of agentic in particular, that sounds like. So this comes back to our shared payment token. So we are actually passing over the tokenized credentials needed to make the transaction for the product on the merchant that you have approved, and nothing beyond that, full stop. And before the shared payment token, we actually used an approach that's not dissimilar to financial infrastructure-wise, how we approached human agents. So like someone here has ordered from DoorDash or Instacart or something today, right? So if you like ordered from DoorDash, at the time you bought, you provided your credit card information. And then your DoorDash driver, who I'm gonna call a human agent, and then we'll talk about AI agent, was issued a single-use virtual card to spend on your behalf. So they didn't see your card credentials. They couldn't go buy whatever they wanted for themselves. They could buy from Starbucks near your location in the next hour for the amount you approved. And neither the human agent nor the Starbucks ever saw your card credentials. And actually our early versions of agentic commerce, before we had developed the shared payment token, used that same Stripe issuing product, single-use virtual cards, to accomplish the same thing. And so I think economic infrastructure has come a long way, but it hasn't come a long way overnight. The first version of agentic commerce was actually made possible by infrastructure that we had built for human agents, like these delivery drivers, so that they could operate on your behalf. And the only thing that's changing is you swap in the human agent for now an AI agent, but the protection mechanisms are actually quite similar.
I think the other thing that I'll just maybe say here about consumer safety is there's something in crypto that we talk about, which is building in public. And the benefits of building in public, right? This is something brought up and bringing it full circle to the DeFi panel, right? There are benefits to having these protocols be transparent and visible and auditable. And so in a lot of ways, I think the idea is that for the consumers who are savvy and they want to unpack that protocol, they can do so. But for the folks who are building applications where they have the touch point to the customer, there's an ability for them to be transparent to their end user if they need to, and also create that level of trust between the consumer, the application, and the underlying infrastructure or the guts. And so you have to do this balancing act of making the infrastructure invisible, right? People don't need to know how the roads work or how they were built in order to drive on them. That would be a painful process. But you also want to make sure that there's confidence in the safety of that infrastructure that they're passing on, say, for example, a bridge. And so in many ways, I think the idea we're trying to find is, with our service providers and partners, the right level of balance between giving users access to transparency, but also ensuring that they have the right controls and safeguards visible and apparent to them whenever they're using the application.
Awesome. Well, I think we're good to wrap up there time-wise. So thank you again. Thank you to the Fed.
Thank you.
Really nice to meet you.
Great to see you again. I cannot on our panel.
Oh, so much is happening.
So we are going to head into our last break of the day.
Okay, that's their final break of the day, and then we're coming back with BlackRock in about 14 minutes time. So we are up to date on that. Yeah, so what's happening next is tokenized products. Remember, Ripple, XRP, are really moving towards tokenization as well. We've just seen them buy G Treasury, going towards tokenization and using that those treasury assets and bringing them online. We've got tokenization next, and we've got Jenny Johnson. That's the CEO of Franklin Templeton. Their ETF was due to go live this week for XRP. So it'll be interesting if we get any thoughts on that. We've got Don Wilson, founder CEO of DRW. I don't actually know what DRW is. Someone let me know in the chat. Then we've got Rob Goldstein, COO of BlackRock. I mean, if Franklin Templeton talks about XRP, BlackRock might want to comment on that. Remember, BlackRock never formally put in an application, but now it's all changed. All they need now is an S1 application, and then a week later they'll be approved. And we're expecting that after the shutdown. Shutdown's now gone into week 4, so maybe it's in November. 1 week after the shutdown, I expect all of these people to start having XRP ETFs. Then we've got Cara Kennedy, co-head of JPM Kinex. And then that will finish, and we go over to Governor Christopher J. Waller. So another speech from Fed Governor Christopher J. Waller to wrap it all up. So we're going to be covering all of this in today's show. But yeah, you've got the time on the screen, 12 minutes until BlackRock come on the stage. Let's have a quick look at the markets. If anyone does want a chart review, we've got a little bit of time. You can do a $5 super chat and we'll do a chart request. And if anyone, still no one's done it, $10 super chat and we can do the Netflix earnings for you. So yeah, no one's done that yet. I remember Netflix, again, you'd have to like the company, but if you're invested in it or you want to trade it, there's always a big pump or dump with Netflix in my experience. Also, it will be quite nice. We've been live all day. If you do enjoy it, there's one way you can support the channel and support the viewers. The best way of doing it is what someone did earlier. 1917 A. Buckley gifted 5 memberships. It would be lovely to see every single member, every person watching, to just gift 1 membership. You're supporting the channel, but even better, you're doing that while letting someone else, you're being really kind, letting someone else have access to some members-only content, members-only chat. So yeah, it's all the membership perks you can give to someone else. The way you do it is, instead of doing a super chat, you come down here and then you choose to do membership gifting. Just if everyone just does 1, that's the difference between one person doing 50 and spending a lot of money, and then one person, and then everyone doing 1. It's a small cost for you, but it will make someone's day. I want to see a lot of subscribers now become members so they can be part of the family. So if everyone can do it, that would be amazing. Just 1 membership, instead of doing a super chat or anything like that. If every single person does 1 membership gift, that will be... Oh, someone's done Netflix earnings. Yes, okay, brilliant. Alex T. Vaz was on standby to do it, so we will do it. Alex T. Netflix TSA earnings. Yes, we'll do Netflix earnings. Thank you so much, Alex, for supporting the show. Yep, we'll do Netflix earnings then. Alex, let me just put it in the chat. Alex T. Netflix earnings. So yeah, again, if anyone wants to support the show and support us being live for 6 hours, remember we make a lot more if we actually make money if we do videos, not much when we go live. If you do a gift membership, that's one way of supporting the show and also sharing the love with the subscribers. So yeah, do consider doing that. Thank you, 1978 Buckley, for giving away 5. No one has to give away 5. You don't have to. You can give away like 50, but if everyone just does 1. And that's the power of the people if everyone does it. That would be awesome to see that rolling through. I'll come back to some of the charts as well. We've got 10 minutes before BlackRock goes live. I apologize, I'm still very unwell. So if I sound a little bit different, it's because I'm all blocked up. Okay, so gift membership, interesting. Yeah, it will be interesting. And if the way you claim it is as long as you're hitting the like button, subscribing, engaging the chat, YouTube chooses who it gives it to. Yeah, we've also got Tesla earnings tomorrow. If anyone wants to do a $10 super chat for Tesla's earnings. David Hensley has started it off. Are we going to get anyone else doing it? This is amazing. I don't know. David Hensley, thank you so much for always supporting the show. There we go. Look at this. Let me do this. Thank you, David Hensley. You have given your membership to Ali Education. Please thank David for your membership. Rhino Skid says sent on a 24-hour shift. Michael, you've been a bronze member for 2 months. Thank you for being a bronze member for 2 months. Do you get paid to cite there and go on and on? Love listening to them. I don't know what you mean, Marky, by that comment. Yeah, amazing. Thank you, David Hensley. That's made someone's day. Hi, do tense BlackRock's come. I don't get this joke about BlackRock intense. What's the tense got to do with BlackRock? I don't quite understand that one. Maybe I've missed something. Okay, so the markets pumped. They were down in the morning, really down. Then they pumped. Now they're selling off again. What's going on? Bitcoin has come back down to under 112,000. XRP is probably struggling to hold $2.50 yet. It hasn't held $2.50. What else is going on in the markets? I mean, gold and silver have been crazy today. Gold and silver. If we look over here, yeah, gold is down 5% today. Silver's down 7%. Massive sell-offs. But we actually predicted this. We said that we're gonna euphoria, and then you get these big sell-offs. Don't be surprised to get big sell-offs, and that's what happened with silver under $50. And we said with gold, it can come all the way back down to 3,700. But what is also possible is a big move down, a move back up, consolidation until its next move towards the upside. So I think we won't come all the way down to 3,700. We might, it's a possibility. But I think we've had this big sell-off. We'll probably maybe go down a little bit more, but probably just bounce back to 4,200 and then start accumulating before our next run up, just like we did a few months ago, where we went on a big run up, then a sudden sell-off, and then we turned into an accumulation pattern before the next move up. So expect some volatility, but I don't think it's time to sell all my gold and silver. Again, not financial advice. Do we have anyone else? No one else has done a membership, have they? No, I don't think so. Okay. BlackRock? Yeah, BlackRock's live in 5 minutes. So what I think we're going to do is go over to a break, and then this will start playing, and then I'll be back to finish it off with Fed's speech. So yeah, this is going to be playing, I think. Maybe we just stay live until it comes back online, and then we go on a break. Yeah, okay, we'll keep that running. How the subscribers doing? 105,244. If you haven't subscribed yet, please do subscribe. We will be covering the Netflix earnings after all of this as well, so it'll be a full day of streaming. I think Vaz will be doing that. What else do we have? If you haven't entered the giveaway, we're giving away $2,000 worth of XRP. $2,000 worth of XRP. It's all real. It's all not fake, like all the other X accounts that always make up a giveaway and you never see the money. We do this live on the show. $2,000 worth of XRP. It takes about 2 minutes to do all the entries, and you will be in. And that'll be a live draw. So if you've done entered the giveaway, there it is. Also, if you haven't got the newsletter, every single morning we bring out the newsletter. If I show you an example of the newsletter, you can see it here. Let me just show you what it looks like. So it's like a blog. You get the whole web page. You can get it on your mail every morning, or you can get it in the app. Essentially, what it is for real investors, not the people that just get the news from X and from multiple bias sources. We break down every single top story. So we give you the top 5 stories. Maybe sometimes it's more at a glance, so you can see exactly what's going on. First thing you read when you wake up, a couple hours before the bell, you get this, every single main story, and then you get the one big thing. You get a market snapshot, what's going on in the world, and then if any of those stories you want to read a bit further into, you get the 5 things you need to know today. That means you get the stories, the sources, what's it all about, my thoughts. Every single story is covered a bit more. Then you go over to the deep dive. Again, the deep dives really immerse you in that knowledge, whether it's a macro move, whether it's a stock review, whether it's a big announcement like today's was that $1 billion XRP bet. Other days it could be what's going on with CPI. Another day it could be the Fed meeting. Another day it could be a stock review. Another day it could be 5 mistakes everyone does investing and how to stay ahead of it. All of those things are in the deep dive every single day. Then you get on the radar what's happening every day as well. You get like tomorrow you've got CPI in the UK, Friday you've got CPI in what times they are, and then you get the chart of the day and all that sort of stuff every single day in the newsletter. Plus on Saturdays you get Vaz's EVTOL, the new emerging markets newsletter. So if you haven't got it, the link is in first link in the description all the time, and it's also in the live chat. Remember, if you click that link, let me just show you. If you click that link that I've just given you in the chat, you get to this page over here. The 7-day free trial is for the annual plan. So if you don't cancel, you'll be charged the annual plan. But again, that works out to about 30 cents a day. That's about a coffee a week. And you get all the best information. You also get one-on-one access, as in you can access me and you can talk to me anytime. Via text, not via video. You get access to community and everything else that we bring in the future. So that's the annual plan, the best plan in terms of the most cost-effective plan. You've got the monthly plan as well. There's no free trial there. However, you can try it for a month, cancel it. That's currently $14.99 a month. However, that will be going up soon. If you're already on it, it won't be going up for you, but that monthly plan will be going up soon. You've also got the founding plan if you want to be a founding member. There's also a free plan, so there's a plan for absolutely everybody. And there's also going to be soon, by the end of 2025, I'll be announcing the Martyn started with 4,000, now is at nearly 500,000. I want to see if I can do the same thing live on the show. So I'll be showing you the portfolio on YouTube. However, I won't be really having time to go through each one of my investments. On the newsletter, I'll be telling you why I'm investing in them, the company's backdrop, what the financials look like. Again, not as advice, but just sort of as a journal. And I think we're back. I think we are back. I apologize. The streaming software just died on me. It's because we've been live so long. Yeah, so it's not as financial. Can you hear me? Yeah. It's not, yeah. It's not for financial advice. I don't want to be just giving you when I'm buying what I'm. It's just to have a little journal, understand why I'm buying it, a little look into my mind when I look at companies to invest in, and I think it'll be quite fun. Yeah, so that will be all on the premium newsletter as well. So an additional perk coming to everybody as well. So that will be good fun. So yeah, there is everything you need to know about the newsletter that we now have on the show. What else? Oh, look at this. More people subscribe. Thank you so much. Another 49 and we get to 105,300 subscribers. That would be great. We are waiting for the Fed speech. That's in about 2 minutes time. I don't know why the time has gone taken off the screen, but that's starting in 2 minutes time. I'm going to actually, when it starts, I'll be going on a break, but I'll be back. I'll leave it running. But I'll be watching it as well. I just need to get some tea, coffee for my throat, and then I'll be back and watching it with you, and then we'll be wrapping up with the Fed speech and then going over to Netflix. So do stay with us. I'll just get everything ready for the break. I'll be back in. Here we go. So yeah, it will be live. I just won't be here, and I'll put that timer once we. Yeah, it'll be BlackRock coming. If anything crazy happens, then I'll run back into the room. But yeah, I'll just be putting this on the screen. Yeah, so BlackRock is coming out in about 2 minutes time. We're waiting for that to start any second. Also, if anyone wants to book in their other earnings, we've now got Netflix booked in for tonight. But just to let you know, we are in earnings season now. So tomorrow night, Tesla. I'm sure someone wants to look at Tesla earnings. If you want us to cover it, you can do a $10 super chat now and book it in. Alternatively, if someone wants to book something else, we can do that one instead. We've got opening bell. You've got all of these. VRT. To be honest, I don't know any of these. Yeah. Then you got Thursday. After close, you got Intel. That'd be great for AI wise. Fords. I know some people are investing in Ford. Friday open, you got Procter and Gamble, for example. But next week it gets really interesting. You might want to start looking ahead to next week. I think someone will want to request Tesla for tomorrow. But next week you start having Meta, Microsoft, Google, Coinbase, Apple, Amazon. Most of them on the same day, so it's first come, first serve. What else do we have? MasterCard on Thursday pre-market, UPS Tuesday pre-market, SoFi. A lot of options there. If you want to start booking them, you can. We're going over to BlackRock now. Here we go. This is at the Fed meeting.
Will be Colleen Sullivan. Colleen is the
This is live, by the way, completely and utterly live. No, live.
of investment management platform specializing in macro and digital assets. Thank you. Take it away.
Thank you. Good afternoon, everyone. I'm Colleen Sullivan. I co-head the venture team at Brevin Howard Digital. I'd like to thank Governor Waller, Sunena, Ria, Alex, and the other folks at the Fed for hosting us. It's really been an incredible day. I'll start by saying this panel, I think, is the perfect example of saving the best for last. Each of these panelists really, before it was fashionable or safe to do so, recognized the benefits of blockchain technology, that they outweighed the regulatory and reputational risk of being early to the space. As moderators, we were asked to set the stage for the panel, so I'll do that very briefly. Recently, SEC Chair Paul Atkins announced Project Crypto, saying we're at the threshold of a new era in the history of markets, and that the SEC will seek to modernize the securities rules and regulations to enable America's financial markets to move on-chain. So during this panel, we're going to talk about how we get to this on-chain future state through tokenization. Now, before all assets are tokenized and move on-chain, which I do believe will happen over time, we're likely to see a gradual merger of traditional finance and crypto. Digital assets like stablecoins, tokenized commercial bank deposits, tokenized U.S. Treasury money market funds, and all forms of crypto like Bitcoin, Ethereum, and Solana will trade and be used as good collateral in our traditional markets. At the same time, we'll see the reverse. Assets like public equities and commodities, which have historically traded only in traditional markets, are being tokenized and traded and used as good collateral in DeFi, as you heard during the first panel of the day. So it's very much a two-way street. Some of you may have watched the SEC's excellent panel on tokenization, and one of the interesting takeaways for me was that the panelists used similar but slightly different definitions of the word tokenization, and we had the same realization during our prep call. Tokenization means different things to different people. And I'll give one quick example. Let's take tokenization of public equities. Some tokenized public equities are synthetic instruments like IOUs or derivatives. They provide price exposure to the underlying, but they lack full legal ownership and governance rights. Other tokenized equities are issued natively on-chain, where the token itself is the security recorded on the blockchain. Our synthetic and natively issued tokenized shares of Tesla, fungible, both with each other and with traditional non-tokenized shares of Tesla stock. If they're not, what does that imply for liquidity and potential market fragmentation? Would a venue like the Chicago Board Options Exchange and its clearing firm, the Options Clearing Corporation, treat synthetic and natively issued tokenized public equities the same for purposes of writing covered calls and callers? These distinctions matter. We're now in a place where traditional finance brings scale, capital, regulation, and the world's deepest markets, and crypto brings transparency, programmability, composability, and efficiency. Together, I think they form a financial system that's stronger and more resilient than either would be alone. However, as this convergence happens, and as we now move into markets operating 24/7, 365, we need to ensure that the foundation of this new joint market infrastructure is stable, secure, and interoperable, and that it doesn't lead to fragmented liquidity, lack of fungibility, fragile collateral, and loss of privacy. So my hope today is to go a layer deeper in tokenization, and we certainly have the right panelists here to do that. So I'd like to begin by asking each of you to introduce yourselves, and if you could also share examples of what your firms have done in tokenization and the benefits that have accrued to your firms or your clients, as well as some of the challenges you see ahead. Jenny, you're in the hot seat first.
Great. Well, thanks, Colleen. I'm the CEO at Franklin Templeton, and we have built an infrastructure with a shareholder record-keeping system on-chain, a wallet infrastructure. It enables us to launch products on it. We, in 2020, launched a tokenized money market fund that's actually natively on-chain, and that allows us to do things like intraday yield. So if a hedge fund owns it for 4 hours, 22 minutes, and 36 seconds, you will actually get the yield for that amount of time. And I used to run our technology group, and we used to have record-keeping systems and none of them, because they're all batch process, allowed it. So it just creates so much flexibility. We also run validators on 30 nodes on, I think, 11 layer 1 platforms. And we have an asset management business within our asset management business that does model portfolios with tokenized crypto products. And we have a venture capital fund.
I'm Don Wilson. I'm the founder and CEO of DRW, which is a proprietary trading and markets innovation firm. We also founded Cumberland, which is our crypto trading arm, in 2014. So we were very early to the space. I think of crypto as kind of a warm-up for on-chain TradFi trading. And we're focused, we spend a lot of time thinking about that convergence and how we can leverage blockchain rails to make traditional finance more efficient. An example of that was this past weekend. We just did another set of on-chain U.S. Treasury repo transactions. And these were unique for a few different reasons. One, there was no intermediary risk on the treasury. So it was DTCC that actually put them on top of a blockchain. All the transactions were atomic. So USDC and some other stablecoins were used as the cash legs. In this case, there was also rehypothecation. Because it was done on the Canton blockchain, privacy was preserved. So only the participants who needed to see the transactions saw the transactions. They weren't open to the whole world, which I think is very important. And it did, in addition to DTCC, Circle, and some other stablecoin providers, DRW, Virtu, Citadel, B of A, and SocGen all participated in these. So, that's an example of stuff that's happening now that's that we're involved with, that we're super excited about.
Great. I'm Rob Goldstein, BlackRock's Chief Operating Officer. Interestingly enough, in 2014, my contribution on this topic was being the person in BlackRock saying, I don't know if I believe in this, but it seems big enough that we should create a small group of people who do nothing but obsess about this to figure out the right moment. And broadly, I would say the strategy that we've been employing at BlackRock is a strategy about bridging. You basically have the traditional capital markets, and then you have this alternative universe, this digital asset universe that has been evolving and obviously has tremendous momentum. And what we've been doing as a company is trying to lead how you bridge the two together. So for example, the IBIT ETF, which has approximately $90 billion of assets, would be a great example where there's a tremendous demand among traditional capital markets investors to have access to these exposures, but to have access to these exposures in the same old way that they could have access to IBM stock, and it shows up on that same brokerage account that they're accustomed to getting. Another example would be going the other direction, where we actually manage one of the largest tokenized money market funds, BIDL, where it provides the ability to have access to a BlackRock money market fund, but to have it as a token that lives in this alternative universe. So when you look at that strategy, we believe very strongly that a lot of what's happening is this, Colleen, you had said the gradual merging of these two worlds, and we've been trying as a strategy to be that bridge to help bring them together in every way possible.
Cara Kennedy, I'm co-head of Connexus. Connexus is JPMorgan's blockchain business unit. So we are in a unique position of sitting within, obviously, a significant bank like JPMorgan, but actively working to develop blockchain-based solutions for our clients. And we do that across assets, payments, and information, predominantly on networks that we operate today. And our focus is really on developing solutions, leveraging tokenization that will solve real-world problems for the bank's clients today, and help to develop those interoperability points between the legacy infrastructure that we clearly use for the vast majority of our business and the new opportunities that is afforded through the use of blockchain technology. So some examples of the products that we offer today, which leverage tokenization capabilities, would be our digital financing product, which is a product that our markets business operates, which enables the tokenization of collateral such as US Treasuries to be deployed in intraday repo transactions, which can be timed down to the minute, allowing repo sellers to much more precisely meet their liquidity requirements without having to have the kind of overnight exposures that would be required in the legacy infrastructure. So we enable tokenization of assets, traditional assets, onto our network. They can then be moved against our digital payment solutions. We operate 24/7, 365 blockchain-based payments infrastructure, enabling clients to leverage that. And then, as you may have seen this year, we also moved beyond into launching a proof of concept on deposit tokens, our JPMD product, which is initially launched on Base, and that really is looking to then meet, what the need that we see next, which is to have a bank-grade digital cash product that can then be leveraged in the public blockchain ecosystem as well.
Thank you. Great. And the way that I've structured these questions, they're really open for everyone. So I don't plan on calling on any of you. So please just jump in. So the first one, when we think about tokenized money, so stablecoins backed by different reserve compositions, tokenized commercial bank deposits issued by banks with varying credit and regulatory profiles, maybe even eventually tokenized treasuries direct, how should we think about fungibility? And do you envision a future where we'll need to build new clearing mechanisms or special markets to price these assets?
I'm happy to jump in on that first. So, I think from our perspective, the products that you listed there, are very different products in and of themselves. And so I think we should recognize that there won't be fungibility between those different types, and maybe there shouldn't be fungibility between those different types. Tokenized deposits and stablecoins share a lot of characteristics, in terms of programmability and peer-to-peer transactions, but they also differ in very significant ways. A tokenized deposit has the quality of a bank deposit, and so largely, if structured correctly, should essentially be treated in the same way, and have the singleness of money that you have with any bank deposit that is held in a traditional form. And so we would see that those would be fungible ultimately, potentially across institutions, but with that stable value of a dollar that you see same as a bank deposit. But that is different than a stable coin. They're structured in a different way, and they are likely to be used in different use cases, perhaps different client segments that will leverage those products, and they will serve a purpose as well. So would expect to see those coexist. And then obviously when we get into more of the tokenized security products, whether that's treasuries or money market fund units or otherwise, again, those are meeting distinct needs, and just as in the traditional environment, should be considered different, distinct product types.
Just going to add a couple. We're just talking about a programming language, right? We have these conferences, and we're talking about it's a programming language, and it does some really cool things that make it better than some of the traditional rails. So that's great. But there's a lot of conversation about what should a stable coin, should they all be $1? Money market funds way back when had one break the buck, and it brought a rain of regulation down that have been really good things that control it, that it's pretty close to staying as $1. Well, why? If you think about what is risk-free, a risk-free investment is a US dollar, right? Everybody's kind of agreed that that's the best, safest investment you can be. Anytime you add, just like in a chain, it's only as strong as its weakest link, you add other risk to it, it shouldn't be considered risk-free, and it will start to float away, of which the market will determine it in many ways, from the dollar. So what types of risk we have? Silicon Valley Bank was not a credit risk. It was a duration risk. So if suddenly you're holding a bunch of dollars and you've taken duration, you've just added a bunch of risk to that. The most recent fraud cases, Tricolor and First Trust or First Brand, or I can't remember whatever it's called, that's an operational risk, right? They resold the same loans that somebody should have checked in and made sure that the loans were tagged in a system. Good news is with blockchain, it actually probably reduces operational risk. So, when we talk about the stable coins, first of all, not all stable coins are made the same as far as what the collateral is behind them. That will determine a lot of what their capability is, depending on whether people apply a discount because they think that in that there's additional risk to it. So.
And if I could, it feels a bit like Jeopardy here, I'm sorry. But if I could just echo, we couldn't agree more. This is just a technology. And I think where people often get confused, and one of the things that we get a lot of pitches at BlackRock from various ecosystem participants, what problem would fungibility actually solve? And is it a problem that's high on anyone's to-do list? And I think sometimes within this space, there's so much excitement that sometimes those steps are skipped. And I think importantly, going back to Jenny's comments about money market funds, there are differences between a bank deposit, a money market fund, cash, which is really a stablecoin in its purest form is meant to be digital cash, and other types of investments, including short duration. So when you look at something like short duration treasuries, if you were in the traditional capital markets, it would never be fungible with cash at a price that's guaranteed. The price moves all the time. And I think that some of these concepts, there's a lot to learn, again, bridging the two universes.
So let's see, I will partially disagree. I think that
Good, that makes a panel much more interesting.
You know, I think that this statement that, hey, this is just a programming language misses what happens when you take a so-called real-world asset and you put it on chain. And there are different ways of doing that. And, you know, if JPMorgan takes a JPMorgan deposit and puts it on chain, the character of that hasn't changed that much. It becomes a more useful instrument, but there's no incremental credit risk that's introduced into the system. Now, if let's say that there's a treasury security that's you know, that matures, I don't know, the next day or something. It's a one-day treasury. And let's say that some, I don't know, intermediary tokenizes that and puts it on chain. Well, that has different credit characteristics than the original treasury. And so that goes beyond just the programming language. There's additional risk that's introduced into the system because of the activity this intermediary took. Now, that's not the only way of getting it on chain. I mean, somebody could deposit that treasury at the DTCC, and DTCC could put it on chain, and I would argue now no incremental intermediary risk has been introduced. And so, you know, the devil's in the details on.
Okay, I'm going to respond. It's still a programming language. It just happens to have the application of the programming that introduces those additional intermediaries. And if you think about what this programming language does really well, it does three things really well. It has one source of truth. Guess what? A huge amount of I know BlackRock, Franklin Templeton, JPMorgan, our operational costs, the number of people we have that reconcile data between systems is huge. Oh, and then we got to do a transaction, go reconcile it with the counterparty. Another expense. This completely eliminates the reconciliation, right? That's just the application of this programming. Like number two, it has the ability to execute smart contracts. We do a foreign exchange contract with somebody in Indonesia. We'd probably go to JPMorgan and say, could you please be our counterparty because we don't know who they are. Guess what? Atomic settlement, we don't need that anymore. Right, so it's just effective at how it executes on something that exists today. And third, it has a payment mechanism. And you can argue on the smart contracts how their value, I mean the stable coins, the value, but it has a payment mechanism. Again, those are the applications of the programming language that create opportunity.
Yes, they create tremendous opportunity. One of the questions that Colleen asked is, you know, should there be some kind of a central mechanism to make sure that all these things are fungible? And my answer is no, absolutely not. These things are different. They have different characteristics, and it's important for the market to recognize that. And you know, there are two different questions. One is, at what price do these things trade? And the other is, what is the appropriate haircut to apply to them if they are used as collateral? Those are two different questions. You could have a bunch of things that all are trading at $1 because, you know, the sun's shining and nothing's breaking. But a clearinghouse, and perhaps with the encouragement of the Fed and other regulators, could could apply different haircuts to them to recognize the different types of risks inherent in these different items.
And Don, I think in what you just said, one very important component, and again, I believe there's a lot to learn from traditional capital markets here. A lot of what people are calling tokens are wrapped in such a way that they're really more like a structured product. And fundamentally, I think we know through many decades that not fully understanding structured products is very dangerous. And I think that to create pure tokenized assets that don't have that structural component to it is going to require a catalyst. It may not be the only way of doing it, but it certainly, in my opinion, would be a catalyst and catalytic towards having some centralized, trusted intermediary who could help be the tokenization agent to take your asset from, I hate the term real world, but from the real world to this alternative universe. I hate the term real world because who wants to take something of value from the real world and put it anywhere else? But at the same time, I think there will have to be utilities that people trust that assist with that, at least in the early days, because these structured products that are being created are ultimately going to become a challenge.
I think I completely agree with the points here about the absolute criticality of the structuring of these tokenized products. And you know, in the applications that we have today, we have embedded the holding of the underlying position within a custodial framework, which clearly ensures that there is beneficial ownership of the underlying asset to whoever's holding the token at any given time. Now, obviously, that works within our applications for our clients when we're looking at this, you know, perhaps on a wider ecosystem basis. Then it is important that we think through who that custodial entity is. And I was interested, Don, that you kind of identified that there is a clear risk difference of having a regulated clearing agency holding that underlying asset and being the tokenization agent versus, you know, another providing that wrapper. And I think that is really important when we think about how the regulatory frameworks evolve, is ensuring that as far as possible, the token product needs to have the same legal rights and entitlements as the holder would have in the underlying traditional position. Obviously, if that's if it's a native issuance, if it's something that is that the issuer is putting on chain, that's much easier to achieve. But if there is an intermediary there, that needs to be in a framework which has the appropriate custodial responsibilities and the oversight to ensure that the holder of that token knows that they have all those legal entitlements that they would have in the underlying product. Otherwise, we definitely will be in a difficult position of having to navigate on a case-by-case basis what the kind of risk profile is and what the the legal terms and entitlements are, which is simply not something that's going to achieve that institutional adoption or scale.
Yeah, so I'm going to ask a question that I don't know the answer to. So Rob, if somebody buys BUIDL on chain, do they have the same rights as somebody who goes directly to BlackRock and invests in your money market funds?
It's structured that there's basically equivalence, yes.
Okay. No, as I said, I didn't know the answer. Yeah, I mean.
But part of the reason why I say is because, and this is where I think it again goes back to like technology and what problems are being solved, in that, fundamentally, at some point, notwithstanding the success of the digital asset universe, people may want cash, or they may want cash at JPMorgan or something like that. And obviously, you need to go off-chain to do that. So you need to convert from a stable. The token is designed to be converted to stable coins. And then the stable coin, again, needs to be converted to dollars. So there's another hop. But in theory, it happens much faster than it would if you were buying a traditional money market fund.
So I'm just going to make one. again, I say it's a programming language, but I love this programming language. I mean, it's very cool. It does some great things. So the Franklin's money market fund is natively, so what it can do, I mean, we literally calculate every second a yield, and we pay it every day in the account, so you actually see it. That's unlike our traditional money market fund, where it was too expensive to do it. You needed $500 to open an account. Our on-chain money market fund, you only need $20 to open an account, and honestly, you're going to be able to trade it 24/7, 365, right? So that is what this is going to bring, and the cost differential, because you don't have all that reconciliation and everything, is dramatic and is important. And so when I say that a hedge fund who can own it for 4 hours, 32 minutes, and 22 seconds gets paid, that's a really cool thing. The question is, to Rob's point, I'm not seeing a bunch of them jumping in and saying we need that, but maybe they do. And more importantly, what happens with technology is the first thing we all imagine is only to be more efficient at what you do today. This is going to enable some really interesting, cool, innovative, and a lot of stuff is happening there. So I don't want to dismiss those things because it will, and there needs to be an element of catch up, but it does some pretty amazing things. And just in our money market, I can see the difference of what this technology brings.
And Jenny, if I could just echo that, I think one thing that this panel may not have done the clearest job on, this is not even like the first inning in our opinion. Maybe it's the first inning. This hasn't started yet. So global equity market cap is $120 trillion, something like that. Yes. Like, if you really think about, this is still so early. So as we're talking about use cases, I would argue that many of the use cases with regard to tokenization today are either pilot-ish kind of projects, or they're production projects that in reality have been engineered to be in production, or they're very limited applications with certain like digital asset companies doing things with their treasury. There are very limited case studies today. This hasn't even started.
And yet Bitcoin has had more transactions in 2024, I think, than Visa and MasterCard combined. So I mean, it's massive.
Yeah.
First, I have the easiest job in the world because you guys just ask each other questions. So this is awesome. And I just get to sit and learn. So Rob, definitely we are early. Part of the reason I wanted to raise these questions, though, is it's also moving very fast. You know, we saw NASDAQ file to have tokenized public equities trade on the platform. They're working with DTC. They think this is going to be ready, Q3 of 26. We see the CFTC has an initiative for tokenized collateral and stablecoin being used as good collateral on DCOs.
Please
DCMs.
do hit the like button and subscribe.
And that's why
We've got
I
a
wanted to
Fed
raise
speech
these
coming
questions.
next.
And then there is nuance within the products. Tokenized public equities, you can have derivatives effectively or issued natively on chain. And I think it's really important that we think about what is good collateral? Like, what do we want coming into our traditional markets? And how do we haircut that? Like, how do we think about those things? And one thing I wondered, given that we're here at the Fed, with the Federal Reserve having joint oversight of our primary clearing agencies, ICE, CME, Options Clearing Corporation, is there a role for the Federal Reserve to play in helping sort out, like, what kind of collateral comes back into our traditional markets?
Yeah, so I think absolutely. I think that this is a great opportunity for the Fed to lead on this, to be a thought leader. And when it comes to just focusing a little bit more on stablecoins, I don't think that it's a question. It should necessarily be a question of a binary question. It should be, what are the criteria for thinking about the haircuts? And I don't think the Fed should be the one determining the haircuts. The clearinghouses should, but the Fed can talk about the principles that should be used to determine the haircuts. And so, I think that those should be, what is the credit quality? And that's both the underlying assets and as well as any intermediary risk introduced in the wrapper. What is the liquidity profile of those underlying instruments? And what is their convertibility or the ability to transform them into cash almost instantaneously? And then what is the transparency? And this is an opportunity for stablecoin issuers and money market funds to compete. Eventually, I envision a world where all of the assets, whether it's a stablecoin issuer or a money market fund, that all of their underlying assets are on chain. And we shouldn't have to wait for the monthly audit to see where the stablecoin reserves are invested. We should be able to see in real time.
He is DRW. I think it's deals with crypto as well.
We see competition towards that transparency. And then, you can look at it and you can say, okay, well, this stablecoin issuer decided to put their reserves primarily in bank deposits. Okay, that's probably less safe than a different stablecoin issuer that has it all in very short-dated treasuries. And there can be a discussion about what the haircut implications are for that. They're probably all going to trade $1, but
we're quite some time away from that. I agree with that. I also think we need to take a step back. I think there's a tremendous role for the Fed to play. I think it has to start with education. So as a starting point, some of us, I know Jenny's definitely in this camp, we spend a tremendous amount of time traveling the world and meeting with asset owners all over the world. And many of them are among the most sophisticated asset owners on the globe in the capital markets. Not only do they not understand a lot of what we're talking about, but to them, it has to actually solve a problem. So if you're going to start having a little bit of the portfolio over here on this sort of alternate universe, but everything else is over here at JPMorgan, that actually doesn't solve a problem, it creates a problem. So there has to be a value proposition, and I think there are still a fair number of people who need to be educated and just some fundamental frictions that need to be resolved to make it easy for asset owners to continue to see their whole portfolio. And I think a lot of times we have these discussions and it becomes very binary between like everything's on chain or everything's not. We're going to have to be building technologies and building an ecosystem that is thinking of a hybrid solution, because that's the realistic outcome for many decades.
Yeah, I think that's a really valid point around the readiness for adoption and what that really means, because I think we've talked about some of the transformational potential of this from an asset perspective, but also that means moving away from daily cycles for funding settlement, or would mean differences in terms of how data is consumed if you want that real-time visibility. And I completely agree with you that is something that from a service provider perspective, there's going to need to be the ability to move at the speed of the client in terms of, for those that want to make more significant changes to their operating models to allow them to really engage with these types of assets, great. But also there's going to be plenty who are only interested in the investment case. They want to access that asset and they don't want any additional complexity or pain, and there's going to be a need to take that away as well. So it's definitely going to take a bit of time to adapt, but if we don't find a way to do both of those things, it's going to be very difficult to kind of jump into that end state.
Yeah, I mean, to the, why would somebody do that? Why is it worth the trouble? I think that it's pretty clear that a lot of traditional markets are going to go to either 24/5 or 24/7. And as soon as that happens, guess what? You need to be able to move collateral 24/5 or 24/7. And so I think whether people want to or not, they're going to find that this is an essential part of how they manage their assets. And I agree, there is a world where that kind of hybrid system is more complicated, And I think the goal is to make it the least more complicated that it needs to be.
Yeah, and I think importantly, just trading 24/7 is more complicated. So it is, what is the optimal way of creating an infrastructure to manage in that world?
Well, that leads me perfectly into the next question in terms of 24/7, 365 trading in the crypto markets. So far we've focused on crypto assets moving into our traditional markets, but I think we also need to spend some time on the reverse. So as traditional assets like public equities and commodities are tokenized and traded and used as collateral in DeFi, what are some of the issues we should be thinking about? So some of the things I think about: fragmentation of liquidity on-chain and off-chain. Are there challenges to using oracles to price tokenized assets accurately? Do we need some form of circuit breakers in DeFi? I'm not sure how we would do that, but it's a question. How do we ensure, and Don, I'll definitely start with you, but how do we ensure that centralized and decentralized exchanges don't shut down and not accept deposits during times of market stress? And should we rethink how auto-deleveraging systems work in DeFi? And the reason I'm going to start with Don is he published a great piece last week called "If DeFi is the Future of TradFi, What Did Friday Teach Us?" And that's
So they're talking about Don. He's from DRW. Someone asked what are DRW. They are a diversified trading firm innovating across both traditional and cutting-edge markets, committed to challenging consensus and continuous innovation enable us to be a transformative force in global markets. That's Don's quote there. So that's who Don is. Here we go.
Some of the failures that we saw in the market, that I decided to send out my first ever thread on X. So I don't know, maybe it will all go downhill from here, but and so some of the points that I made, I highlighted some things that happened on October 10th that I think that a lot of people in traditional finance aren't aware of, that these things happen. And you know, when you go to 24/7 trading, then you need to go to real-time collateral management, and it brings all sorts of challenges with it. And you know, that the time that this kind of flash crash happened was a late Friday afternoon Central Time. Probably one of the most illiquid points of the day, and also a time when a lot of people's systems are kind of, you know, take a break. And so some of the things that we saw were oracles became unreliable. So, you know, an oracle is the mechanism that's used to record the price that you're using to measure whether somebody has sufficient collateral or not. Obviously, that's a really critical thing. And so, you know, I think it highlighted the importance of having really robust oracles. You know, I think that oracles should be properly regulated. The other thing that happened was, you know, some of the crypto platforms actually provided liquidity for the liquidations themselves. And this is kind of one of these practices that I think is just a horrible practice, where you know, an exchange has their own market maker on it. You know, it just creates all sorts of conflict.
He's a very clever person. He's telling you exactly why the markets crashed on Friday, a couple of Fridays ago.
Conflicts of interest, definitely not best practice, but especially then when that liquidity provider is actually the, you know, kind of steps in to take the final bit of the liquidated order. And you can see it on chain on some of the platforms where, you know, the first clip of liquidation was sold into the order book, the next clip was sold into the order book, and the final clip was internalized and then sold back into the market half an hour later for a big profit. And you couple that with the observation that some of the wallets were closed. In other words, people were unable to top up their wallets, presumably because there was so much activity. But you kind of ask the question of like, well, did that benefit the exchange or did that benefit the platform? Did they make more money in the liquidation because people weren't able to top up their collateral? And all of a sudden it just doesn't look good. I'm not at all suggesting that that's the case, but it just highlights the problems with these conflicts of interest. And so that is definitely not what we want to replicate. And that was kind of the point that I was making.
Look, the things that happened on that day are things that have happened in traditional finance in history. And it just takes time for the system. Like Binance's pricing system worked until it didn't work because they had one source of pricing and it was, probably one that anybody who really looked at it would have said, that's probably not going to work.
They've even named it Binance.
These things happen, right? This stuff will all evolve as they get identified. In traditional asset management, everybody talks about private markets and the growth of private markets, and we need to democratize them. And blockchain is going to be the great way as we tokenize private markets. And I always say, this potential exists today, but you don't get liquidity unless you have market makers who exist there to create liquidity, which means you have to have an inventory, which means you have to have a system that's in place. All these things evolve. I think it will inevitably, we will go to 24/7. By the way, if you have a Schwab account, you can trade 24/7. And I think less than 4% of their trades actually happen after hours. So it can happen. This is definitely going to be a more efficient way to do it. It's going to be cheaper to do it. And you need to have the arbitrage between markets. I think Franklin stock is, New York Stock Exchange and the London Stock Exchange. Guess what? There's people who arbitrage pricing so that you ensure that it stays very narrow. And that infrastructure, the maturity of it, hasn't been built today yet. I mean, it's happening. And as it happens, I genuinely believe it ultimately replaces the current rails in the system. It takes a little time to do it. But we also shouldn't forget that there are a lot of big companies that are toll takers on the current system and are actually incented for this not to happen very quickly. And so that's going to slow it down too. But again, I think the capabilities and the evolution of the market, these kind of days that happen, wake people up to issues that you then go and fix.
But it's interesting because, and maybe this goes back to the point earlier, the question earlier about the role of the Fed. I think importantly, if you had this kind of issue in the public markets and it was about some arbitrage or some,
But you have had
it leads to someone looking at it and actually knowing that tomorrow will be better than yesterday in terms of having supervision of infrastructure, certain standards, market quality, just a variety of things that I think for the capital markets to have widespread adoption here, we have a gap between where we are today and where it ultimately needs to be.
Yeah, the challenge is this infrastructure is going to make it a heck of a lot easier to move money across boundaries. And there's no global regulation around it, so you're still going to have this mismatch that honestly you have a little bit today. But a lot of people follow the Fed, so you end up in big developed markets having a little bit more standardization.
Right, but even something, Jenny, going back to your point about whatever exchange, importantly, if you think about the number of people who must do reviews of just the basic technology governance of the New York Stock Exchange, I don't know what the number is, but I'm assuming there's a lot of people who do a variety of like technical due diligence on them as part of their regulatory regime. There are certain basic things you could do if you want to transact here.
Agreed, but again, I mentioned the two frauds that we see. I mean, I used to do securitizations, and like I'm still trying to figure out how you sell the same loans. Like somebody's got to go in and change the system. Usually you tag them, so it happens even in traditional. Yes. I think it's harder. I think it will be harder to do with this technology going forward. I think that's the good news about this technology, but the development in the infrastructure doesn't quite exist.
I think I completely agree with you, Jenny, that this will this will evolve, right? And the events of Friday was really, that is something that is going to focus.
Thank
a
you
lot
so
of
much,
minds,
David Hensley.
both in the
$5
crypto
super chat.
space, but
Thank
it
you.
is also going to be an education for any risk managers within any of the institutions that are looking to get into this. There'll be a lot of a lens on that. I think, Colleen, you asked the question about, thinking about that in the context of potentially, public equities and securities going into this environment. And I think that is really the key takeaway for me is to think about how careful we have to be about deploying, securities into these sorts of ecosystems where perhaps those risks are not fully understood or assessed at this point. And so ensuring we have the appropriate guardrails in place, ensuring that, if there are actors who are operating, whether that's, kind of activity that would otherwise be regulated in the traditional world as broker-dealer activity or exchange activity, that there is, that they are required to meet the same standards and regulations as exists in the traditional space, because it's, the capital markets and protecting, investors and confidence is paramount. And we know enough from the experiences of the traditional world that, we don't need to make those mistakes in terms of the experimenting in this space. We need to make sure we go in with the right approach from the start.
So I just saw the unfortunate news that we're down to like 13 minutes. I was worried we didn't, that we had not enough questions and we're only through 3 of them. But let me switch to audience questions really quick. So Representative Foster from Illinois, great, 2 Chicago people here. It seems that most of the new initiatives we've heard about today use permission distributed ledgers. And Representative Foster is asking if that's a trend.
Yeah, so the Canton Ledger has, I guess, configurable permissioning, if you will. It has configurable privacy and also configurable permissioning. And so that's a nice hybrid environment that enables regulated entities to configure whatever levels of permissioning they need to operate in a regulatorily compliant manner. So we think that that's kind of the best of both worlds. Yeah.
I was just going to say, look, I had this debate with somebody who today in the room is doing something on the permissionless side. And I said, look, we're a regulated entity across the globe. Our tokenized money market funds better not end up in a wallet that isn't been approved on the whitelist and is AML KYC'd. We're going to be in trouble. So I don't know how you do that without, having a certain, whether it's programmed in the token to ensure that the wallet's clean. I just think that that's a reality.
Yeah, I was going to say the same thing. It's a reality of operating in the regulated space. It's something that there's different tools obviously for permissioning. I think there's been an evolution perhaps from private permission chains to looking at how you can enact permissioned environments within the public domain. But the AML KYC requirements that we're rightly subject to, that's a non-negotiable, particularly for institutional players. And so having the ability to control that either through whitelists or hopefully in time through more, perhaps more on-chain technology solutions enabling that, I think that is going to be, it's a critical part of how we operate our businesses today.
And not only like there's no disagreement, but I would almost take a step further. This is a luxurious point in time in that, going back to the initial point of this as a technology and this being nascent in the relative scheme of things, it's a unique time where you could build with no legacy in a way that should have a more rigorous AML KYC framework, because it's not about having people take a picture of their driver's license and fax it to you. So I think so much of the narrative is on what could go wrong, as opposed to the principles of how do you build something new that is actually both more efficient and more controlled for the most important elements relative to what we have today.
Did you say facts and crypto in the same conference? Wow.
Well, because we're running out of time, I do want to talk about what can go right. So I would love to hear where each of you think the tokenization space in particular will be over the next 5 years. Jenny?
You know, technology adoption is always slower. What's the saying? It's much slower. What is it? Yeah, but it's like, you know, the first 2 years, I can't really give a term, you know, it's much, much slower, and then it just takes off, and you can't imagine 10 years. That's what's going to happen here. Like, this is going to be one, first of all, going to these digital asset or crypto conference, I am stunned by the number of people who attend, the enthusiasm and the creativity that happens in these places. And I am also stunned to go in on the traditional side and how much they ignore it and say, another crypto winter, not gonna happen again. We don't need to pay attention to it. And at some point, you know, this, whether you call it a bridge or whatever, you have these pools of projects that are going on. You know, central banks have been working for a couple years in Asia and Europe on kind of being able to move their currencies on blockchain. And what's going to happen is these things are going to start to connect over time, and people are going to turn around and say, how did that happen so fast? And anybody who's been living in the ecosystem is going to say, are you kidding me? It's taken so much time. So, you know, is it 5 years that we see the hockey stick? I think so. I can tell you that I have more conversations about this where people are now inbound asking about it as opposed to us saying, and by the way, I want to mention one other thing.
Completely disappear and be taken over by the.
Sorry, I'm back. That wasn't you, that was me. The stream just paused for a second, but we're back. Thank you, DP, for the $20 super chat. That's incredible. Thank you so much.
Then I was, you know, on the trading floor at the Merck, and I said, you know, if this place is not completely electronic by the year 2000, they're going to be out of business. And I was so wrong. Of course, eventually they became electronic. So I was right in the long term. Just my timing was wrong. So with that preface, you know, my expectation is in 5 years from now that every instrument that is traded frequently will be traded on-chain. That is my prediction.
And I'll take it a step further. I think that a lot of this stuff is not an if, it's a when. It's hard to predict if it's 2030 or 2032 or 2027. But I think it's quite clear that if there are $4.5 trillion in digital wallets today, that number is going up, not down, and that wealth accumulation is going to have the ability to create the whole portfolio in that digital wallet. They'll have access to traditional capital markets instruments like stocks and bonds, and they'll have access to funds that companies like Franklin and BlackRock create. They'll have access to ETFs. They'll have access to model portfolios that will be on chain, hit a button, automatically happens and automatically rebalances. I believe these things are a question of when, not if. Someone had asked me the question, I wish I knew how to answer it. They said, with all of the wealth that's being created in AI, when you look, a lot of the fundraising that's been happening, a lot of it's been primary capital, but a lot of it's provided liquidity to employees. And they said, what % of that liquidity do you think is going into a Schwab account relative to going into a wallet? And I don't know what the answer is, but I think we all know some material component of that wealth creation is going into wallets. So it's just going to grow and grow and grow. And this will be another way for the capital markets to grow also.
Yeah, I think getting the timing estimates right here is always going to be very difficult. But I think, you know, just look at how far we've come in a year. You know, we're in a very different position now, and I think we'll continue to see that acceleration, particularly in the regulatory environment. You know, to some extent that was already advanced globally, and then obviously that has moved at pace in the US this year. I think next year we'll see significant advancement in terms of commercial bank money on chain. So, you know, the cash side has really matured and will continue to do so, and see that as a significant area, you know, in the shorter term. And then I think we will take the next step in that evolution towards some of the things we've talked about today in terms of structuring around more of the securities and assets side, which will build, you know, so in 5 years, I think we'll have much clearer building blocks for sure that can then start.
There's
to
a new
develop
poll
some
in the
of those,
chat.
you know, model portfolios and the kind of programmable investment vehicles, which is really where it starts to get very interesting.
Great. Ria, should we wrap up, or do we have 4 minutes? Okay, great. So final question, and we've touched on this a little bit, but given that we're here at the Federal Reserve, you know, what do you think the Federal Reserve could be doing to help tokenization grow? I'll close with that.
Yeah, I mean, one thing I think the Federal Reserve could do is take the lead in putting together a cross-agency task force to help. I mean, because obviously this cuts across CFTC, SEC, OCC, to help think about tokenized collateral and best practices, et cetera. I think that would go a long way.
Transparency and clarity of regulatory environment is always what's so important for the market, right? You know, people want to understand what the rules are of the road, and then they can build within that. And to the extent that and consistency across regulatory agencies, to the extent that there isn't clarity around that, that makes people fear innovation.
I think just to add to that, probably the kind of level playing field piece is important. So thinking about ensuring that we have the ability for regulated institutions and non-regulated institutions to participate on the same terms is critical.
And I would just echo that. I think that having more participation and more, I would say, embraced participation of highly regulated organizations, particularly banks, is going to be a dramatic catalyst towards unlocking innovation here. And I think the more that they're constrained or sort of on the sidelines, the harder it is for this to really get scale.
Yeah, I'll mention 2 more things. One is, you know, thinking about you know, longer
Beyond me up
real-time growth
600% in 3 days.
And, you know, intraday liquidity for on-chain settlements, just kind of, you know, rules around that. And the other thing is, you know, there are now rules that at some point in time in the future, repo is required to be cleared. And I think those rules were written in a time before
Fed speech starting in a second.
Activity was really taken seriously. And so I think it's important for the regulators to go back, take a look at those things, and make sure that they're not doing anything to actually hamper on-chain repo transactions.
Great. And with that, I'd like to thank Kara, Rob, Don, and Jenny. Really, really appreciate your time. Thank you.
Thank you.
Guys, getting ready for the final speech, then Netflix earnings. Please hit the like button, subscribe if you haven't done so already.
We clearly have had a very engaging day on payments innovation. That's a big thanks to Rebecca, Kyle, Matt, and Colleen for leading our panels and for all of our panelists. I also want to say I have been super impressed by all of the energy in the room during our networking and the lunch. And that's a big thanks to everyone who came out to DC. So a big thanks to you for coming and being so actively engaged with us today. And I also hope everyone online enjoyed the event as well. And with that, I'm going to turn.
I think our audience was much better than the Fed audience there. So thank you to each and every one of you for being here for today's events. We are wrapping this up with Fed Waller and then the Netflix earnings. Fed representative speaking now ahead of the FOMC next week.
Well, thank you, Susan. And let me begin to end things by thanking all the panelists and also those of you in the audience who engaged with some great discussion. I'm always struck by the fact, I've said this to a few people over the last day or so, every time I think I have an understanding of what's going on, I go to these things and I realize how little I know. So I have to keep going, so I keep learning and learning and learning. So sitting in the audience today reminds me of how important it is to listen and learn from innovators on the ground, both newer entrants and incumbents alike. Today allowed us not only to focus on what is happening in the payment system, but also envision where it might go next, as we were talking a bit at the end. I jotted down some notes about what I've heard today, and I'll wrap things up by highlighting some of the really interesting points made and ask a few questions. It's clear from our discussions that innovation in payments is coming in many forms. What I heard from our panelists from discussions during the breaks is that the industry is moving as quickly as possible on a number of fronts, from finding ways to interoperate across and between traditional and new ecosystems, to reimagining the consumer purchase experience through the use of AI and AI agentic agents. All of this points to a future where payments move more rapidly, securely, and seamlessly across networks, both domestic and global. I also heard from many panelists about the growing importance of tokenized money in unlocking the next phase of payments innovation. We heard from a variety of panelists about evolving roles that could be played by stablecoins and commercial bank deposit tokens, and the potential efficiency and inclusivity gains these forms of tokenized dollars might deliver. And we ultimately heard a lot of discussion about very classic economics of payments issue. That's at the deep depth of my heart. Beyond technology, what stood out today was a spirit of collaboration across the ecosystem. I've noticed this over the last couple of years. Instead of, dude, we're going to take your job and drive you out of business, which was kind of the crypto world about 6, 7, 8 years ago, it's all like, how do we work together? I mean, this is a profound cultural change in the way people think about these things. We heard bankers and developers speaking the same language about openness, interoperability, and the need for shared standards. And we may have even coined a new term in scaled-fi. Things are changing fast in the world of payments, and it will be interesting to see a year from now how much has changed, or perhaps become more defined about the innovations we discussed today. It remains to be seen just how quickly some of the innovations being discussed now will be widely used or leveraged in the marketplace in the coming years. Now, how quickly might we reach that point, as discussed today, in which most consumers interact with tokenized money in their daily lives, unaware of the new technologies at play? I mean, that was kind of a theme. Consumers don't care about the technology underlying things. They just want to know, can I use my money to pay for something? Am I going to get money from somebody? They don't care how it gets done. We care about how it gets done, right? We do, to make sure it's done efficiently, cheaply, and safely for those consumers. What will the blockchain infrastructure rails look like, and how many different stablecoins might circulate on these rails? I mean, I think this is a big question. There's a lot of talk about lots of stablecoins, but at the end of the day, consumers have to choose which of these things they want to use. It may be very widespread. There may be just a handful that actually are used, and the rest are just a tail. That's what we're going to find out by letting it loose and seeing what the consumers want to do. And which future innovations that are unforeseen today will challenge our assumptions on understanding what is possible in payments in the future. So thank you all for making this conference such an informative and enriching experience for me, and I believe all my colleagues here at the board. Thank you to those watching online, and a big thank you to the Fed staff who did such a spectacular job pulling this event together in a very short period of time. And with that, thank you and goodbye.
There it is. What an event. Payments Innovation Conference by who? None other than the Federal Reserve. We got the Federal Reserve talking about crypto. We got the Federal Reserve talking about tokenization, stablecoins, payments, everything like that. Absolutely incredible. This is why I am more and more bullish on crypto every single day. You have to look past the noise and look at what the money's doing. And we saw some very, very big institutions today speaking on that stage. This doesn't stop. We're going to continue. We've got Netflix earnings tonight. We're going to look at what's it called, Beyond BYND, Beyond Meat up 150% again today. But tomorrow we might be doing this all over again because something interesting coming in from Eleanor Terrett. I hope this is going to be live streamed. I think it will be. We'll find it for you and show it to you. Get ready for this. This is Ripple's actually going to be part of this. This is the next event. It's a crypto. These crypto C-suites are expected to attend a roundtable with pro-crypto Senate Democrats on Wednesday to discuss market structure legislation and the path forward. We might be seeing CEO Brian Armstrong, Chainlink CEO, Galaxy CEO, Kraken CEO, Uniswap CEO, Solana Policy Institute President, Circle CSO, Ripple Chief Legal Officer, Stuart Aldergrati. We might see him tomorrow. Jito Cielo. So I do expect this to be live streamed somewhere. So I'll bring this to you. So that's going to be tomorrow. Also tomorrow we're going to have CPI from the UK. So keep an eye out for that. It'll be very early, 7 a.m. UK time. So we'll analyze that later. That will give us an idea of Friday because Friday is massive as well. Why is Friday massive? Do I have it here? Well, Friday is... where is Friday? Yeah, we get US CPI. Remember, we are in a shutdown. We're not expecting any data, but what they've done is they've found some funding together because they need the data. So this is the only data we've got in the month of October. The only data that the Fed, any new data the Fed's going to go off ahead of their FOMC meeting next week. So what we've got is CPI. We're going to cover it live on the show, full analysis, pre-analysis, after analysis, going into the FOMC meeting next week. So make sure you are subscribed, notification bell is on. There's a lot going on the next few days as well. So this has been how long have we been live? 8 hours. Over 8 hours and 7 minutes we've been live. So this will be wrapping up in a second. We'll be going over to Vaz. He'll be covering the Netflix earnings. So make sure you pop over there and say hi to Vaz because he'll be covering it. We've got a few minutes. If anyone wants a chart request, you can do a $5 super chat. If anyone wants an earnings request, it's earnings season now. So if you look at the earnings board, you can put your requests in. Someone requested Netflix, we're doing Netflix. Tomorrow is Tesla. Surely there is a Tesla investor. Remember, earnings are so important. You understand a lot when you listen to earnings. You understand your investment. It's not just random things you hear on X. If you're investing in Tesla, you can do you're basically investing by doing a $10 super chat because you'll hear everything they say on the earnings call, and we'll do analysis around it. So Tesla is after hours tomorrow. If anyone wants it, you can do a $10 super chat. Next week is big as well. Have a look at this. This is Thursday pre-market. Any of these logos stand out to you? After close on Thursday, Friday pre-market. Then going into next week, it's going to be quite a big week. Monday pre-market, Tuesday pre-market, Tuesday after close, Wednesday after close, Meta, Microsoft, Google, eBay, Canva. You've got pre-market on Wednesday, Cat, BA, Etsy. Thursday pre-market, Lily, MasterCard, Roblox, Shell. After close on Thursday, Coinbase, Apple, Amazon, MicroStrategy, so many. Before open on Friday, Chevron, all of these. So yeah, start getting your request in if you do want that. That is something we provide. Any room for... Oh, okay, Donna, you said any room for Orly earnings tomorrow. Orly earnings? When is it after Orly earnings? Oh, I think we could do it. We can do it. We can do both. We can do Tesla and Orly. So if someone still wants to request for Tesla, we can do that as well. Or because me and Vaz can do it. So Orly, Donna. Let me just write that down. Orly. Depends if we've got the round table at the same time, but I'm sure we can. Orly. Donna. Donda. If we do, if someone requests Tesla, I think Vaz really wants to cover Tesla. So if anyone does that, we'll get Tesla as well. Okay, so also, if you are watching, a great way to show your support for the stream we've done today. We've done 8 hours. remember, 99% of the funding comes from you guys and your super chats and your membership. So if there is, the best way to support the show and a fun way of doing it is doing a membership gift. If you want to gift some memberships, gift one membership. If everyone just gives one membership, that'll support the show and someone else that can join the family. That will be great as well. Let me go over to BN. Before we go over to Vaz will be ready to go live in a few minutes, I think. Let me just check over here. Yeah, Vaz will be ready to go in a few minutes. So, Beyond Me, absolutely crazy. It is up. Look at this. Today alone, it is up 145%. We were watching this earlier because yesterday it was up 127%, and that gapped up. So what we've got going on here is in the last 2 days, Beyond Meat is up 500%. Look, we gave the analysis earlier. Once it gets up to sort of $3, that's the first main level, then potentially $5. But yeah, BYND, the trade is sort of done. You're probably going to continue with this downtrend. You were very much oversold. There was a massive short squeeze, of course. You can go up a bit higher, but I mean, most of the money's been made. I wouldn't be FOMOing into it at this point. Again, not financial advice, but yeah, I mean, $5 maybe your last zone. I wouldn't be FOMOing into this. The risk reward isn't amazing now, and I don't know much about the fundamentals. Someone's just to become a member. Thank you so much for becoming a member, MGMN. Remember, you can become a member here. Our newest membership is Electrum. You get the trivia nights. I think I saw Saab in the chat. Saab, I messaged you about this because I thought this would be right up your street. We're doing trivia, and I also messaged MSK, so I thought it would be quite fun. If you guys haven't seen the new membership, it's called Electrum. Electrum is a membership where on Sundays we get together and we do the trivia nights. So we will go live. You guys can call in. You can do the trivia. The winners get prizes, and the run-ups gets chart requests. But the fun part is it's trivia, but not just random trivia. It's about the market. It's about understanding. It's about learning. There is some questions here and there about the show and maybe general knowledge as well, but mostly about markets, what's happened in the week, stuff about XRP, Ripple, leverage, anything to help educate you. That's the Electrum membership on a Sunday, and of course it's a smaller group so we can answer your questions. So anyone who's already a member or wants to upgrade, you can, or a new member, look out for the Electrum membership as well. During the speech, mate, it's definitely a green screen. I don't know what's going on. Daniel says, thank you, Sensei. Have a good rest of the day. It was a long day. Thanks for the marathon stream. No worries. We're going over to Vaz now anyway. So Vaz is live. Is he ready to go? Yes, Vaz is ready to go. Okay, so we're going straight over to Vaz. Vaz, this will take you directly to Vaz's show if you stay exactly where you are. It's the Netflix earnings. He's also going to be covering the closing bell. The bell's going in 15 minutes. He'll be covering the closing bell. So here is the link to the next event. So let me put next. Let me put this into the chat. Okay, so this is it's when it says at the top Fed event 11:01 if you want to see it. I don't know what's going on. Okay. Oh, it's the ladybird. Yeah, the ladybirds. They're infesting my room. They come here for hibernation. Okay, let me pin this. So we're going over to Vaz now. Netflix earnings, closing bell. Thank you everyone for tuning in. We'll be live again tomorrow at the same time. Probably not as long as this stream. But yeah, next tomorrow there's a big event as well. So Ripple will be talking as well. So we've also got if you haven't signed up to the newsletter, there is a link. I'll close that poll as well. Most of you said you are a free member. Let me close that. And some of you said where's the link. So I'll end the poll. Do you subscribe to the newsletter? Yes. Free member is 46% of you. Thank you all for subscribing, whether you're a free member, and especially to the premium members. Thank you very much. No, where's the link? 40%. So here's the link to the newsletter. Do subscribe every single morning. It comes to you, even if you're a free member. Annual members, thank you so much. Monthly members, thank you so much. You are the ones that keep us running. Can you look at more? Okay, let's do it very quickly. Very, very quickly. Let's do it. Bob. and then we're going over to Vaz. We were just about to end the show, so I'll do it very quickly. More mobile com. There we go. Okay. Go to a 3-day time frame. Okay, so you're in a parabolic run up, but now you're selling off. Yeah, the parabolic run is probably ended. What you're looking for now is levels to buy back in. I'll be looking at $5 as support. Closer term support is probably $6.69, $6.69. There it is. What else do you have? Yeah, low to high. Where is your Fibonacci taking you? I wouldn't really be chasing this. The parabolic, when the parabolic runs over, normally come down and try and find support. So where's that support? Well, it can be maybe at where you are now, $7.33. Yeah, I mean, does it really matter? Yeah, so 6.18, 7. If you really want to get in as quick as possible, 7.33 could be a level, but I'll be waiting for 6.67 and then $5. Apart from that, you are in a parabolic trend. That trend's ended, so you're probably going to go down to one of these supports, find a support, and then run up again. But what you want to look for is a higher low. So keeping that higher low structure, but that parabolic structure has basically ended. So it could be a bounce, double top, and then consolidate before you move higher. The risk to reward on this is not looking amazing. If you really like the company and you want to get in, then again, I'll be waiting for around $7 and then also $5. Those will be my buying prices. Nothing bearish about the company. I think we're back. I apologize. We've been running too long. My software can't keep up. So yeah, that was the analysis on Mob. I think you heard all that. Good luck with regards to CPI data. Yes, we'll be covering. Okay, all over to Vaz now. All over to Vaz. Vaz is live now with the Netflix earnings and the closing bell. You can continue the chat there and do check out Netflix because Netflix is normally quite volatile. Yeah, there we go. If there was any extra questions about Mob chart, do let me know in my next stream, DP, and we can hopefully have a look at it. Thanks for that quick chart on BYND. No worries. Okay, thank you everyone for tuning in. Vaz is now live. The link is in the live chat. Go and check it out. If you stay where you are, it will take you automatically there. Until next time, take care of yourselves and each other. Bye-bye.